Nobody gives you that kind of flexibility as what typically consumer AI applications have there, right? So here the way we look at AI is in terms of two angles. How do you cold start? So given large swaths of data, like today we deal with terabytes and of logs per day. So given this kind of data sets, how do you kind of bootstrap yourself? It's called a cold start in the AI stuff. So how do you look for dynamic baselines? How do you look for past patterns kind of stuff? Then you augment it by more of domain centricity. That's why we talked about the metadata enrichments or the operators having a domain knowledge in terms of whether the threshold is making sense or not. So it's a combination of bootstrapping yourself with some domain driven understanding of what's going on there. And third is your feedback loops. Somebody has to tell you after that, after you do the cold start, in terms of is it making sense to my system or not, is this alert useful or not kind of stuff. So it has to be a combination of all these things coming together in terms of a usable, sustainable AI into your systems there. And finally, the end outcomes has to be more actionable. So it has to be in terms of insights or notifications or recommendations for your systems, kind of stuff there. So, and these kind of, whatever we talked about, the 5 pillars are kind of established in these block diagrams here. So these are just quick representative snapshots of the end outcomes. For example, what you see here is an end-to-end view of a transaction. So what we do as a transaction from the mobile in the context of an entity, it could be a bank or a fintech or a payment gateway, moves through multiple touch points there. So it enters your API gateway, it moves through multiple components, it goes through your middleware systems, your enterprise service buses or your main UPI switch. There is a call maybe to NPCI and back, and a call to the core banking system for your debit credit, and then possibly merchant callbacks there. Right, so it has, as you can see, the kind of complexity here. This is just for one entity, and we talked about this into a number of entities as well there. So just within one entity, you can see around 7-8 touch points a single transaction has to touch there, and we have not even included things like your fraud management check and other things which also happen as part of your systems there. So you, at a minimum, you have around 6-7 touch points it has to touch. A lot of them API calls, a lot of them goes through infrastructure, like your firewall, load balancers, cloud infrastructure kind of stuff. And then you multiply this by the scale. So you're talking about 20-30 million transactions a day. So it becomes a humongous task to understand what's going on in systems. How do you know things are going wrong? How do you diagnose this faster? How do you predict incidents? How do you guarantee measurability to your customers there, right? So this is the kind of context that you're talking about. So what you see here is a unified visibility map. It's almost like a Google map for your transactions, so that you have a visual layout of what's going on. So what is going bad, what's going red, which systems are causing bottlenecks, kind of stuff. These could be other representative viewpoints. For example, how do you slice and dice? Again, these all come from the context that we talked about, the business and observability platform. The moment you add context into those systems there, you can slice and dice in different ways. So how do I know which merchants are coming to me the most, which merchants failure rates are happening the most? You can also create a lot of ML models on top. For example, what you see there is a customer satisfaction index. So it's an ML model created using your payment turnaround times or your failure rates and the psychology of user experience. So it allows you to play around with more of the data sets, much more amenable for your enterprise there. You can also have much more intelligent insights. We call them insight cards. So for example, when you have failure rates, how do you know which system deep in your touch point is causing those issues? How do you build better recommender systems for your root cause analysis? How do you even get into prediction, forecasting? Again, because you have large swarms of data here, you can also have your ML models running on larger volumes of data with the feedback loops, which can give you much more recommendation and insights or actionable outcomes coming as part of it there. So we touched upon, or in some sense, when we talked about the business and observability platform, we touched upon it, or we just scratched the surface of it. And today it's hardly even solved 10 to 15% of what we are talking about here, and it has a lot more to go in the future. So the way we see this evolving over a period of time is the business and observability platform will start yielding more actionable outcomes, the insights. Then it will start driving automation in your systems. That's why we talk about self-healing and other parts of it. How do you make sure that apart from knowing what is wrong, how do I fix it fast? Then how does it lend itself to measurability? How do I guarantee uptimes to my customers there? So that's the linear way of looking at this stuff. That's the typical thing. Second part where we see it kind of evolving is because the fact that the systems are again highly contextual and top-down driven use cases, how does it drive other use cases on the ground? So how does it augment your business analytics? How does it augment your fraud? How does it augment your compliance? So typically every transaction will have 4 or 5 components to it. There is a business component of a transaction, there is a risk, there is an operational, there is a compliance component of a transaction. So here the business observability platform, we here talk about the operation part of it, but the way this is going to evolve is going to touch all other aspects of your systems as well, augmenting your business, your security, your fraud, your risk, compliance kind of stuff as well there, and that's the way we see this, and that is what is going into the roadmap as well there. So just to quickly summarize and give a context, so we have designed and developed and deployed these kind of systems at scale in a lot of enterprises, including at NPCI as well. Our system monitors more than 8 billion transactions a month today, and we are also listed in multiple Gartner reports as well, but we kind of gave a summary of what we do today across there. Right? Would be happy to take any questions or even chat on the sidelines as well. Thank you.
Questions? Any questions, gentlemen? You want to ask anything? I think everybody got the presentation totally. Anyways, thank you very much, sir. Thank you very much for the presentation. And we'll be moving on to the next presentation in a short while. As he's still okay, sir is very much here. Don't miss out to that opportunity. If you want to ask question, you can ask. Huh? All right. I am thinking of a word called morning blues. Everybody. Thank you for being here. We'll start our next masterclass in a while. So yes, just maybe 5 minutes. So I'd like to tell you that our next masterclass is another important masterclass, which is about the product. It's a product masterclass. And it's Reboot to Rebound, the new 8 credit products for MSMEs. So you all know that MSMEs are the backbone of Indian economies, and now our presenters will tell you about the new products. It's very important for all of us to hear this one. We'll be having 2 presenters. So everybody stay back. We are just starting our next masterclass. And to everybody, I'd like to tell you, there are a lot of people who are watching us virtually. So we have thousands of people in here. So we might not have a lot of live audience, but we do have thousands of people watching us from their offices because, you know, these are the weekdays. So most of them couldn't come to, you know, the live event, so they're watching us virtually.
I've got a lot of messages from my office. So I'm from NPCI. I've got a lot of messages that all of them are glued to the television which we have in our office. And yeah, and office, friends and families, a lot of people are watching it virtually. So, yeah.
Because yesterday even I've got like friends of mine who were watching me virtually, like talking and introducing these speakers. They sent me the screenshots. They were like, oh, we're seeing you. I'm like, wow, I'm popular now. Anyways, I think we're good to start. Yeah? Yes, yes. Hello, good morning. How are you? All right, everybody, welcome to the day 2 of Global Fintech Fest. We are done with our first presentation. This is the second one. And this is another important presentation as we'll be getting to know about some new age credit products for MSMEs. As you know, MSMEs are the backbone of Indian economy. So before I go ahead, I'd like to take the name of our sponsors, which is very, very important. So everybody, our theme partner is WhatsApp, and our event is co-powered by Amazon Pay. Our spend management partner is Encash, and we are in association with Perfios, payments partner, Cash-Free Payments, and CEO's dinner partner, HSBC. So special thanks to all of them. And now it's time for us to kickstart the masterclass. So everybody, this is the product masterclass, which is about reboot to rebound. New age credit products for MSMEs. And we have 2 speakers here who will be joining us on the stage. So everybody, let's welcome our speakers on stage. The first one is the in-charge credit card National Payments Corporation of India, Mr. Abhishek Sorankar. And joining him along, let us also welcome the lead RuPay Product Development NPCI, Mr. Ashish Gupta. Welcome both of you. Now I'd give it over to you. Thank you.
Thank you very much. And a very warm welcome to the audience sitting here, audience watching us virtually. I'll say this is one of the biggest FinTech Fest I have attended. And the topic for the discussion what we have today in the masterclass is new age credit products for MSME. As it is known, MSMEs are the growth engine for Indian economy. You know, if I summarize MSME, the sheer size of MSMEs in one slide, so there are around 64 million MSMEs across the country. You know, and it is creating 11.10 jobs. So every 1 out of 8 employable youth in this country is employed in MSME. So how strong, how big MSME is? It is 50% of Indian export is by MSMEs. And you know, the big pie, the big apple, 30% of total contribution in GDP is by MSMEs. So it is very clear that MSME, the journey of reaching 5 trillion economy for Indian economy, MSME is the growth engine. MSME will give boost to our economy. So let me define how MSMEs are. There are typically 3 kind of MSMEs. One is small, micro and medium. If I talk about the turnover, so up to 5 crore is micro, up to 50 crore is small, and up to 250 crore is medium enterprises. But you know, the most interesting part is, out of the entire pie of MSMEs, micro contributes to around 99.47%. The majority of are in nano and mini sector. So whatever solution we are making, whatever solution is created by the ecosystem should cater to micro MSMEs. Now, next slide. If I divide these MSMEs into 3 parts in terms of activities, so around 34% are in manufacturing, around 36% are in trade activities, and rest are in other services. And you know, this is also a very important pie. Majority of Indians, we stay in rural areas. So if we want this country to develop, we have to bring the development to the rural part of India. For 51% of MSMEs are in rural India, creating a lot of employment, creating infrastructure in our villages. And another very important point, out of the entire MSME universe, 96% of MSMEs are proprietorship concerned. So whatever solution, again, the stakeholders are making, whatever solution fintechs are making, whatever solution banks are making, and whatever we at NPCI are doing, we have to find a solution for proprietorship. Now this unmet credit demand. So you know, just like fuel is very important for your car, just like electricity is very important to run any of your appliances in your home, similarly credit is very important for MSME. And presently there are there are 45 lakh crore credit is required for this particular sector. And if I divide into 2 parts, formal credit is around 55%, which is around 25 lakh crore, and informal credit is 45%, which is again 20 lakh crore. But there is a catch. If you see the formal credit, business loan only contributes to 15 lakh crore, and the rest is personal loan, which is around 10 lakh crore. And in informal sector, so basically what informal credit is, when a MSME takes loan from friends or maybe from money lenders, something which is not formal in nature. The credit rates are very high in this segment. So 80%, in fact, 80% of total MSMEs, around 50.4 million MSMEs are taking the credit from informal sector. So it is a very, very huge pie to cover. And just imagine if all of us, the entire ecosystem, reaches out to 50 million and every MSME at least provides generates employment for 2 people, you will create 100 million new jobs. So this is something, again I will say that if we want to, from a developing country to a developed country, we want to change the scenario how this country is running, we need to create jobs in MSME. Now the second part is digitization. So in fact, I was talking the other day, there are a lot of contribution by India for the world. We created Zero, we created Ayurveda, but in this century, we are giving a gift of digital payment to the world. So talking on that, so on the supply side of it, a lot of these MSMEs are now registered on these portals, which are Udans of the nature and all of these B2B portals. More than 50% are registered for supply on these portals. 75%, and this is also a revolution. Internet is cheaper if you compare it with any other part of the world. Internet charges are is cheap in India. So 70% or 75% of MSMEs, they say that the connectivity is very good, which is the important aspect for your digital payments, your digital ecosystem. And more than 27% people are now selling on online platforms. If I compare the percentage share of MSME across the years, in 2021 it is around 27% of the total sale is done online. Now the catalyst of digitization of MSMEs. There are some of the very important points. Let me start with digital payments. We know UPI itself handled around 6.8 billion USD transactions last month. We have other ways of digital payments as well. So as I said, digital payment is gift to the world from India. So this is a very strong aspect and this will help MSMEs to grow. Second is custom and tax policy. Government is also working to a very large extent to digitize the entire program, to digitize and make it easy for MSMEs to file taxes, to file GST returns and all of that. ONDC and marketplace operators. ONDC, Open Network for Digital Commerce. ONDC will be like a UPI moment for e-commerce. It is an open network where anybody can log in, anybody can place their product to sell. So this will create a new revolution for MSMEs per se. Digital awareness and customer trust. In NPCI we have a program called DigiSati, wherein if there is any doubt related to any of the digital products, the question comes to us and we answer it. Similarly, there are various other mechanisms where government and various government-aided organizations are working in the direction of creating awareness for digital payments. Logistics. See, everything else is digital, but at the end of the day, you need to bring the goods at the doorstep of the customer, at the doorstep of these enterprises. So government is doing, so we have huge roadways, we have now huge expressway. Delhi-Bombay corridor will be the largest in the world. So the road transport, the revolution in road and logistics will definitely help MSMEs in a longer way. And all of that put together is leading access to easy credit for our MSMEs. So taking the slide further, my colleague Ashish will take further slides. Thank you.
Thank you, Abhishek, for giving us the industry overview. Good morning, everyone, once again, and taking over the presentation from here. So NPCI has always been designing solutions for addressing the digital payments and various other payment networks. Just looking at some of the products that are being used by our MSMEs for the digital payments. If you look at the customer to business payments, we have RuPay, IMPS, BEAM, APS and other payment solutions. For the B2B payments, We have RuPay, Beam, Nash, and basically all the payment instruments which are helping in business-to-business payments. For P2P remittances, we have Beam, UPI, IMPS, and other payment instruments. For B2C, for salaries, we have Nash, and obviously we can use other applications like UPI and Beam for the same as well. But as Abhishek has already pointed out, that there is a credit demand, and that can easily be met by digital means only. The traditional way of credit will never be scalable enough to meet that huge 45% of the informal credit demand. So why a credit card as a payment solution is good for this good for addressing this problem is, first of all, the short-term credit needs. So according to one of the surveys, it was found that around 60% of the MSMEs have received payments somewhere between 40 to 60 days. So in that particular interval, they would require some working capital for short-term credit needs, and I think credit card, without incurring a huge amount of charges, it's a best way of supplying for their working capital. No extra charges. When I say no extra charges, it means that a credit-free period of around 40 to 50 days would be kind of very feasible for every MSME to use that money for their working capital requirement till they get payments from their suppliers. And obviously government is also helping by making certain regulations for entities to give back the money in 45 days. Credit card also helps in ease in expense managing and monitoring. You do all your expenses with credit card, and at the end, on the due date, you get a statement in the tracking of whatever expenses you did. So the basic features of a credit card as a payment instrument is basically helping, and obviously it creates a digital footprint and enhances your credit score, which thereby help you in getting more and more loans at a very cheaper rate. RuPay already has this initial responsibility of addressing the backbone of our economy, and thereby we designed a RuPay MSME credit card with some basic features. The broad features we start with, we had certain insurance coverages which are basically useful for this sector, such as accident, air accident and baggage loss coverage. Then we also offer concierge and lounge access on this card. For creating a kind of a personalization, we also encourage that the Udyam number should be embossed on the card for that particular MSME. Udyam number is compulsory now for every MSME to have this. And we have a bouquet of offers that are basically incentivizing MSMEs in their digital journey. So just looking at the broad incentives that we are providing, we have offers and incentives on email solutions, cloud platforms, digital marketing platforms, and CA-assisted services. We got into the shoes of the MSMEs and thought that wherever we can go ahead and incentivize for these businesses to take the digital modes of doing payments as well as enhancing their business. So we got certain offers on the part, and we have some incentives and offers on the couriers, legal, monthly rentals, co-working spaces, and travel and hospitality. So this is our way of doing incentivizing the MSMEs to basically move on to their digital modes of doing business. So what we are doing with the acceptance part, so when we say that 51% of the MSMEs are in the rural areas, the acceptance via traditional methods of a POS machine or a e-com payment gateway is not feasible. So having said that, RuPay cards has around 6.5 million POS machines which are enabled for acceptance throughout the country. We have acceptance on major e-com merchants throughout nationally and internationally, and we are working to enhance the same. But this RuPay credit card on UPI, by doing this, we can take acceptance to villages, we can take acceptance to Tier 2, Tier 3 city, and which was not possible before. And by doing this, and we are enhancing the scope of acceptance to around 20 crore merchant QR codes. And basically these MSMEs which have a huge amount of customers which are not having card acceptance payment infrastructure can enjoy the feasibility of a UPI and can take credit and interest-free period of the credit card instrument. So this combination has huge potential, but I'll not be talking much on the same because we have a masterclass tomorrow as well on this. Vendor payment solutions. We will be launching this solution in the next month. We have co-created this product along with one of our very good partners. And what exactly is vendor payment solution is, suppose you have a supplier who doesn't accept cards. Through this solution, you can pay to the vendor, to the solution provider via credit card, and the amount will be disbursed according to your payment instruction to all the suppliers at once directly into their bank accounts. So that is how it works, and we will be launching it in the next month for this. So see, the point that we got, the feedback that we got from the market is, you issue card, but where it will be used. And I think by enhancing by RuPay credit card on UPI and this vendor payment solution, the acceptance problem is almost solved. So talking about the basic benefits, you do all your payments through a RuPay MSME credit card and you get a single monthly statement. So basic advantage of a credit card instrument for MSMEs. Interest-free period, I have already said that it allows for extension of your accounts payable, and basically you can pay to your supplier and get early payment discount, which is the savings to the supplier point, and without compromising with your working capital or your cash flows. So that really fits directly into the advantages and directly fits into the working nature of the MSMEs. You have better spends visibility because it offers, the credit card offers you the insights on transaction data and the payments made. So basically you can analyze your business and you can see where are the payments going, and you can definitely use a monthly statement to see that. Spends efficient, the banks have this apprehension that it will not be used for business purposes, but certain MCCs which are definitely not required for businesses can be blocked by the banks, and thereby it enhances in some way of the usage of the card on business for business requirements only. As I already mentioned, that we have certain offers and platforms that basically helps in incentivizing the MSMEs to take digital modes of doing their businesses, and we obviously a digital footprint is created, which is basically used by the banks and various other institutions to lend credit. So what we are trying to do here, the big picture that we are seeing, few years back, the strong government regulation regarding GST and getting registered and taking GST number and online GST filing made most of the MSMEs to come on the formal system. Okay, because of that, because of the formalization along with the digitization, it created a sizable digital footprint. For example, online GST filings, and GST Sahay is also coming, which basically use your GST data to lend you. So basically that was the idea behind this. Then because a digital footprint is created, it enabled access to easier and cheaper credit. Because of basically the data, and here is where we want to get into. An MSME credit card will increase the credit score and digital footprint of the MSME, thereby making them eligible for more credit at a better rate. It should be the first step to create your digital footprint and your digital history, which can be used by any of the financing institutions and basically used for assessing your capability of taking credit. And banks will have been having more visibility on the fund utilization at minimal risk. They can easily detect early NPAs, and obviously if you have a better history of credit, you can be cross-sell other loan products and more credit can be extended. And because all these advantages will be seen by the MSMEs, more and more MSMEs will formalize and digitize as they realize the benefit. So basically, according to one of the surveys, easier and cheaper access to finance would start this virtuous cycle, and it is estimated that around 85% of the MSMEs would go into formalization by the end of 2023. The support that the ecosystem we require from the ecosystem and the way forward of taking this is, first of all, we need to have separate underwriting mechanism from the bank side. The banks cannot depend on the traditional underwriting mechanism. They have to use alternate data for assessing MSMEs, especially new to credit MSMEs, which are taking loans or credit for the first time. Banks have this problem of collection, so there has to be use of technology for reduction in the collection cost of the money that has been lended. One thing that I suggest, I would like to highlight here that there should be some kind of a credit guarantee provided to the new to credit MSME customers by the government. A policy level change is required, or you can say that the credit guarantee scheme can be extended for first time credit card holders in this sector, and because when it reduces the risk, the banks will be more happy to lend it to the MSMEs and thereby see their behavior and lend more. And obviously a financial literacy and awareness program has to be taken on the national level to educate everybody regarding the government schemes and regarding the benefits of a digital payment platform. So NPCI is working constantly to provide payment solution to this sector, and thereby we invite all the fintechs, all the banks and all the financial institutions to come and collaborate with us in creating a good payment solution for this particular sector. And by that I would like to end my PPT, and we are open for questions. Thank you.
Is anybody? I'm surprised we don't have any question. Yeah? Looks like we are most of us are from NPCI only here, right? No questions? Anything you want to ask?
Hi Abhishek, Ashish. This was nicely done, thanks. So my question is, while we are catering to the MSME segment, and the intent is to make working capital cheaper, and also we are giving 45 days in the product construct, what is the interchange? Is it going to be the same, or are we looking at a lower interchange for the supplier to give it to its customers?
So, very interesting question. In fact, when we were making this product, when we were working on the mechanism of MSME credit cards, and we know how a credit, so MDR, interchange are a very important aspect of any credit card. But way a normal credit card works, for MSME it has to be different. Because we have to match the cost of fund, we have to match the funds at what these MSMEs are borrowing from the market, from the banks. And secondly, for the supplier side, so buying so it has to be prudent in that case also. So yes, on your question, we are working on a differential interchange. That's like in the making. So we are working on a differential interchange so that it benefits the entire ecosystem. So yes, we are working on that direction where there will be a differential interchange for MSMEs, this particular card.
I'm assuming it's lesser than the market rate, right?
So it has to be close to the cost of fund for any of the MSMEs.
So adding to that, I think if you see the rates that are, the loan that are given on to the MSMEs by NBFCs or some private banks also, it ranges somewhere from 14 to 20% a year. And if you go to the informal money lenders, it ranges for 20 to 30%. So definitely it will be lesser, on a lesser side, but yeah, I think we will reveal that through a circular.
It's a commercial product. So the entire ecosystem, it's a product which every ecosystem should make money out of it, right? So yes, it will be revealed very soon, but it will be lesser than what it is. Yeah. Any other further questions?
First of all, very good presentation. The question that I had is, as rightly mentioned, that 51% of MSME population resides in rural India, and this being a very good opportunity for MSMEs, to lend money. You did speak about Digitization being one forum where awareness could be increased. Can you just specify or throw some light on other initiatives that comes to your mind that we would be working on in the near future to educate and create awareness amongst the rural population specifically?
So in fact, a lot of these government agencies and a lot of our private ecosystem partners, they have created a campaign on YouTube. So you go on YouTube, there are a lot of campaigns. In fact, recently there was a campaign by WhatsApp also. So similarly, we are also doing a lot of campaigns on YouTube. And Digitization, as I said, there is one initiative which is basically to cater to all the queries and questions related to digital payments in India. If I talk about other ways wherein government-aided agencies, private partners, banks, the entire ecosystem. So there are various means. For example, I was talking to one of the largest government organizations, and they are working directly with MSMEs, and so they have a lot of DFOs wherein they work at the interiors of the country, and they are providing solution, they are providing education to the smallest of the entrepreneurs at the tier 3 cities and the rural areas. So, and you know, the best part is language barriers are getting broken. So instead of giving everything in English, we are creating a system wherein they get the information in their own language. So that is how the entire ecosystem is working. Because I agree, you know, we have, the solution should be in their own language, the solution should be at their place, the solution should be at their time, right? So yes, the entire ecosystem is working on it, including NPCI, and there's a lot of awareness which is being created for such information.
Thanks.
Hi, Abhishek and Ashish. Thank you for such an insightful session. So, I would call it a financial inclusive product, as it is going to give credit access to 99% of the MSMEs which you mentioned. So, you talked about alternative underwriting methods. So, do we have any good practice which we can share with our ecosystem players which they can follow, because they do not have any CIBIL score, which is the primary eligibility criteria. So what should be these alternative underwriting methods or
So-
parameters?
So I think right now if somebody goes for an MSME loan, they basically use their, business transactions that they have done to estimate what is exactly is their sales and everything. So when you say alternate underwriting or alternate data for underwriting, it's anything and everything that is not in the traditional direction is something that is included. It's just basically a word which has different meanings for different issuers. So I was talking to one of the credit rating agencies, and they were using basically any of the, so suppose there is a QR code that is used by that particular MSME, and sometimes the proprietors are there, so they use the QR code. So the QR code has this data of basically how many transactions are being done on a particular day and what exactly is their turnover, which even that particular MSME or that particular proprietor would not know. So that kind of a data, if it's collated and provided, an insightful collation of that is there and provided to the banks, I think that would serve as an alternate underwriting data there. So it's just one of the examples. There are people who are using even social media data to underwrite customers. So that's huge. I mean, it cannot be summarized in a particular definition for that. So,
Following to this, is there any bank which is following these methods to underwrite?
so I don't have any idea about
So
that.
as of now, banks, so I divided into two parts. So banks and fintech players, new age fintech players and banks. So yes, new age fintech players, they are now employing new mechanism for underwriting, and in fact, banks are also moving into that direction. But presently, if I talk about today, so all your new age fintech partners, they are working in MSME lending. So they are employing new age tools also. So I'm sure the entire ecosystem will also grow eventually. And the present risk modeling, I feel, it's outdated. We need to create something new. We need to have various other parameters also to be included for underwriting. So risk modeling needs a new version. We need risk modeling 2.0, especially for MSMEs.
Thank you.
So thank you. It's a wrap. Thank you so much. And thank you so much for the audience present here in the auditorium and people who are watching us virtually. Thank you so much. We have further master classes also of a lot of NPCI employees. So I will definitely request you to attend those master classes. They are very interesting topics. So please do attend that. Thank you so much.
Thank you, everyone.
Thank you very much, Abhishek and Ashish, for this presentation. I'm sure the MSME industry will really thank you. Okay, everybody, now it's time for us to move to the next presentation. But before we go ahead, I'd like to mention our partners. So here are our platinum partners. Our platinum partners are Google Pay, PhonePe, Visa, M2P Fintech, Mastercard, Falcon, and our registration partner is NTT Data Payment Services. Before I go ahead, I'd like to ask you something. How many of you know about e-rupee? Of course. Okay, so I can see all the hands of the NPCI team. Very well done. All right, great. So next is another masterclass that we have, and this is the product masterclass. So this says, are you ready to harness the power of e-rupee? So as few of you already know about it, this presentation will enlighten you more about e-rupee. So now it's time for me to introduce our speakers on stage for this one. So everybody, now let's welcome on stage our first speaker, Senior Associate Merchant Management, NPCI, Mr. Aditya Shah. Everybody welcome on stage, Mr. Aditya Shah. Along with him, let us also welcome the In-Charge Design, Development and Testing, Mobility Solutions, National Payments Corporation of India, Mr. Sankara Subramanian. Over to both of you. Thank you. And everybody, you know, as after every presentation, we have the Q&A. I request you to please ask many as questions possible so that we can make it an interactive one. Okay? Thank you. Over to you, sir.
Hey, hi, good morning. Am I audible? Yeah, just give us a few minutes while we set up the PPT. So, is it interesting for guys to look at a UPI banner with a e-rupee, a combination of UPI with rupee? Anybody has any idea other than NPCI guys? Suppose this discussion, you will be able to understand what is that. Yeah, Aditya, we are ready? Hey, hi Aditya. I have a business requirement with me. Government and corporates wants to send benefits to the end beneficiary for a specific purpose. Okay, for specific purpose as in? So today the money is dispersed to the customers to their account directly, and the money is being used by the customer. The purpose of the transfer, intended purpose is not known. So the money can be used by the customer for any purpose. So the ask here is that, how do we ensure that the end purpose of the customer usage is ensured?
Okay, so for that we have a product in mind. So I'll just give you the vision of that. As NPCI, our focus is always to build a digital solution that is cashless and contactless. So today, as you said in your problem statement, that many of the sponsors or entities are disbursing funds via DBT, wherein the funds directly goes into the customer's account. But then after, there is no visibility of where that funds are being utilized. So keeping that in mind, we have created a solution wherein we can have a targeted and leak-proof delivery of services wherein the benefits can be ensured for a specific purpose. It will be optimizing minimum touch points, and also this will help in reducing and eliminating your administrative cost compared to other platforms. So I'll just introduce you to the solution. The solution is e-rupee. So as you can see, it's a voucher that any customer can get onto their smartphone or the feature phone, and it is a single time and a multiple time use voucher. So if the sponsor, like the government entities or corporates, wants to issue a single time voucher, they can give it for that particular purpose, and if they want to give it for multiple time use, they can give it with a defined validity. It's a person and a purpose specific voucher. So as in, if a corporate wants to give any voucher to their customers for any specific purpose, they can do that with e-rupee. And also it's for a specific person. So I cannot share you the voucher and you can use it. It can be only used by me since it is been intended for my use. Since it is a digital solution, there is no need of any print or anything. It's a contactless and a cashless solution. It is a safe and a secure channel since this rides over the UPI railroads only. And the most important part, in the entire transaction journey, no personal data is shared anywhere of the customers.
Can you elaborate on what is single time and multiple time?
So single time basically means that if a voucher of say 100 rupees is issued to you, say for grocery purpose, now if you are redeeming the voucher of say 60 rupees, once you have redeemed it for the first time, the rest 40 rupees goes back to the sponsor.
Oh, that's great.
Now say for example you have a multiple time use voucher. So in the same example, if you have used 60 rupees, you can use the 40 rupees again as many times you want. So that's the difference between multiple time and single time.
So as our requirement, how do we ensure the voucher is used for the specific purpose?
So when a voucher is created, the voucher is defined with a specific purpose which is known as an MCC, Merchant Category Code. So as I said that the grocery example, I'll take it again. So groceries are tie up with supermarket MCCs or your Kirana shop MCCs. So the voucher can be defined for that particular purpose and can be issued for that purpose, and it can be redeemed only at that. So if you walk in any medical store with the same voucher, it won't redeem. It will say it's not for the same purpose.
So as you told, the personal data is not traveling with this QR. So how will we ensure that the intended end beneficiary is only taking the benefit?
So we have a verification process when you redeem the voucher. At that point in time, it is known that this voucher is being used by the specific person only.
Okay. So I could see a UPI logo in the QR. So does it mean that only UPI customers can use this URP?
No, so the customer doesn't need to have a UPI app or even a bank account to avail the services. Any customer across India can have the e-rupee voucher. They can get it directly onto their phones.
So I could see a smartphone on the screen. So what about the feature phone users?
So as I said, it is for everyone across India. So even feature phone users can use this product. Feature phone, everyone will get an SMS via which they can avail the services.
So what is the benefit that the sponsor would get out of the scheme?
So the main benefit of the sponsor over here is that they will have a real-time tracking that where the voucher is getting redeemed, when it is redeemed, and for what purpose it is redeemed. They will have an end vision of what is happening with the vouchers and what is happening with the amount. And also it will be a low cost since it is a digital distribution platform.
Great. Can you take me to the process?
Sure. So the process is divided into two parts. One is the creation process, wherein, say for example, any corporate or any government entity wants to create vouchers for their end beneficiaries. So how do they do that? So they have to get connect with the banks who are live on e-rupee. So we have 20 banks that are live on e-rupee. They have to just share few details with those bankers like name of the customer, the mobile number of the customer, the purpose of the voucher, the amount of the voucher, and the expiry of the voucher. Once all these details are shared with the banks, the bank will then connect with NPCI and share those details with NPCI. NPCI in return will create a voucher number. So for each request that NPCI receives, NPCI will create a voucher number and pass that back to the bank. Now once the bank will receive it, the bank will send the voucher to the end customers via an SMS.
Do we have any cap on the amount?
No, so the cap is like if a government is issuing a voucher, the maximum amount per voucher can be up to 1 lakh. If it is a private institution, then they can issue a voucher up to 10,000.
What about the period?
Period is maximum up to 1 year and minimum is 1 day.
Okay. So who and how this voucher is being issued to the customer?
So the banks, as I said, banks will issue the vouchers to the beneficiary. The banks will send an SMS to the customer. So this is how the SMS will look like. So the SMS will have all the important details like the voucher number, the amount, who created it, for what purpose, and if there is any queries where they can contact.
So I could see a QR. So is it similar to the UPI QR? Can I scan and do a payment using this QR?
No, so this is not a UPI QR where you can scan it. This is a voucher QR which can be only used for redeeming at a specific merchant location.
Oh, great.
Also, one more thing over here is that in the SMS, the delivery medium is SMS for both feature phone and smartphone users. If it is a feature phone user, he can just show the SMS. If it is a smartphone user, he can download the voucher from the link. So we have a link to download the QR in the SMS itself. So using that, the customer can download it and proceed ahead.
So if I am a feature phone or SMS smartphone customer, I still receive an SMS only.
Yes.
So from the link, I will be able to get this QR.
Yes.
So I can understand a QR can be scanned by a vendor. But what about the SMS? If I get a feature phone SMS, how will he scan that?
So for feature phone, the feature phone user doesn't need to scan anything. When we are at the redemption leg, I'll explain in detail that how a feature phone can also do a redemption.
Great. So can you explain the redemption, please?
Yeah, I'll take through the redemption process. So say for example, I have the voucher with me what I am supposed to do. I'll visit the nearest redemption center. Say for example, I took an example of grocery. So I have a voucher, I'll walk into the center, I'll purchase the items which I want to, and then I'll go to the operator's desk or the payment desk where the payment is accepted. At there, the operator will have an app, a smartphone application which is built by the UPI acquirers. In that app, there will be an option to scan QR or scan SMS. If I'm a smartphone user, I'll show the SMS. If I'm a feature phone user, if I'm a smartphone user, I'll show the QR. If I'm a feature phone, I'll show the SMS. Basis that the operator will scan this, he will get the voucher details. Post he receives the voucher details, the acquirers from the backend system will initiate a request to NPCI and from NPCI to the issuer to check at this point in time whether it is when it is presented, the voucher is active or not, it can be used right now or not, it is already used, or whether it has an eligible balance to be used right now, and whether the purpose is satisfied. So right now I am at a grocery shop, so my grocery MCC or supermarket MCC will come into picture, which matches when the issuer will receive it. If I'm at a medical shop, medical MCC will go, which will not match with the issuer, so the issuer will decline it. So once that matching is done, at the end of that leg in the API flow, the acquiring will get the mobile number of the customer. This is the same mobile number which was used at step 1 when the voucher was being created. So this mobile number is passed back. Now using this mobile number, the operator will initiate a verification code to the customer. Now the customer will receive the code and he'll punch in the code onto the operator's device. So this is how we are ensuring that this voucher is being used only by that person for whom it was issued. So in step 2 and step 3, we are covering the person and the purpose specific, which is the product construct. Once that has been completed, we move to the next part wherein verification is completed. Now we go to the redemption, wherein the final debit request will go to the issuer bank. The issuer bank will debit the funds and pass the message of credit to the acquirer. The acquirer will credit the funds, and once the transaction is completed, the operator on his screen will receive a successful message. With this successful message, I can get the goods and services and I'm done with it.
So Aditya, you told that the sponsor has to go to the his bank to create the voucher. Suppose the sponsor is having multiple banks. So is there an automated way that he can create the vouchers?
So for that, we have built an API gateway solution. So as you said, the problem statement is that one sponsor wants to issue vouchers with multiple bankers. So they cannot get into multiple integrations with all of them. So for this particular reason, we have introduced an API gateway solution wherein the sponsor can directly connect to us, and then from sponsor to NPCI, NPCI will route the transactions to the issuer banks for the voucher creation. So I'll just walk through to the flow. So say for example, there is a sponsor, a government or a corporate entity who wants to create vouchers online over API. They can send the same details of the voucher creation to NPCI, to the NPCI API gateway, and also the bank, for which bank they are using which bank they are using for the voucher creation. Once that details are received, NPCI will pass that request to the issuer bank. The issuer bank will process the request, will check whether this is our merchant or not, whether this is the voucher is for the intended purpose, all the onboarding details are correct or not, or online only. It will pass a response back to NPCI that stating that this is a correct request, will create the voucher and will deliver it to the end beneficiaries. And once that is done, once NPCI receives the response, the final response is carried back to the sponsor. So he gets an assurance that this was the request which was initiated and this is the response of that. So using this platform, the corporates or the fintechs can directly connect with us, and they can connect with, when they connect with us, they are connected with all the banks which are live on e-Rupee. So it's a one-stop integration for all the governments or the fintechs who wants to work on e-Rupee platform.
So the sponsor is able to create without going to the bank. Likewise, will the sponsor know about the redemption status?
Yeah, he will be able to know. So it's the API gateway is a suite of 2 APIs, wherein the first API is to notify the issuer that the sponsor wants to create a voucher, and the next step is whenever there is a redemption going on. So the issuer bank will again notify the gateway, and from the gateway to the sponsor, that this voucher which was created on this date, this is the voucher number, this has been redeemed right now. So with this, the sponsor will have an end-to-end track on real-time basis. He can do the reconciliation basis this itself. that this voucher was issued on this date and this is the expiry and this is redeemed this many times if it is a multiple times, and if it is a single time, this was redeemed here.
Can you summarize this flow, please?
Yeah, so I'll just walk through to an EV.
e-Rupee is an initiative aimed at promoting digital payments. e-Rupee is a voucher developed by NPCI, that is, National Payment Corporation of India, in collaboration with Department of Financial Services, Ministry of Health and Family Welfare, National Health Authority.
So tech comes with some issues, so let us get it resolved. Any Q&A, we have tried to make the presentation in a Q&A so that yes sir. Yeah, you're audible, please go ahead.
So when a voucher is created, so what we are doing is for each segments, we are creating a purpose code that identifies that this voucher will be used for this segment. So say example, if it is a supermarket has three, four MCCs. So we can, so that are mapped to a purpose code. So if say you are a sponsor, you want to create vouchers for your employees, you can give them the segment that I want to create vouchers, say for supermarket, I want to create for medical, I want to create for seeds, cycle distribution. The bank will pass the same purpose in the online request when they are creating the voucher. And when the redemption process happens, so when I go to, so say for example, you have chosen the cycle distribution.
e-Rupee is an...
So when I'm going for a cycle distribution anywhere, so what can happen is that the cycle distribution or the cycle store will be onboarded with an MCC. So every merchant is onboarded with an MCC. MCC is merchant category code.
Is that already there? All merchants are onboarded on MCC, or that onboarding is a separate process?
That is not a separate process. That is, so any merchant who is there on UPI railroads. So the MCC is a category which is across all products. It's not only in UPI. Across every product, RuPay or ATM, everywhere, you have that MCC. So it's a common standard.
So for example, I want to issue a voucher which can be redeemed on Amazon. Is it possible? So there is no merchant code, like it's a full marketplace. So how do you use that?
No, so the construct is the voucher has to be purpose. The purpose has to be defined. The purpose can be...
Can it not be open-ended? Because I want to, let's say, give rewards to my employees through e-Rupee voucher. Is it allowed or is it not allowed?
So right now it is a purpose specific wherein you have to define the segments.
But isn't it too restrictive? Why do you want to do that?
So say for example, if you see for government or the DBT schemes, wherein the government is disbursing the funds, they're disbursing directly into their accounts. Now I am giving government DBT schemes for say seed distributions. You have to purchase, the farmer has to purchase the seeds out of it. But once I deposit the money into your account, I don't have a visibility what is happening to it.
The whole purpose is to ensure that the end beneficiary is using the fund for the intended purpose.
No, but that can be one use case, but then is it not restricting the usage for other use cases which may be open-ended also? So why do you want to make it a walled garden? Why can't you let the sponsor choose whether they want to put a purpose in it or they want to leave it open so that the utility can be much bigger in my mind? I'm just
we will take it up. Currently we are looking at a very purpose-oriented launch. Yeah.
Thank you.
Yeah. Yes, please. Should I play the AV? Then we will take the question. Yeah, thank you.
Yeah, preferably that.
e-Rupee is an initiative aimed at promoting digital payments. e-Rupee is a voucher developed by NPCI, that is, National Payment Corporation of India, in collaboration with Department of Financial Services, Ministry of Health and Family Welfare, National Health Authority, banks and aggregators. The idea behind e-Rupee is to invent a digital solution for cashless and contactless payments for services sponsored by government and corporate organization. A solution that can ensure targeted and leak-proof delivery of services, minimal administrative cost along with simplification of distribution system. So, let's understand the e-Rupee better. Person and purpose specific. This is a QR-based or SMS-based e-rupee voucher that can be used once or multiple times. This e-rupee voucher is cashless and contactless and is completely safe and secure. E-rupee voucher beneficiaries' personal information is completely confidential and secure. Beneficiary of the e-rupee voucher can rest assured about the confidentiality of their personal information. Government entities, corporates or any service sponsor with the help of their partner banks can generate e-rupee voucher through NPCI. Upon receiving the e-rupee voucher, the government entities or corporate or banks can distribute it to the beneficiaries. An SMS will be sent to the beneficiary, which will have the link to download the e-rupee voucher. Beneficiaries can avail services by redeeming e-rupee voucher at the Service Provider Center. Service Provider Center will scan the QR code or SMS received in the form of e-rupee voucher. A verification code will be sent to the beneficiary's mobile number for verification of the beneficiary. Once the verification is done, the payment will be processed immediately. E-rupee will help users avail services and easily pay for them across the categories of scholarship, subsidy, electronics purchases, entertainment, vaccinations, utility bills, and many more. Take a step towards a better tomorrow. Step into the digital revolution.
Sir, we will close the presentation and take the question, please. Yeah. So, yeah. So, can you explain the advantages, opportunities?
So the base advantage, I think that was there in your problem statement, that it helps to identify, easy to track the
Yeah, we can take questions.
Yes, okay. Am I audible?
Yeah.
Hi, so my name is Abhishek. I'm from Access Health International, which is a health non-profit, which is working with NHA in India and other countries. So one question or one concern that was with which I'm not sure if still is that for example, for community health workers to avail e-rupee benefit, the initial problem was on the supply end where the amount would have to be influxed into a particular bank for it to be available. So I wanted to understand if this problem is still persisting or if it's been solved and how has it been solved, because when I look at community health workers, there are a range of services that they provide, and with the incentives that have been brought by the MOHFW for community health workers, there are varying price points and there are varying incentives that they're supposed to receive. So how are they being categorized? So it's a two-part question basically.
So to answer this, what we can have is that, as you said, the incentive can be divided into specific purpose or specific segments that can be defined on basis that the voucher allocation can happen. And once the voucher is allocated, they can redeem it any point in time within a minute, or say you can have a fixed expiry that if you want the voucher to be redeemed only in 1 week, you can have it for 1 week, or you can have it days also. The maximum is 1 year, you can have it minimum for 1 day also, the redemption. So the segments can be divided into as in when the use case demands that you want it for this particular thing, you want it for that segments. The segments can be securized and then we can put it across. And as the expiry date is set by the sponsor only, who is the creator of the voucher, they can only give the expiry date. So expiry date is in your hands, so you can define it and basis that they can get along with that.
Okay. No, but again, the first part of the question being that the primary supply that was required, that a particular sum of money needs to be influxed into a particular bank for it to disburse it to the community health workers. Is that still the case, and how are we solving this?
Yeah, that is still the case, since as soon as I receive the voucher, I can redeem it. You have given me the voucher, on the second minute I can redeem it. So when I redeem it,
prepaid voucher, right? So it needs to be,
the funds will be debited on that time, because I am redeeming the voucher, I need the service on the spot. I cannot be like, the voucher is redeemed and I don't get the service. So that's where it's there.
So gentlemen, just to elaborate what you just asked right now with respect to the bank account. So today only the banks are the entities who can issue e-rupee voucher. So the route has to be a bank. So if you want to issue e-rupee voucher, you have to go to a bank who's enabled for issuance of e-rupee. So irrespective of now, whether your question was that do I have to flush money in my bank account? Yes, it has to be. That is the way they actually issue a voucher. Because when a voucher is issued, you have to block those funds because of prepaid voucher, right? You have to block those funds and then issue, which assures that the beneficiary would receive the money. It is allocated to his account with respect to the voucher, and that is how the voucher gets redeemed. So the question you asked, it still remains is with the bank. It has to be with the bank.
I think that's something which the health department needs to figure out.
Yeah.
And just to add on to this thing, we're obviously working for NHA. I'm sure we'll elaborate further on it. We already have launched few programs with them, which we work through it.
Yeah.
Thank you.
So I'll cover this. Yeah.
Can we take the questions later, please? Because we are running short of time, please. Sorry.
Yeah.
Yeah, that we'll definitely take it.
Yeah, so I was on the advantage. So the advantage is, as I said before, it is easy to track. It will give an end-to-end visibility to any corporate or government. It is again, since it is a digital platform, it will be cost-effective compared to other platform. Now, if I want to say what is the benefit for the customers, the main benefit for the customer over here is that the beneficiary is not required to have a UPI app or to have a bank account. He is just having a mobile number, he can receive the voucher. Second is, it is a two-step process. The operator needs to scan the voucher, the customer needs to enter the verification code, and it's done. The redemption is completed. And lastly, it works for both feature phone and smartphone. So the target audience can be anyone in India for this. Now, say if I want to walk through the segments, for government segments where we can look upon. So in governments you have education, medicals. For education, if I want to say a college student who gets a scholarship from the government, now instead of doing a reimbursement, now the government can directly issue him a voucher. He can walk to the college reception, he can just show the voucher is redeemed and the fees payment is completed. Likewise, we can have for medical, I can walk into the pathology lab or get the test done, mobile distribution, smartphone distributions. So there are across 74 government schemes which are running across various ministries and that are amounting to around 36,000 crores. So that all can come under e-rupee. Now, if I want to say what is for private or corporate players, so the private players can target their CSR activities or employee gifting programs, or even you can say tax benefit program. Say for example your meal cards or your fuel coupons, that all can be converted into e-rupee. Since it is again purpose specific, it will be only used for fuel or for meal or whatever the corporate has intended for. And lastly, I want to cover about P2P. So if I want to give you a voucher, I can give you for say festive season, I can give you a gift voucher or an occasion voucher. So even the gift card market in India is amounting around to 38,000 crores. So that all can be covered in this. Now on the use case, these are just the use case that we are working upon right now as we speak on ration delivery, LPG delivery, wherein customer can get a voucher, he can go to the LPG center, just redeem the voucher and the LPG cylinder will be delivered to him. Fertilizers, that farmers can get the voucher and he can get the fertilizers and seeds against it. Then we have electricity on education, student scholarship. On the private segment, you can have the gifting program, festive coupons or meal vouchers or fuels. So these are some of the initiatives that we are working upon right now. There are many more which are in pipeline to come.
So if I put myself in the customer's shoes, so how do I know that if I get a multiple vouchers, what is the balance in the voucher, or for what purpose it is issued, what is the expiry of that? How do I know that?
So whenever the voucher is issued, you get an SMS. In the SMS, you have all the details, and whenever you are redeeming the voucher, at that point in time also you get an SMS that what is the available balance of the voucher. If it is a multiple use, if it is single use, then it will be like this is the amount you have redeemed and it is exhausted. Also, we are working upon a solution wherein all e-rupee vouchers can be linked into your UPI app itself, and using your UPI app, you can, instead of using your debit account, you can use the voucher and complete the payment. So I'll just showcase that how that will look like.
Let us understand that how e-rupee beneficiary can link voucher and transact using Bhim UPI app. The user can also redeem e-rupee voucher using Bhim application, which is available on Play Store or App Store. Beneficiary should register their bank account on Bhim UPI app. Once the user has registered with their bank account on Bhim, they can click on e-rupee option for the Bhim app home screen page. Beneficiary needs to ensure they are linking the same mobile number that has received the e-rupee voucher and that is linked to a valid bank account. Beneficiary can see
Not working. Here it is working. Okay. So I think there is some technical issue, but I'll explain the journey over here. So how it is that if I have a smartphone, I can download the UPI app, the Beam UPI app. I can go to an option wherein e-rupee is there. What it will do is against my mobile number, the number of vouchers that are present, active at that point in time, that all will be listed over here. This is the discovery platform wherein at the first stage the vouchers are discovered. Now that once that is completed, whenever I'm going to any shop wherein the merchant has just the QR, there is no a payment system, or he can say he's not having an app. Therein the customer can just scan the QR. Once after scanning the QR, the customer will get after scanning the QR, the application will automatically suggest the customer that you have an e-rupee voucher for this specific purpose. Do you want to use your e-rupee voucher here? The customer can select the e-rupee voucher. Once he selects the e-rupee voucher, he'll again get the verification code onto the app itself, and he can enter the verification code and complete the payment. So this journey will be very much similar to your normal UPI when you do a UPI transaction. The only difference would be that instead of debiting your own account, your CASA account, your e-rupee will be debited. So your smartphone users can directly come over here and do the payments. So any questions, anyone?
Hello.
Yeah.
Good morning, everyone. A quick question: what if the customer accidentally deletes the SMS?
So the banks have a mechanism where they can resend the SMS to the customer. So the customer, since the customer is not in contact with the bank, the customer can contact the sponsor who has issued him the voucher. They will intimate the bank that this many vouchers SMS has to be re-triggered. The bank will re-trigger them an SMS and they will get an SMS. And with this solution in coming into picture, even if the SMS is not there, anytime he can link the voucher onto the UPI app.
So currently e-rupee is outside an app, so there is no app which is involved. So that's the reason we are trying to bring in an app. So that will be more customer friendly and easy for the customer to track.
My question was pertaining to the merchant. Pertaining to the acceptance infrastructure. How is the MDR calculated? Is it a prepaid MDR or credit card MDR that is charged?
So when this product was launched, so DFS along with the bankers have come upon a pricing that how the voucher distribution should. So there is no MDR as such on this. There is a separate pricing model altogether, wherein from the issuance to the redemption it flows. So that's already there in place. So it's not the normal MDR you see everywhere. It's a separate pricing altogether for e-rupee.
And how do the voucher holder knows that where to redeem? Is there any list of designated centers as per the MCC? Is it defined anywhere in your website or anywhere else?
So if I want to say for government schemes have their designated partners or designated vendors where the voucher has to be redeemed. So that's available on their site, that where you can redeem the vouchers. Also we are getting more and more acquirers, like the big players who are coming in. So with them coming into we are targeting to touch maximum touch points that are there across, and with this solution coming in wherein I can have the voucher onto my phone itself, I can go anywhere wherever a UPI QR is there. I just need to ensure that it is a UPI QR. I scan and I can do a payment. So that's how we are working upon on the acquiring side.
Basically, you are targeting any QR should accept this voucher?
Any QR will accept the voucher, but it should be purpose specific again. But the app will give you that highlight that you have a voucher available, and if you want to use. It's not like you will prompt everywhere where I want to use this voucher.
That's the internet MCC?
Yes, correct.
So once this VMS comes into place, the acceptance will go high, because with my app I will be able to go to any shop and I will be able to redeem. Instead of using my account, I will use e-rupee as the account and I will pay through that.
One last question: can this suppose I am a voucher holder and if I input the code into this Beam app, will I be able to redeem it through QR, through any QR?
So you don't need to give any input over here. So when you use any UPI app at the very beginning, you do a mobile binding process which captures your mobile number. So you don't. So the system will automatically take that mobile number and fetch that whether against that mobile number you have any vouchers or not. You don't need to input anything. It will be fetched automatically when you
To be
press on
precise,
the
you will
icon.
not be actually entering. It will take it from the central system. Whatever vouchers has been issued against your mobile, because mobile number is the identifier. So against your mobile number, what all the vouchers issued to you will be pulled by the app.
That will be all. Thank you.
Thank you.
Just a short question.
Yeah, please.
Actually, this will boost the microfinance scenario in our country. So I just want to ask that can a sponsor can be a microfinance, like not an NBFC but a small microfinance company? This can be.
A sponsor can be anyone who wants to issue voucher for their intended customers or beneficiaries. Can be anyone.
The issuer, the sponsor.
Yeah, sponsor. They can only sponsor 10,000 rupees. So microfinance business loans are bigger than 10,000.
So, but the per voucher amount is 10,000, but I can issue n number of vouchers.
Microfinance can issue.
Yeah.
Sorry, I joined little late, so
Yeah.
I'm not aware if this is covered. So who can create and distribute these vouchers? That's my first question. And second question is, what happens if the voucher expires?
So the voucher will be created by the bank, and the bank would be distributing on the voucher will be created by the bank on the instruction of the sponsor. And once the voucher is created, the bank will distribute it to the customers via an SMS. So the SMS will have a link to download the QR, and for feature phone, the SMS works as it is. And post the expiry, once the voucher is expired, so whatever funds had been allocated for this particular voucher will again go back to the sponsor post the expiry date.
And once the voucher is redeemed, do you have an option to cancel or refund?
Yeah, so there is an option to revoke the voucher at any point in time, but again that has to be done on the instruction of the sponsor. The sponsor will instruct the issuer bank that this was the voucher which was created, this is the voucher number, please cancel this voucher. So post that the voucher can be cancelled, and the same has to be intimated to the customer because the customer has already received the voucher in form of SMS. So he'll again receive a notification that this voucher is no longer valid now, it is revoked. Yeah.
Hi.
Yeah.
Can we get a recurring voucher to be sent?
So we have the voucher type as multiple redemption, wherein if I issue a voucher you one time, you can use it n number of times until I exhaust the amount or until the voucher is expired. So that's there in place. It's not a reloadable voucher. The voucher creation is a one-time process only, but I can use the amount n number of times.
No, my question is different. So I wanted to set a like a recurring payment. So every month of date I wanted to issue a voucher to my employees or something like sort of.
That can be done by the sponsor with the bank.
Okay.
Yeah.
So very quickly, coming back to the earlier conversation about how the voucher can be used. So you mentioned that every voucher has a very specific purpose. Now I see there are certain use cases defined. If this is being used as a direct benefit transfer scheme, which is not linked to a specific, for example, CNG or ration, is NHA or is RBI working on creating a bouquet of services that a particular beneficiary can avail for a particular voucher? Like, I understand why there is the wall around it, but is there a bouquet of services that are being planned?
So if the use case demands and if the sponsor has a requirement to create a bouquet of services, we can again do a targeted segments like you said CNG and ration that can be clubbed and that can be made up, because what we are doing is for every use case there is a mapping that we are building up. So in that mapping we can do some modifications and work upon that. We can club two segments individually and then give a benefit to the customer. So that can be worked upon.
Okay. And is NHA currently working on any pilots to or planning any pilots to basically test these out? Because I think these are still in the conceptualization and the development phase.
So this is already live. NHA is also already live. So NHA is connected with us over the API gateway solution. So NHA is connecting with us, and from there it is connecting with 4 banks primarily for creation of the voucher. NHA has their own scheme, ABPMJY. So they are issuing vouchers for that particular scheme. The pilots are already going on in couple of cities as we speak.
Okay. So thank you for that.
Yeah.
I think we're done with the question. Do we have any more questions? Yeah. One more, Ate.
Hi. I want to know how it's different from virtual prepaid card. Even for prepaid card, virtual prepaid card, you can block MCCs. And those can be used in this MCC or that MCC.
So here,
and it is high acceptable worldwide. Prepaid card.
so here I don't need the customer to have any account or anything. Even a feature phone user can avail the services. That's the first point, because he just receives an SMS, and using at the redemption side, using an OCR technology, a feature phone also can avail the services. So that's the first point. We can target everyone who just has a mobile number. We don't need any other detail. I don't need to do any other KYC or anything over here. I just need the mobile number of the customer and the voucher is issued to him.
I think for gift card also you don't need anything else. You just need the mobile number and gift card can be issued.
So,
A virtual gift card.
yeah, so one benefit is the feature phone, and second is this runs on UPI railroads. So since this is on UPI railroads, the acquiring system that we have on UPI can be availed over here directly.
So the acquirer doesn't have to pay any MDR.
So, no, there is no MDR. As I said before, there is a separate pricing model for this, which doesn't involve MDR.
And the settlement will be instant for the acquirer?
Settlement would be as it is happening in UPI right now.
Okay, I have a question. One of the use cases defined was gift cards. Again, coming back to the gift cards piece. But what is the use? I mean, it's not limited to a particular use case, right? Gift cards can be used for any purpose. So how come that is a use case then? I understand the rest of the use cases that you shared, but why the gift cards?
So gift cards also, that many of the, means we have received many of the requirements that we want to give gift cards to our employees, but with a targeted segment, that they use it over here only. Like for this benefits, for for festive season or for occasion. Say if it's my birthday, it's my anniversary, I give you a card and you can use it, say for a hotel, you can go out, dine out. Say these are some of the categories or the segments where particular target can come in, wherein they want to give you a service. You can go into a resort and you can just redeem the e-rupee and you can have a stay over there. Likewise.
And you mentioned,
Yeah.
you mentioned that 36,000 crores worth of government schemes is where you've given
Yeah.
e-rupees. Just wanted to understand what is the redemption rate, because the key lies in the redemption rate. How many people actually go and redeem those vouchers?
So 36,000 crores is the, right now it's going in DBT right now. So we are telling this is the opportunity that can be converted into e-rupee. This can come on e-rupee. This is not there. This is, right now government is already doing this. So some of these can always come on e-rupee, where you can target the customers. And as I said, we are already working with the acquirers on building the acquiring system setup everywhere. And once we have it on the smartphone, anywhere you have a normal UPI QR, it works for you. You don't need a operator over there. You don't need an operator with an app to scan your QR and anything. You can just scan directly, make a normal UPI payment, select your voucher, and that's it.
Fair enough.
So Aditya, you've been talking a lot about healthcare and government-related subsidies for e-rupee. Do you foresee e-rupee being used in different use cases, such as say recyclable or renewable energies, where the government or a private entity wants to incentivize this behavior by saying, okay, if you collect plastic and you donate it at a center, you get an e-rupee for that specific material. So do you think use cases like this will be picked up by e-rupee for startups? And if yes, if I'm a startup, how do I go about enabling this?
So definitely such use case can come in picture, wherein you can incentivize the customer on the spot, because this is a real-time voucher issuance. In seconds the voucher is issued to you and you will get a notification that this is your voucher. And say for starting this, you can directly connect with us over the API gateway solution. We have the banks also. You can choose the bank of your choice and you can connect. So directly you can have an online platform or a platform wherein whenever you get a request from the employer or whoever it is, you just initiate a process from your platform. It comes to us, we give it to the banks. Bank will create the voucher. The customer will get the voucher and he can use it anywhere. So on real-time basis, you can do that.
There's no entry barrier for a startup to come on this platform. You can just register
Yep.
and start issuing.
Yep.
Super. Thanks.
So the acquirers that you referred to, what's the infrastructure that would be required by the acquirers, and are there any timelines that you're looking at to and for how many acquirers, and what's the categories of acquirers that you basically like? Would Kirana, for example, would Kirana shops in the future be one of the acquirers, and how is the process of that going?
So right now we already have the acquiring setup. It's growing day by day as we speak. So right now the infrastructure, the requirement is only of a smartphone. I need a smartphone where I can have the acquirer app. With a normal smartphone, the acquirer can do the QR scanning and the SMS scanning. That's the only required. Smartphone and an app is required as far as the infrastructure is concerned. And say so this comes under an online merchant category where the merchant is having some smartphone or something to redeem the voucher. Now if I want to go to an offline category where just the QR is there, then the voucher linking onto a Bhim application will come into picture where I can link the voucher, I can scan it and I can pay it. So this solution we are already working upon. It will be there in months time into the market.
For the SMS also is just the QR code scan kind of?
So SMS scanning works on OCR technology. OCR is optical character recognition. So it just reads the voucher number from the SMS and it proceeds ahead.
But the Bhim app can do that.
Then you don't need that, right? Because I as a customer will have the voucher onto my phone and I will do a normal scan and pay, and when I'm using instead of using my debit account, there I'll get an option that use my voucher. And I'll use the voucher and I'll go. So I don't need to do that. I will do the normal UPI journey which I'm used to today. If the merchant is having that setup, he is having the mobile, he can scan your voucher as well.
This is the other way of the acquiring.
Yeah.
Hi, I just wanted to check, you have mentioned purpose specific multiple times. Can it be multiple purpose specific or it has to be only one?
So this is a repeated question we are getting. Currently it is a specific purpose, it is a single purpose. But we have taken not more
But
than
if
one.
the use case demands, we can club purpose or multiple segments as we say. We can club and
Somebody
issue
was
voucher.
open-ended vouchers also. We don't have that. So the whole construct is that it has to be specific because today we are not able to see whether the intended purpose is being served. I get money into my DBT account, I do not know how do I spend that. The sponsor does not know that. So that is a major construct we have brought it. But as the business grows, we will keep these things in mind. We will take that feedback. Multiple purpose code, open-ended vouchers. We will work on that.
Thank you.
So one last question. From the sponsor point of view, say he's creating vouchers for 1 crore rupees and that program goes for 6 months. Does he get interest on the money that he's blocking during the e-vouchers?
That is the arrangement you have with your bank.
So till that vouchers are redeemed, you will be getting some interest on it.
It is the arrangement you have with the bank.
All right, I really appreciate the enthusiasm about e-rupee. There were many questions, and thank you so much, our speakers, Mr. Subramanian and Mr. Shah. Thank you very, very much. All right, everybody. Thank you, sir. All right, so once again, thank you to our speakers for introducing us all about e-rupee. And everybody, we'll be having the next masterclass shortly in few minutes. So let me tell you, the next masterclass is on shifting identities, currencies and consumers, and this will be taken by the founder Multiply Ventures, Mr. Bhushan Patil, and we'll be beginning up in like maybe a few minutes. Also, a very important announcement, I'd like to tell everybody who has the iPhones and all other Android phones, we have an app of Global Fintech Fest. So please download it if you haven't yet, and by downloading it, you can connect with your fellow delegates and, do the networking. So please do download. Thank you. Once again, a warm welcome each one of you. I request all of you to kindly settle down. We are beginning our next presentation. All right, I think we can start now. Yes, shall we? All right, so as you can see, we are here. So I would like to tell you, we also have virtual audience. So people, it's weekdays, right? So people are watching our event from their offices. So yes, the camera is at your back. Okay, so before I go ahead, I'd like to mention our partners. So here we have our communication partner, Kalera, our banking partner, Standard Chartered Bank, our diamond partners, PayU, AWS, Kia.ai, Paytm, and our networking partner is Buddy Loan. And now everybody, it's time for us to start our next presentation. It's again our masterclass. And this masterclass is about shifting identities, currencies, and consumers. And I request you all to please welcome on stage with a little round of applause, the founder, Multiplier Ventures, Mr. Bhushan Patel. And we'll have questions after this presentation. So please be ready with it. Thank you. Over to you, sir.
Hi everybody, good morning. It was quite difficult to find a topic to talk frankly because this is all this fintech event, 4-day events, many experts are talking and we're just toiling around different topics and what to pick. So from my experiences of fintech, like just to kind of, before starting Multiplier Ventures, it's a VC venture capital firm, investing in fintech, but before that I was part of Paytm Group as group president there, also worked in China on Alipay, which is another fintech play globally. So from some of my experiences and what I've observed in the market, this is the topic which I picked up, what's shifting in terms of, let's say, currencies or consumers, and which might be important for all of us to note or maybe look for. And this in a way touches upon what's coming in future. I'm also going to touch upon how it has impacted us in last maybe 7-8 years and how that trend is going to go further. So let me start maybe the first thing with identities. Now what are identities? Many times when we say identities is basically something what you would have heard words called KYC, or when you say bank account, passport number, Facebook ID, WhatsApp ID, these are nothing but identities. What has happened with identities and how it has shifted the kind of, I would say, the entire ecosystem is, if you look at those pictures, right, we started with maybe paper-based identities. So earlier, or even today's banks right now, they'll ask you for okay, give me a ration card, give me a PAN card. So they're actually deriving your identity, like me being Bhushan is known to be Bhushan because I hold a passport, or I hold, let's say, one particular government ID, Aadhaar or something, and they'll create a derived identity out of it and give a maybe account number, which is very cryptic, long. Earlier it was smaller number, now it's very, very long number, right? Eventually what happened is somebody called PayPal came in and then said that, you know what, I'm not going to have this derived identity from outside systems, but I'm going to give I will empower customers and maybe derive identity not from a government or a ID system, but I will create it from an email address itself. Now interestingly, what happened with email addresses is not given to me by anybody else. Email addresses came to me because I have created my email address. What has happened here, this is where the global shift happened. Email address suddenly didn't come from government ecosystem, it came from my own desire of creating my own ID. I can still say cool Bhushan or something like that. So I got empowered to create those IDs. Another thing is this suddenly became global. So this is where a suddenly globalization happens, and PayPal as a company could go global very easily because their ID system was based on a global identity, not on a local identity of a PAN card, which is harder for, let's say, a US bank account to open my account with the PAN card in India. Subsequently what happened, this identity from government IDs came into, let's say, email addresses, eventually called a phone number. So what happened with this is my phone number, which was given by telecom company, not by, let's say, email provider, that became my identity to do a banking transaction. So what has happened with this is, one trend which you'll notice, the IDs are coming closer to human being. There were third-party IDs, there were my email address, my phone number. Eventually you're talking about thumb-based or a biometric IDs, and eventually if you extrapolate this, you might have a DNA-based kind of a banking identifications also. So one trend which is happening is they're getting closer to human. Second one, obviously, the problem with these paper-based identities is there is a cost. Somebody has to steal your PAN card, somebody has to verify the PAN card, etc. But imagine if you get into a face-based banking or a biometric things, you don't need a cost of creating ID. You are born with the ID. So nobody has to spend money on creating those IDs. That's another important thing. The new identities which the world is adopting are intrinsically available with you. They're implicitly given to you. They're not, you don't have even pain of creating an email address outside. You don't have even pain of creating other IDs. Your phone, maybe it's your face or a thumb or whatever DNA eventually or genes possibly can become your biomarkers and ID for fintech ecosystems. So what is happening with this is natural distribution. You don't have to distribute or create these IDs further. Second one is these are cheaper, far cheaper than anybody printing any even simple paper, right? So now what happens with these IDs is, let's look at maybe technology, and but before that I'll touch upon the last point is going beyond human. So we have seen like banking now is no more related only to, let's say, people, right? Or let's say mature people. You have banking even for, let's say, teenagers. And I'm sure that come 2-3 years down the line, like we have pet insurances, I'm sure that we'll have pet banking also. Somebody will create a new banking for pets. So at least I can, if not anything, I can track my banking with respect to my pet. Because you're spending a lot of money about that pet anyway, right? Hopefully there is no credit about the pet and nobody can take loans on pets, but possibly that's where we're heading. What are the technology things, if you're looking from a masterclass perspective, how does the technology changes because of this phenomena, right? Now imagine the fear which many banks in US had when PayPal came into picture, because their ID which they gave became irrelevant. Many of the people started using email as ID. Now the guy who was in his technology ecosystem said that my bank account is my primary ID. This guy said, you know what, I'm going to change your ID itself. That's like a Tesla kind of a phenomena, right? Or Apple phenomena, which came in for in a banking system that, you know what, I will make your system irrelevant because I'm going to create new IDs for people. And so there is a huge fear of irrelevancy, and as soon as this ID shift, there is irrelevancy. Imagine today we are talking about UPI, wallets, and those kind of plays. Imagine if you get into biometric, let's say IDs, let's say my thumb impression becomes an identity for banking. Maybe the existing system, what we see today, we will have to change. So what is important is, and how to mitigate this irrelevancy which kicks into this ecosystem, is readiness of shifting this identity. So like we have seen in telecom, there was number portability came in, right? Airtel said that, you know what, I can port your number from any other provider or Jio, etc. Similar thing is required in a banking ecosystem, but it's very hard because many of the banking ecosystem work on these IDs as a core system. But if you have a system which says that, you know what, I am a wallet ecosystem, I am a UPI ecosystem today, but hey, tomorrow if it shifts to, let's say, biometric, I have no problem. I can still map it to that. Or multi-identity. When I travel, I will use my biomarker ID. When I'm in India, I will use my credit card or a banking ID. So there could be portability of these IDs, which is required from a technology perspective. Inheritance. Now, obviously, we have seen the documentary inheritances. My child gets my money because of inheritance, but maybe with some identity shifts, inheritances can also be derived and changed. And obviously now this also gives new challenges because a lot of frauds happen because of identities. And if you understand this trend of identity shifts, you'll also figure out how my fraud ecosystem or how my, let's say, transactional fraud or identity frauds, I need to take care with respect to new identities, right? So there is definite technology requirement, or at least people have to understand in the ecosystem that these IDs are going to impact us over a period of time, both in terms of how we set up the technology as well as how we look at the frauds and multiple other things over a period of time. So that's the first shift. Moving to the second shift is currencies. So many times, and I think the simplest shift what we understand today is crypto, right? For many years we have been living with like a cash or a kind of a digital cash to some extent, but crypto came into picture. So the currency shifts are happening. But if I tell you that this is not new, we are always actually shifting currencies. If you look at what happened traditionally, there were kings, right? So there is let's say Maharashtra kingdom or Maratha kingdom, there is a Delhi kingdom or these kingdoms, and they had their own coins, right? So as we shifted, as we went little from those maybe those kingdoms to a country level, we felt that this gold coins etc. need to be basically extended at a country level. And now today nothing but we are looking at can we have global currency. So the currency was always shifting its form factor from smallest of the region to the largest of the region. And that has been happening all the time. What also happened with this shift is, if you look at the currencies, when they shifted the forms, there are few things this shift wanted. Maybe a rich king can afford gold coins or gold kind of a cash or silver kind of coins, etc. Today we cannot afford. India as a government had to give this steel or whatever those multi-alloy kind of coins. So what is happening? The cost of creating currencies or the actual instrument of value exchange is getting cheaper and cheaper. And with digital, obviously, make it to some extent cheapest, I would call it as. So the cost of currencies or the cash instrument value exchange, we can call it as in a nutshell, is getting cheaper and cheaper. Another thing is, I think, is what is happening is the governance, right? The governance of cash was again shifting from kings to national countries, and now is global. But when you go global, the country governance is still pocketed. So for example, when we look at India rupee, it's possibly controlled by Indian kind of government, etc. Maybe dollar is controlled by other countries. But when consumer want global currencies, they need to be controlled differently. Now, typically what we have seen is it is portable, right? So you can port a rupee to, let's say, pound or a euro through a dollar kind of a thing. So there is certain kind of norms which countries adopted, but what is happening, this governance is also changing its, I would say, hands. So as we see many countries came together, many country governments came together to govern the currencies, we will have more such entities controlling the currency governance, right? And if the currency by nature itself is global, then how do you look at this? Because there is nothing called global government, right? There has to be new bodies which will come into picture. So this is also interesting thing to look at. Another thing is easy and scalable. So most of the global currencies nowadays, if you look at, they will be far easy to use. And that's why we don't wait, or let's say when crypto phenomenon happen or digital currency phenomenon happen in many other countries, people didn't wait for government to print a currency or give it to banks, etc. It just come bottom up, adoption will happen because of the nature itself. Another thing is multi-formats, right? So for example, look at the denomination of currencies, right? The denomination of currencies in India, for example, we have from, let's say, 1 rupee coin to 2,000 rupee notes. Many other countries, it's just $100 is the maximum kind of a unit. That is because the value, what you need to buy certain asset in India might need cheaper denominations, where in some other countries need higher denominations. Now what happens here is, again, like maybe the global currency, let's say take some ABC currency which we are looking globally, that has to be denominated differently in different countries. You might have a minimum of, let's say, $5 equivalent in other countries, but maybe have $1 equivalent in India, where that's the minimum thing required. Also what is happening in currencies is, what was currency? If you look at currencies, basically when I exchange some goods, there is a, I would say, more like a value exchange. Because I'm doing this transaction and this is value that, let's say, X, or let's say magnitude, let's say X kg of value, I convert that into rupee and then there is a rupee currency around it, right? But today what happened, because of digital transfers, what is also happening is the asset itself can be transferred without actually bringing in currency into picture. And that's what you can, maybe NFT world you would have seen, right? NFT just gets transferred. You just exchange the value itself, right? If I'm buying an insurance for you and you want, in lieu of that, you want to give me the services, it's fine. And today that happens in country to country. Many times, for example, India would do a treaty with certain country of oil exchange, etc. You don't need to go through third-party currency like a dollar, etc. to exchange a value. You just settle the net off and do only that net off transactions. So that more and more of that is going to come in with currencies. Now look at from a technology perspective, how does it matter from technology? One is we are moving toward globalized currencies. So any currency, in fact, if you look at trend in India, right, we have a rupee currency now, and we want to go global with rupee. Right? Dollar was global, but now every country which has a significant currency and want to be a leapfrog in a fintech ecosystem, they would naturally want to make their currencies global. Because they're not waiting for identities to global, right? Like yesterday we saw some sessions upstairs that we're talking about these global BBPS where the cross-border transactions can happen in dollar, etc. So it's a natural need as the identity, as the consumers are going global. If my email address is global, my let's say Facebook ID is global, my WhatsApp ID is global, phone number is global, my biometric is global. Naturally, any currency which I hold, if there will be pressure on currencies to go global. Second is multimodal conversions, like how do I convert? I don't have to convert always through a dollar to dollar, but there could be value related exchanges which will happen. Obviously it has a lot of regulatory challenges, and that's going to be a lot of fun. We'll see, right? There's always a push-pull, whether currencies managed through governments or currencies are managed through third parties, or consumers directly managing that currencies. I think so some interesting regulatory challenges we'll see which will come into picture. Also merging BFSI verticals. Now money is available in different formats, right? For example, in a bank I will have money in my saving option, I might have overdraft, I might have credit, different options. If you look at from a regulatory perspective, from a governance perspective, you are siloed, right? So somebody would say, you know what, your loan book has to be separate with only lending banks or NBFCs. Your credit books have to be separate with credit cards, approved company, etc. But if you look at from a consumer perspective, the same. It's same consumer looking for my loan, my kind of savings, etc. So what is happening is you will actually see, because of this currency conversions, you will also see BFSI verticals or regulators merging together. Today they work in a silo, but I think tomorrow they have to work together, figuring out at a consumer level how do I merge together. And we have seen a lot of push-pull between, let's say, regulated entities, consumers, and in between fintechs. They have been we are trying to get verticalizations we are actually witnessing verticalization as a regulatory thing, but maybe eventually it will merge because at the consumer level anyways merges. Because one lender and one credit card company at a consumer level I can manage and maybe pay for my loan to other credit card. All this merging happens at a consumer level and possibly will happen across currencies also. Obviously, now if currency is changing, what is happening is money monetization strategy of BFSI is also changing. For example, just to give an example, so far when we will do rupee transactions, there are MDR charges. There are charges which are open in transaction. So when I transact, some will be taken from my transaction, or somebody will pay, let's say merchant will pay or seller will pay based from the transaction amount itself. But what is happening with newer currency, if it's digital, then the transaction charges will go down. So how do BFSI fintechs will make money, right? The money might also, the monetization strategy might move from transaction to storage. In fact, that is what is happening in crypto right now. Transaction charges are very small, but when you store it in a blockchain, there is a heavy charge. So it's almost like in a current phenomena, banks might not charge you for any transfer of money, but when you store in a bank wallet or bank vault, those whatever you call it as safe boxes, they are charged. So we might have storage level charges as possibly a fintech requirement, or new fintechs might look at monetizing from a storage perspective. Moving on, and as I said, monetization strategy because of currencies will also change. Last one is consumers. Now obviously we talked about identities are changing or currency are changing, but what is also happening is consumer is also changing. We imagine, let's say all of us have been given those coins, let's say gold coins, thick looking coin, etc. We might not even be able to carry a lot of that currency with ourselves, right? So consumers are changing. So what is happening with consumers? One is global mindset. The fact that I can link my bank, my money with me, my email address, my phone number, my biometric IDs, you want that money to be global. So this is a global mindset coming into picture, and the boundaries are mainly for regulatory and political purposes, but generally money, for example, is or the consumer requirements. Many of the students, for example, during COVID time, they started learning courses which are global courses. Many of us might have domains which are booked across the country. So this is a global mindset which is coming into picture. So the consumer definitely is born global from a monetization perspective. Second is going macro. What happened before is we were happy doing larger transactions. But today we want to do smaller transactions, smaller ticket transactions. I want to even off, let's say even a 5 rupee transaction right away. If you go back, let's say 10-15 years back, right? Many times if a typical chai wala or any kind of vendor, you would have many transactions done in like a khata kind of a thing. Because you don't have instrument to pay those 5 rupees, 10 rupees, 20 rupees kind of instrument. That's why consumers created their own kind of books. Today we don't need book because somebody can pay 5 rupees. So microfication of transaction is happening, and that's very, very important. And as we go global and the currencies might get divided in different countries for different ways, denominations, microfication of transactions is bound to happen. So if you are doing any kind of fintech things, it's important to look at what is the smallest denomination of a value I can transfer digitally, and do I still make money out of it or not. Transaction vibrancy. Obviously, vibrancy of transaction has grown multifold. You would have paid only to 10 different places in a day. Now you're paying 50 to 60 different places. Sometimes the payment is happening implicitly. You might not be doing it also because it's just automatic, some mandates, etc. So vibrancy of transaction is very, very high, and it will go further. Mass and multi-party settlements. It's important as the vibrancy is happening. What used to happen, look at 10 years back, I was buying certain thing from a goods vendor, I paid the money to the goods vendor, and it's a two-party transaction most of the times. But today what happens is the transaction itself is going multi-party. What I mean by that is, today look at if I'm ordering a food from a Swiggy guy or a Zomato, the restaurant needs to get paid, Swiggy needs to get paid, the guy who's going to bring thing needs to get, maybe that MyGet application which actually gives me a small thing to allow that guy not also get paid. So there are multiple vendors who are getting paid. So suddenly the vibrancy of transaction or a multi-party settlement are going to go higher. And again, if you take the same 100 rupee transaction gets divided into 5 different vendors or I would say service providers, microfication is bound to happen. Obviously, there are challenges or opportunities for us to kind of look at from a technology perspective here, taking into account these things. Like one is creating global platforms. So whatever you do, I think come 2 to 3 years down the line, anything what you are doing today possibly needs a global footprint of some sort. Ease versus protection challenges. While we are looking at microfication, mass adoption, vibrancy, while it is easy to build, it actually basically add lot of protection challenges, because it's easy to build a fraud protection system for a high value transaction because somebody is paying you to create those systems. But if I'm let's say fintech company or bank allows, let's say yesterday we saw UPI Lite, maybe with the 200 rupees is a smaller amount to transfer, but what happens at that amount, the magnitude of you don't have enough money to create fraud prevention plays, etc. So there are protection challenges which come into picture. Transaction cost, as I said, in currencies, as you microfy, the money which you make on transaction possibly is almost tending to zero, so you'll have to figure out new forms of making money, and possibly it could again lead to, let's say, storage of money, etc., rather than actually transaction-led kind of monies. LTV, so this is another form factor which maybe banks are not looking today, they are looking only from loyalty perspective, but LTV becomes important that if I'm doing only very small transactions, how do I make money as a fintech or a business or a government or whatever, you might be looking at LTV models. So instead of looking on putting taxes on each of the transaction, GST or service taxes, you might look at, hey, you know what, if you cross 100 rupees in a day, I'm going to charge you GST. If I cross X month, so it will be batching of taxation, possibly also come into picture from all the regulatory purposes. And obviously last one is important is global scores. Today, many of the consumers, today have CIBIL scores or any credit scores, they are very confined to what taxes you file in a country and they cannot be ported globally. But consumers do expect you to have global scores. Today they don't exist, but with this globalization of currencies, identity, etc., I think there's huge opportunity as well as maybe challenges for us to create global scores or global credit scores, where with my Indian credit I can actually get some leverage, let's say in other country when I'm traveling abroad, right? Why should I be always carrying the FX in cash format? I should have enough credit there itself. So those are the few trends what we have seen, and I think definitely this would hopefully it opens up a little bit of a mind for you guys that what are the underlying changes which we have seen. Some of these changes actually happening from traditional ecosystems, from like very family oriented routines to what we see today, and that will continue to happen. And as this happens, there are some new challenges or new kind of ecosystems what we are going to see or witness. So it'll be interesting to look at how those changes happen. So that's from my side. Happy to take more questions, I think, in a few minutes. Yeah, please.
So currency always had some asset underlying value, right? Now with crypto in place, how do you determine the underlying value? Like I have so many dollars and I want to buy so many cryptos. Right now I can go to exchange and buy cryptos. But then really, is there any standard or is there any conversion rate that we can come up with for this type of exchanges?
Yeah, and I think this is an interesting question, and there's no definite answer, right? Because, and maybe the answer lies in history. If I take the same topic, countries created their own currencies, but then they needed to do cross-border transactions, and that's why they had to agree certain kind of norms. Like euro came in to agree within as an agreement within Europe, or dollar as a global currency model. Now rupee is trying to create its kind of format, etc. So what I think is going to happen, I think maybe next 8 to 10 years, I think there will be a lot of fuzziness of how do we exchange value. Like maybe if you look at last 20, 30 years or maybe 50 years, dollar was kind of a standard which people were accepting, and then obviously there's backed by assets like gold, etc. So there was some kind of a logic to it. But I think next 8 to 10 years, as this system is evolving, and we don't know what is the end point of evolution of currencies and even customers changes, etc. There's a lot of fuzziness which is going to happen. In fact, the reason we are asking this question is because that how do I convert my USDT or US dollar in a currency, and then maybe there are coins and there are NFTs. So that fuzziness will continue. That's where the governments will come into picture. But again, I think my simplest answer will at least it will continue at least for 4 to 5 years minimum until somebody takes and typically it might not be government, it will be some private organization running some coins or something, will say, here is my way of converting. Like USDT today to some extent works within, let's say, a crypto ecosystem, but can it open? So it will be more like, I think 5 to 6 years that might happen.
But fuzziness maybe the beauty of this whole fintech ecosystem might lie in the fuzziness itself. Like the hedging happens within dollar, etc. Because there's a fuzziness. I don't know what will happen to dollar tomorrow, right? And that's where you make money or lose money. And maybe that fuzziness might go higher to give that, to play a little bit more wiggle room to kind of make or lose money.
Yeah, like in case of dollars, it was tied to gold earlier, right? Now it is no more tied to gold.
Yeah.
So now it's tied to economy maybe.
Exactly.
So there's lot of changes happening so fast, and determining the underlying value of an asset is always going to be a challenge.
Yeah. And I think that is where I think even look at portfolio. If you are like a HNI and you have a portfolio manager, etc., they would also, like in a rupee world and rural world, they said actually keep it in multiple currencies, park in different assets, and that's what is going to happen. Like maybe, and I've seen like many of the portfolio managers. In fact, we ourselves being venture capital, we actually the way we guide our kind of investors also, or investee companies, diversify. So you might not always be great in only holding currency in certain money in certain currency or asset in certain currencies. You might diversify in other currencies also, or coins or assets which could be derived asset like NFT. NFT, I would still say maybe still we have to figure out what is the NFT play over a period of time, at least from my personal viewpoint. Yeah.
So just one last question. So you spoke about identity
hijacking.
Not hijacking, but heredity, right? So if I have my identity as an Aadhaar card, or if I have some bank accounts, and say if like my kids needs to inherit my property, right? So how do you envision this to be happening? Like, can my kids go to just one place and say, this is my father's PAN card or Aadhaar card number? Can you transfer all the property to my name?
Yeah. So I think what's happening again, like today the inheritance is through documentary thing, right? But if you look at biologically, we're connected, right? By the DNA can be matched, right? And you can prove this guy is whose kid and how how much even percentage, right? Is more mothers or more fathers, etc. from a genomic perspective. So I think if you build that actually, and if there is a DNA, and there are companies working on that, there's something called Genome Patri, etc., which comes from identity creation, etc., but used mainly in health right now. And some of this will come definitely, possibly it will come in format where you are very particular about your inheritance. You might say, I don't want to follow documentary, I want to follow my DNA hierarchies for transfers, right? So I think those options would definitely open. Already, I think some countries, they are looking at that, especially HNIs and larger wealth houses. How do you inherit, not just from documentary, but also from genomics? Yeah. Great.
All right, so I think we're done with the Q&A session. Thank you very much, Mr. Bhushan Patil, for this presentation. Thanks once again. All right, everybody, we'll start our next presentation in few minutes. But still, I'd like to tell you what is our next presentation. Our next presentation is again a masterclass, and it's the digital payment end-to-end security when fintechs are pushing the boundaries of transaction processing. And it'll be taken by the Senior Vice President, Data Security Council of India, Mr. Vinayak Godse. So we'll be starting that in few minutes. Let us do a little bit tech checks and all. Thank you very much. Our country partner is UKFCO, Kingdom of Netherlands. Our credit score partner is Pesa Bazaar. Our conversational commerce partner is Carrigs. Our P2P lending partner is Faircent. Our VIP lounge partner is Cred. Our InsurTech partner is Cover Genius. And now it's time for me to invite our speaker on stage. So everybody, as I've already mentioned, this next presentation is about the end-to-end security when fintechs are pushing the boundaries of transaction processing. And I request all of you to please welcome on stage with a round of applause the Senior Vice President, Data Security Council of India, Mr. Vinayak Godse.
Thank you, and this is nice to be part of this global fintech festival. As a Data Security Council of India, we work at the national level on public policy matters for cybersecurity. We engage with a lot of national cybersecurity initiatives of Government of India. We also work with industry on improving the preparedness of cybersecurity and also privacy. And also we engage with even law enforcement officials and some of the security agencies to look at the cyber fraud and see how we can build the capability of them to take care of the frauds that we are seeing increasing day by day because of the digitization of the payment and many other transactions which is happening basically, right? So what I'm trying to really, with some slides I have here, and we'll have some time also for discussion, is to see how exactly the ecosystem of a transaction processing is evolving. And we say this as a supply chain of a transaction processing is unbundling basically. Unbundling because there are so many different parts, so many different vendors, technologies, vendors, a lot of third parties coming to be part of those transaction processing. So they either help you to initiate the transaction, enrich the transaction, or even for that matter, even there is data that they would help you to manage the data coming out of transactions basically. So when this unbundling is happening, so then what happens to cybersecurity? How do you make sure that you still maintain the security, you still maintain the privacy expectation or satisfy the privacy expectation, and also more importantly, also make sure that it doesn't lead to the significant level of fraud. And we are seeing that happening in some part of the area and some of the challenges that we are seeing as a country, because kind of a transaction that we are processing per month, almost $7 to $8 billion number of transactions basically we are processing. And because of that, I think there's definitely digital fraud, digital security is becoming very important part. So in this 10-15 slides, I will like 8-9 slides, not 15, 8-9 slides, I'll try to put together what we thought as a national level in terms of the payment or transaction security and how exactly these things are evolving. If you look at the digital payment basically, right? So digital payment, we know the payment systems, there is a lot of, this used to be discussion for 5-6 years back where there are a lot of payment ecosystems we had been seeing, the machine, the online, the contactless payment, the payment gateways. So this ecosystem is evolving. And then what basically you used to have doing the payment largely, now devices are becoming very important. Whatever you have in terms of your computer or mobile variables now coming and joining transaction processing. And then your identity is becoming very important because that's why you would be recognized, you will be identified. Then there are a lot of authentication, authorization methods which evolve in recent past, like a PIN, password, biometrics, now CVV, expiry date, OTP, and then the payment instrument in India is not only the card, but nowadays bank transfer, mobile wallet, then BIM API. The payment facilitation done by the entire other ecosystem basically, right? So the ecosystem is largely the way the telecom industry, mobile ecosystem is working together, and more importantly the core basically. At the end of the day, all of that is connecting to either your bank account or limit of your credit card basically, right? So this is very simplistic representation of digital payment. 5-6 years back we used to talk about, right, basically. And when you talk about security, you will talk about things should go wrong. So sometimes all of the system you may have insecure configuration connectivity, you may talk about identity theft, you may talk about credential stealing, you may talk about insecure handling of the data, you may talk about phishing frauds, which is probably very important in the context of the OTP ecosystem that we try to bring, the second factor ecosystem we try to bring. We may talk about the account harvesting, you may talk about insecure connection, we may talk about the SIM card cloning. That was a problem some years back, but probably that is getting sorted quite significantly in recent past. You may talk about the rogue mobile application. That is becoming very important, critical challenge nowadays in India, especially all of those rogue mobile applications. And there are different ways the strategy is being trying to put together to deal with this problem. Then spamming is definitely one of the important part. Then this entire ecosystem, the way it is being building, so all these systems and the way you configure it, way you handle it, so that may become a major important issues and problem in terms of when we discuss about security and privacy in the payment in the system. So this 5-6 years back, we started the entire discussion of digital payment, real payment security, so 5-6 years back. But in last 6-7 years back, a lot of things has changed, right? So the entire ecosystem has changed with a lot of those innovations that are being brought by various different players, basically, and especially the fintechs, which are now pushing those boundaries, basically, pushing those boundaries of transaction processing, basically. So with this very simplistic understanding of security and privacy, I'd like to go and see what really happened in last 5-6 years of time, and how can we then think about security and privacy to make sure that we adhere some of the principles of security. More importantly, we respect the privacy expectation of the end citizen and also comply with the privacy requirements of countries, and especially India is putting together. Like in 2017, India talked about privacy as a fundamental right, as the Supreme Court underlined that basically. Now, new data protection regulation is coming. So how that can also comply with that. And third important part is how in all this ecosystem we contain and control the frauds, digital frauds basically. So let me now come to what exactly is happening nowadays in countries. So if you look at the digital transaction flows and payment flows in India, so there are various different ways and very different instruments are available for you. Means as an individual, be it at a remote place of the population to the modern uptime users basically. So there are various different ways basically you can initiate the transaction. You can initiate transaction by using utility app, you can initiate transaction by using third-party payment application, card, banking transaction. So various different ways the transactions can be initiated. Various different ways the transaction can be looked at, and UPI has really paid a way basically. UPI as a architectural intervention which has been brought this country, so had made such an interesting innovation where anybody, even email provider like Google has thought about being part of our transaction processing. Somebody like WhatsApp is now coming in, initiating, helping you to initiate transaction basically. So such an open, citizen-centric, decentralized, inclusion-driven kind of architectural intervention has made all of these things possible. And in all of those engagements basically, so we have these application, third-party wallets, the UPI payment ecosystem, we have the platform that you, there are a lot of platform which has integrated with, on top of the UPI, the bank account, the credit card. And in all of those exchanges, your identity, your credentials basically, your attributes basically do get exchanged basically. So ID, password, PIN, biometrics, mobile number, then sometimes the platform ID, the mobile number. So all of those attributes would be playing very important role and to take care or to probably take those security decisions basically, or to design the security in that ecosystem basically. And all this is possible. All of those transaction flows and different ways of transaction has been possible because the way this ecosystem is now becoming more disaggregated, decentralized, at the same time integrating to do one transaction basically. There are so many players, so many things, means there is somebody like, we have even mobile authentication, right? For example, Touch ID or some of the biometric authentication. So now that is being leveraged to provide authentication or access to payment transaction applications as well. So somebody like a mobile device provider to somebody like a providing email services like a Google comes with a Google Pay application basically, right? So let's try to understand if you really look at how the transaction processing happens, like there are these flows like how exactly you onboard the customer, then you do the transaction, then what kind of transaction happens. And in all of these, if you just look at the kind of data that get exchanged, if you look at the kind of identity that get exchanged, if you look at the decisions that will be made, and a lot of these decisions from the security privacy perspective is either authentication discussion, authorization discussion basically. And that is a core of a security of a entire payment ecosystem basically. So how exactly you are intermediating these, exchanging these, engaging these, and probably making the data flow around this is a very important part. And now in this ecosystem, all of these complex as well as the simplified, it may be architecturally complex underlying, but it is very simple for end user basically. It's very easy to do a transaction in a country like India, make a transaction because of the kind of innovation which has happened in terms of this unified QR code which has come into picture, and now somebody at a very remote place even a transaction of 50 rupees, 25 rupees is being made on a digital way basically. And all of this possible because things have made together, and all of these things, all of these possibilities are come together, and at the same time they have been providing very integrated way of initiating and executing transaction. So let's try to understand this evaluation in a very structured way basically. So if you really look at the way the financial ecosystem in a country like India, basically. So, right, for example, you have the major financial institutions like a bank, NBFC, insurance, mutual fund, and the stock exchanges as well. So, these are very significant institutions which are regulated entities, regulated by either by RBI, either by IRDA, either by the stock exchange regulator like a SEBI, basically, right? And then there are a lot of third-party payment processing equipment. They are also a regulated entity like a credit card providers, like ATM switches, Valiant, PPI, gateways kind of organization. So they had been extending these financial institutions to make sure that the payments are possible in different ways and different elements basically. Now comes very interesting thing. So the entire device and platforms, because the kind of capability that mobile has come up with, the NFCs that had come in that, the security element, the SCA, the lot of those hardware capabilities basically, the biometrics in the mobile basically. So we started now looking at this mobile and different platforms and mobile platforms to do a payment transaction processing basically. And for all of these basically, for the technology institutions, for the payment processing and for device platform, there are a lot of technology business services, and India is the center, global actual hub for all these IT BPO capabilities, and they have been providing those capabilities to these key players which are doing these transactions basically. And now on top of that, what is really happening is this ecosystem, and this is very important to understand here basically. So what is really fintech? So if you look at, it's a way, and as I was talking about the transaction processing, the way it is getting unbundled, right? Right from onboarding of a consumer to helping you to initiate transaction, enrich the transactions or decision making can be quick and risk-based and also intelligent basically, to process, helping you to process the transaction, and also after processing, managing that data basically, right? So in entire life cycle of transaction now, this is being now increasingly being either enriched, supported by the entire third-party ecosystem, fintech ecosystem basically. What they are bringing, so they are bringing the experience, they are helping you to segment and target better, they are helping you to serve your service transaction well, and helping you to even sell some of the services that you have. They are coming up with some of the advisor and assistant to do a transaction. They are offering you a lot of third-party APIs through which you can extend your payment ecosystem. They are helping you to manage documents. They are helping you to manage the regulation. They are helping you to manage the account basically. So all of those things that fintechs are being offering these capabilities, and increasingly the larger financial, bigger regulated entities have been leveraging these capabilities available. And why this is possible? Because of the technology, right? So most of these fintechs, you just go and see all these exhibitors, which is at the third floor. So they either would be leveraging those capability of RPI, the AI/ML, or big data, mobility, blockchain, cloud computing, AR, VR, IoT, biometrics. Some of them may be using presence and geospatial technology. So because of this technology, the fintechs and those innovations are now increasingly being enriched with that, and because of that, their ability to serve or to help you enrich, initiate, process transaction, and manage data out of transaction. And so even onboarding the customer becomes very easy basically. And that's why increasingly there's a tendency to make use of the fintechs to extend our entire financial services and financial ecosystem basically, and those have a lot of those things. So one is improve the scale and speed, and is one definitely objective, but other part is also inclusion. Is also, so some of these innovations are very important from the inclusion perspective as well actually. So this ecosystem and these fintechs have been the way they have been pushing the transaction. So then one of the important thing is, at the end of the day, all things are underlying basically, and for the user basically, for the who is doing this transaction, it's becoming very easy to initiate and make the transaction. For example, using UPI, Google Pay, or a MobiKwik or Paytm basically, it's very easy to do transaction. But when it comes to that, the underlying ecosystem should take care of security and privacy. Because if suppose you start relying increasingly on the user basically for their security privacy consciousness basically, then probably you would create a problem for the system basically. The reliance on the user, the cognitive burden of security and privacy on the user is one of the important things for the design of security and privacy. So because the way the transactions are rising, the way the complexity is rising, it's very, very difficult for even advanced user basically to understand, have comprehension about what could go wrong in terms of security and privacy actually. And that's why when you're designing security, when you are looking at the privacy design basically, you should make it sure that you are not putting a lot of burden on a user basically. In fact, regulatory ecosystem is also going for that way. It's increasingly making you or institutional or companies which are in the business of transaction processing more accountable for security and privacy actually. So entire this shift is happening. So if you look at GDPR, it talks about the accountability as a key principle. So somebody which is in business of collecting and processing information is made more accountable for the security and privacy basically. So what it means is that the design of a security and privacy should not put significant burden, and that is what is happening now with the OTP based transaction that we are putting cognitive burden on the user. And because of that, that's leading to a lot of challenges and issue in terms of the fraud basically. And that's why a lot of discussion are happening around this wishing fraud in the country like India basically. So how people end up sharing that OTP coming in, and there requires some user action for the security and privacy. So this is one of the important thing. Then we also need to understand the privacy issues, that it's not only security, so we need to also very good understanding about the privacy. What exactly is happening at a payment transaction processing level, which will create a privacy issues basically. So the way the sensitive information, now we are increasingly using the biometrics, so sensitive information about your biological parameters will be also captured here basically, right? Way you collect the information, the different entities that do come in terms of the collecting and processing information basically, right? And the way data is collected at different kind of instances and location basically. So and then entire vendor ecosystem where the data is flowing all across basically. So all that would be creating significant challenges for the privacy as well. So when we look at the privacy, you need to look at entire ecosystem, how exactly you distribute the ownership of privacy around this ecosystem, where so many players are coming together to make that transaction happen basically, right? So this is one of the important things that we need to address when we are looking at payment security, and this is one of the important policy interaction we discuss at a national level basically. We have been deliberating on some of those kind of possibilities basically, right? So when we look at the security and privacy, then I like to see what really happening, right? So at the Bluetooth level, at an NFC level, at a even for that matter, all the innovations are happening at a mobile level. So a lot of those technical standards are there basically, and those technical standards are helping you to really manage those transactions in a more secure way basically. A lot of cryptographic interventions are now being looked at, and a lot of standardizations are happening at technical level. We understand mostly the administrative standard like ISO 27000 and many other standards, but at technical level, those exchanges of the messages, at the technical level, those cryptographic operations that you do basically. So those are very important operations, and those are very critical operations that we need to be looking at when we are looking at the entire transaction ecosystem. But then the overall standard and the bodies have been really helping you doing this kind of effort quite significantly, but a lot of work needs to be done and a lot of research that needs to be gone into this particular thing. And then biometrics is another important area that we need to be mindful of. So now let's look at some of the security objectives and which needs to be adhered when you are looking at transaction processing basically. Which would be them basically? We talked about security, definitely adhering security is important part. We talked about privacy as well. We talked about the trust that we need to ensure, because that trust is very important for the digital inclusion, and more importantly getting people do more digital transaction basically. Trust is important. But entire ecosystem should be frictionless. It's very easy for somebody to initiate and execute a transaction. The user experience of doing transaction should be very, very important. That needs to be very enhanced user experience. The transaction process should be very fast. So we are talking about in 1 month almost 8 to 9 number of billion transactions basically processed by Indian ecosystem, and that number will still go high in the coming future basically. So the speed is important. The scale is also important. Ability to process those transactions in a 1 second is very important part, and that is very important security consideration as well. The flexibility is important. Establishing accountability is important. The non-repetition principle is very important. So all of these requirements will be very important to factor in when you're designing the payment ecosystem, basically. And then where we are now is basically, as of now, the systems are more human intervention driven, more siloed, more explicit in nature, basically. And what we are trying to look at overall authorization as well is more siloed kind of ecosystem, although that is getting too much converged. But the current thing, in terms of the way the payment ecosystem is happening, is increasingly becoming more like a privacy preserve, more like a implicit one, more like a removing the cognitive burden on the user, more like a bringing more risk-based kind of approach to the transaction processing, more like a taking care of the fraud in the way the transactions are being processed, basically, observing the transaction, basically. So entire authentication and authorization ecosystem is built in transaction processing in such a way that security principles are adhered, but at the same time the user experience is not compromised, basically. That's what the current and future of the security of a payment ecosystem will be determined, basically. So then comes one of the important things that we need to be mindful of. So when we talk about authentication, authorization, which is very core of our transaction processing, so there are a lot of those standards, right? EMV code, there is a regulatory standard, NIST, then there's OAuth. So those standards are now increasingly, FIDO is another important standard, which is basically, and which is increasingly talking about how these things can be worked in a more standardized way so that interoperability is maintained, basically. So that is for the authentication side. If we look at authorization perspective, then SAML, SOA, so those kind of standards are evolved, and those standards are increasingly leveraged to build those systems and have that in very complex supply chain driven kind of ecosystem, make sure that the transaction is authorized in each and everywhere, each and every stages, basically. So those standards need to be leveraged. And when we are doing this, so we also need to look at the technologies that are coming in the picture. So just look at the technology, basically. So the hardware level technologies are increasingly being there, and those who are getting leveraged. The mobile computing level, the NFC Bluetooth specific ecosystem, the entire cloud computing, the cryptography is playing quite significant role and would be playing important role, basically. The authentication, the SSO technology, cloud architecture. So those would be very important technology consideration that to be looked at. But apart from technology, the data is very important because we are talking about risk-based authentication, risk-based decision-making, security decision-making. So those data which will be very processed for the purpose of security and privacy and fraud decision-making, basically. So when you're looking at the technology to leverage for the making it security, the data that is being available, contextual data, that also needs to be looked at. And then authentication, authorization-wise, there are a lot of things which can be talked about in terms of the where it is exactly happening at hardware level, mobile level, software level. All of those things needs to be looked at. And then authorization level, how exactly things are looking at. And then on authorization, there are a lot of those technology, orchestration, the policy-driven, the XML data formats, the web federation, machine learning, API gateways. So all these is trying to put together. So this particular slide is what it's trying to do is basically how you leverage the standard, a technical standard as well as administrative standard, to build the authentication authorization mechanism by using technology and also by using the data that is at your dispense in terms of taking those security decisions, basically, right? So when we are looking at this, basically, so we could think about possible future of a security which we just talked about in the previous slide, which will be more very implicit, very invisible to the end user, but at the same time taking care of a security, privacy at a background level, basically, and make sure that those principles are being adhered, basically. So with this encapsulated in mind for the digital payment security, so let's look at one example. So this is I tried to put together this particular thing for the contactless payment system, basically, right? If you look at, we are leveraging this Bluetooth, NFC, RFID, the voice authentication, even now in future quantum as well, and how these entire payment actions and instructions and confirmations will be done. And for that, what kind of policy standards and data is being taken into picture, and all those requirements we just talked about, non-proliferation, privacy, and look at left side pay, what kind of structures and frameworks basically, right? So for that matter, there is NPCI, some of the guidelines which talks about the payment, contactless payment ecosystem. There are national guidance as well for the contactless payment ecosystem, the different entities that we just talked about in the previous slides basically. So this is just to make contactless payment ecosystem work in the country in terms of the security and how you leverage these policies, standards and data available for you basically. So this is the framework, this is understanding, this is a kind of framework thinking for security and privacy in a digital payment ecosystem basically. And then for make this all happen, so I will probably conclude my interaction here. For digital payment security to work basically, so we need to take care of this component, right? So one is the architectural component, the contemporary security protection that you need to be bringing into the payment ecosystem. Identity management roles and access needs to be looked at. The robust security, customer onboarding needs to be looked at. Robust authentication we just talked about is very important. The role-based ecosystem is very important. The secure deployment of payment application and application development is very important. The securing communication protocols, interfaces and API is very important. The mature integration of security and making it sure, because you are using a lot of third party. And those third parties are building those applications and giving it to you basically. So it's not only your own SecOps, it's also the development process of the third parties is also very important for you. The continuous vulnerability assessment is very important part. Then the disclosure, the vulnerability disclosures, all of these elements would be very important coming forward in terms of the ensuring the end-to-end security in the way the revolution that we see in digital payment ecosystem. So these are some of those things that we work at a national level in terms of shaping some of those national policy and also work with some of the members of our Data Security Council of India in the financial sector and payment ecosystem basically. So with this, I'd like to conclude what I want to talk, but if there is some time, I believe there is 1 or 2 to 5 minutes.
Yes, we do have time, sir. We can take the Q&A. Questions, anybody? Out there. Can you have the mic in there?
So most of the payment apps needs OTP as a second factor of authentication. And like you rightly mentioned, people may be scared of sharing OTP, or they may not be knowing the consequences of sharing OTP. So if not OTP, then what do you foresee as a second?
So there is some concept of a risk-based decision making for transaction basically. There are a lot of data available for you basically, so data can be processed based on the context that you have. And there are hundreds of attributes are available which can help you to take decisions basically, right? So now people are saying that the explicit way of authenticating transaction is creating a lot of problems because of phishing fraud and onslaught of phishing fraud that we are seeing basically. So alternates are being talked about in terms of how do you ensure the adaptive risk-based authentication by looking at all the signals and take a decision on that particular spot itself basically. A significant number of transaction can go for without OTP transaction basically, and European Union, many other countries have been experimenting with that. As RBI as well, up to 5,000 rupees transaction, RBI also allowed you to not to have OTP basically, right? Because there is now inherent trust on some technology at the ground level at NFC, on the chip level basically. Because of that, that is possible. But adaptive risk-based authentication is a way forward to make it authentication, security decision more implicit than explicit basically.
Thanks.
So my question was regarding, exposing the data you talk about. Now, regulator is compelling that you should have a third-party validation for each transaction. Now, in that process, now, we as a consumer or this thing, we share data with payment gateway in turn share with banks and all. So in all this process, or basically bank data, name, everything is shared. So what is that basically, who is the responsible for?
Yeah, so this is a very important question because the digitization and innovation possibility happens around data, right? And sharing of data is very critical to make sure that those possibilities are leveraged and those kind of a volume and scale that we are seeing in Indian digital payment is possible because of a lot of third-party ecosystem we brought in picture. So we may say that Google is helping us initiate transaction, but bank also need Google because Google has significant number of customers basically, right? Facebook has significant number of customers basically, or so is the WhatsApp basically. So they need each other, and that's why the possibilities of payments are basically possible. In all that, the concern of security and more importantly privacy is very important in this. How do you distribute the ownership privacy? And for that, the data protection regulation that government of India is trying to put together, so that will bring quite significant data protection regime, which will bring a lot of accountability, responsibility, and also obligations and liability. Unless we have accountability, obligations, and responsibilities and liability, there will not be a kind of a sense that will prevail there, basically. So the way to address is to have very comprehensive, significant, stringent data protection regime, and then also have a very competent enforcement mechanism, basically. So that could be a possible way that things would be seen. And also regulators are also trying to see how they regulate the third-party ecosystem, not directly, but through the main regulated entities, basically. Any other question?
Mike.
Thank you. Just a quick comment. I think you mentioned in the presentation that there's need for the fintechs to reduce the responsibility or the responsibility or the burden on the users of these products. So just you to speak more in terms of examples of the burdens that you are speaking to that should be reduced.
I talked about reducing the burden on end user when you are executing transactions. You're referring to that, right?
Yes.
Yeah. So this is very important question because what we experimented here, right? The kind of transaction processing that we are seeing in India and the regulation that we like to look at. So if there is a user action involved in taking security privacy decision, even advanced user may not have frame of mind every time. We used to do one transaction a week, but we are doing so many transactions per day, basically, right? Every transaction you may not have that frame of mind of security privacy. If you rely on me to take security privacy decision, then that is a problem. So your security design should be such a way that the user is not burdened with those kind of considerations. So you design security in such a way that, or privacy such a way that user cognitive burden is reduced quite significantly. So you shouldn't make your security privacy dependent on user action. So that's the basic proposition that I had been talking about. Hope I answered your question. Okay, then thank you.
Yes. Is this all? I cannot see any more questions. It was indeed great listening to you, sir. Thank you very much for being here with us, and thank you so much for the presentation. Everybody, round of applause for the sir. For sir. Thank you. Thank you, sir.
Thank you.
All right, everybody. We'll start our next presentation after 10 minutes. That's 12:50. That's again a masterclass. But I'd like to tell you all that we have an app on your iPhones and all the Android phones, which is Global Fintech Fest. So please download that so that you can network with your fellow delegates, right? So do not forget it. And I'll see you after 10 minutes then. We'll be starting with the next masterclass, which is the Tech Masterclass. It's about resilient technologies, and it'll be taken by the head of Chaos Engineering, Harness, Uma Shankar Mukhara. right, welcome back everybody. So now we'll be starting our tech masterclass on resilient technologies. And before we go ahead, I'd like to mention our partners. So our co-agenda partners are Lyra, Paypoint. Our session partners are Feedzai, Bureau.id, Rico. Our gold partners are Jakarta, Payten, Innovity, Beams, VC. So now everybody, this masterclass, as you can see, it's on resilient technologies, and I would like you all to give a round of applause and welcome on stage our speaker for this presentation, Head of Chaos Engineering Harness, Mr. Uma Shankar Mukhara.
Yeah. Hello, everyone. Thank you for coming over here. I'm Uma Mukhara. So let me just talk a little bit about myself and what I do at Harness. I'm Uma Mukhara. I head Chaos Engineering at Harness. Harness is a modern software DevOps platform. We have technologies like CI pipelines, CD pipelines, cloud cost management, feature flags, of course, chaos engineering, et cetera, et cetera. I also have a history of founding a couple of other companies, Chaos Native, where I developed a project, open source project called Litmus, which is a cloud native chaos engineering project that helps increase reliability. And before that, I was doing mostly open source technologies using cloud native storage services. Litmus is now a CNCF incubating project. Some of you know that it's one of the popular projects to do chaos engineering in a cloud native way. So what is it that we are going to talk today? Right, the topic is resilient technologies. There are many things that we do to make our business services resilient, and you do very good, highly available services you deploy, and irrespective of that, you still have reliability issues. So what are some of the things that you can do to increase the reliability of such business services, and what are some of the technologies, or a specific technology called chaos engineering, right? And before that, I will talk about why resilience is so important, and generally, what is resilience, reliability when it comes to business, right? So it's really important to understand what is resilience or reliability in a very common terms, right? So it's not like a rocket science. So people talk about resilience or reliability in many different ways. One of the ways to talk about resilience is to relate with outages, right? How many outages you are seeing in a business service. Generally, when something happens, people are not going to say that, the service is not resilient. People are going to say that there's an outage, right? So things are not available. That's primarily how your business service is talked about, right? So it's like they're always inversely proportional. When you don't see many outages, that means you're very resilient. People on the inside of the company, we always say how much reliable you are, right? So the SLAs are around 99.99, 5969. This is how we measure. But end users, consumers, measure your reliability based on how much time you're not available, right? How many outages you are seeing, and how reliable you are is basically how many outages you're not having, right? So when outages are more, you are less resilient. So the idea is to reduce the outages or reduce the amount of time a particular outage has gone through, right? So that's really how you can actually tell your end users that you are resilient, right? It's very important to see that, because when you're building an application or when you're managing a service, you always try to make it, it's running all the time, but you actually never think about when an outage can happen or how fast the outage can be retrieved back or you can recover from outage, right? So in this session, I'll be talking a little bit more about outages, but that really means that you're talking about, improving the resilience, right? So if you want to have continuous resilience, you want to make sure that your services are available all the time. That really means that you have to continuously make sure that there are no outages, right? So anytime you relax, an outage can happen. That's really how you provide continuous resilience. So this is like a continuous effort. Anything can happen at any time. So outage can happen anytime. That's really the reason why you have to continuously focus on resilience, right? So this is the fundamental way we need to think about resilience and outages. There are new practices that are being started in the last few years. The most common thing that you see is SREs, right? Site reliability engineering. You see, earlier we used to call IT admins, database admins, ops, but there is a new science that's becoming common called SREs, right? And SRE practices are being instilled in almost every company that's managing business services through IT, right? So SREs their main job is really to take care of the services being available or reliable, but really what they try to do is avoid outages or recover from outages faster, right? So that's really what they have to do. And why this outages, why resilience is so important is because, in order to talk about resilience importance, you can also say that why outages are bad, right? So outages are always expensive, right? Some of the examples you can see, one is like, these are both related to Fintech or finance market. So there was a pretty big outage at Wells Fargo that really resulted in significant monetary losses, and it can sometimes cause poor user experience, especially in the current fintech world. We're all going through the UPI transactions, right? So what happens if UPI is down for an hour in India, right? So your probably country's pride is affected. The user experience is so bad that everything stalls to a large extent, right, for that 1 hour, right? So it happened around April timeframe, right? So UPI services were down, and there was, all over Twitterati was talking about UPI services being down, right? So it's very important. It's not just monetary losses. It could be poor credibility of your business can get affected. You're basically losing your market share to your competitors. Users are moving away from you. The more outages they happen frequently, your users are going to move away from your app to some other platform, right? So they're expensive not just in financial matters, but overall retaining the customers with you, user experience, right? So now that we established resilience and outages are really related, why do they happen? This is also kind of common sense, right? So before we go into a bit more tech. So, people continuously invest in making system resilient. Nobody wants to deploy a system where, I know there is going to be a failure when something happens, right? Outage. Before you deploy a service in production, you are almost sure that you have taken care of everything to make your system highly redundant, so you believe it is resilient. But there are continuous factors that change all the time, right? So you test in your prod, you cannot really do real testing in your prod. You can only do pre-prod or stage or dev environment, right? But in production environment, there are continuous changes that are happening. So what are some of those changes, right? So load is something that you can never match in your regular testing, right? So a bulk of users come and they change, the amount of load changes everything in your production system, right? So you can never reproduce that issue in your lab environment or user acceptance test environment, right? And we have a very good DevOps practices everywhere, primarily because you want to push software changes, right? So the more active systems, well-managed systems, they're continuously deploying software changes, right? So you're always changing your software, the amount of load is always changing. So this is a parameter why outages can happen, right? So when load increases, you don't know what you're dealing with, and something gets broken, and then that's the reason for outage, right? So similarly, software changes, we'll talk about that a little bit. And less often is these two kinds of changes, network issues. You have highly redundant networking systems, but still, it's not that networks are gone totally nowadays, but slownesses are, common, right? So all of a sudden, your network is slow by 20%. So that can affect your end user behavior, right? And database storage issues, they need to be continuously managed, irrespective of how well you manage. These databases can start acting, a little slow when databases are full, or they're very complex systems. So things can happen in terms of total outages of the databases or slowness, right? So the other one is even more less common is hardware issues, right? Hardwares are good, they're all redundant, but still, you can expect the network switch to be gone anytime, or a network port to be gone anytime, or entire data center becomes unavailable, or a zone becomes unavailable. So these are, though less common, they're still practical. So the other important thing to understand when you're dealing with resilience is the Murphy's Law, right? You can say that it's logical or illogical, right? So it says that if anything can go wrong, it'll go wrong at some point of time. It's guaranteed, right? So anything can go wrong. So your business service outages can happen, so they will happen. It's a matter of how many nines you have in your reliability equation, right? No matter how much you do, you're still going to be facing an outage. It's a matter of an hour in a year, or a minute in a year, or 10 hours in a year, right? So that's a matter of. So we should be thinking about outages are totally not avoidable, but you can try to deal with them as much as possible. So you have to keep that in mind when trying to deal with reliability, right? So now that it's kind of an antithesis, right? So I'm saying you cannot avoid outages, right? They will happen because Murphy's Law says. So, but you're trying to improve the user experience by reducing the outages, or how fast you recover from outages, right? So how do you increase the resilience, or how do you reduce the outages? Again, it's a common sense thing. You have to do more and more testing, more practical testing, right? We're all doing as much testing as possible, but what more can you do? That's the new technology that we're talking about. So before we go into this topic of what technology can you use to do this proper testing to reduce outages, let's talk about this apps deployment pyramid, right? So you have a pyramid where most of the people are operating at your app level, right? You're always seeing your app, and your developers, your testers, your SREs, they're all looking app very closely, right? But that's still a little bit of less, there's the smallest piece of software that you write, even though, that's your focus most of the time. And at the bottom of the pyramid is you're running on either Linux or other operating system, or on Kubernetes, right? You think that's resilient because it's well tested, you've been running it, and you never actually focus on that as a developer, right? So this is the impact of outages. If your app goes down, it comes back. But what if your data center goes down, right? The impact of outage will be very, very high as you go down the pyramid, right? So similarly, API servers, message queues, and caching services, these are all thought to be reliable, but if they go down, your impact will be high. Even though you have them in redundancy, both of the redundant servers can go, then your impact is very, very high. So as you go down the pyramid, the resilience rate reduces significantly, or outages, impact of outages increase significantly. So let's see, how people think about our regular software engineering practices or SREs, right? So we all focus on testing our app. This is what we regularly do. How many SREs or how many people test the data center some hardware going down before they say that, I'm rolling out my application into production, right? Very, very less. But if that happens, the impact of outage is the highest, though we test that to the least, right? So that's very important to understand. The most impact outage is something that you test less, and the least impact is something that you test always high, right? So we need to reverse in order to deal with resiliency. You need to change your mindset. If I'm talking about reducing outages, let's tackle the highest impacting outages first, right? So are we doing that in our regular DevOps? Probably not, right? So what's the technology that helps us, or the mindset that helps us deal with it, right? The technology that we are talking here is chaos engineering. Chaos engineering, again, is not like a new tech that people do not know about, or it's not a rocket science. It's a very simple common sense thing. We always assume that, things will not go down, and we are always in a hurry to say that, we lost a lot of time, let's ship it, all right? So that's, we're in a hurry to do that. My test criteria is I'm finishing my functionality test, stress test, performance test, let's ship it, right? And chaos testing is a modern practice, and SREs are becoming very, very common. Site reliability engineering is coming with a pure focus of how to make things reliable. So chaos engineering is one of the tools that SREs are deploying to make these things happen. And as you can see, chaos engineering really starts at the highest impacting parameter, right? So where do you start testing the chaos testing? You really start at virtual infrastructure or a physical infrastructure, and then as you go up the chaos maturity level, you go up the pyramid, right? If you are resilient against most of the hardware issues, then you are already taking care of the maximum impact that can be occurring, right? So that's really what it is. So that's a kind of an introduction to why this resilience is important, and how outages can be avoided. Now let's actually talk in the next 5-10 minutes. How do you actually do that, and what are the tech that's available? So this is like a CNCF landscape that's available. The first two are incubating, that means more mature open source technologies. Litmus, I was the creator of that project and still an active maintainer. There are other choices for you, including the commercial choices like Harness Chaos Engineering or Gremlin. These are some of the enterprise supported technologies for enterprises to adopt chaos engineering, right? So you've got many, many choices to start chaos engineering. Like 5 years ago, you have Netflix's Chaos Monkey. That's the most common thing that talked about. And it's not like a supported technology. You can fancy the technology, you can learn, you can feel good, and there's a lot of adoption. But now the need for chaos engineering has increased so much that there are well-supported enterprise solutions, just like any other technologies that are enterprise supported, right? For chaos engineering, you have a good tech landscape. So And also one other common misconception is, hey, I'm also doing chaos testing. I'm doing failure testing. What is this new thing, right? Chaos engineering is nothing but you try to break some stuff and then see if it works or not, right? People try to downplay, so that's where I'm trying to explain here. Failure testing, you can always argue that it's a part of chaos engineering, but it is not the real chaos engineering, right? Failure testing is more of the engineering teams try to do a negative testing, and they're always ad hoc, and engineering test teams will not have access to the real prod environment. So whatever they do is not real failure testing. Even if they certify, that may not be like really valid later on, because in production your environment is totally different. And chaos, the SRE teams or ops teams also focus on chaos testing. More of a reactive approach. We had an outage, and then they do the root cause analysis, and then, hey, let's do some chaos testing, and they put some 5-10 test cases. Let's continuously do this failure testing from now onwards, right? You can call that as a chaos testing, not chaos engineering, right? Chaos engineering is really about making it as a practice, a more discipline of introducing faults and gradually improving your test coverage with respect to faults, which I'll talk about. So chaos engineering is always result oriented. You should be able to say that I am 50% resilient against the possible faults, right? Or I am resilient against 50% of the possible faults, right? And I have a plan to become resilient against 60% of the faults in the next quarter or 2 quarters, right? So you are basically looking at the bigger picture, and you are going after a result-oriented approach using introduction of faults, right? So that's what gives you a real good return on your overall investment, right? So let's talk about chaos engineering as a technology, right? So before you start thinking about chaos engineering, the simple definition for it is 2 parts. People always think chaos engineering is breaking something, but there are 2 parts to it. Injection of a fault is one thing, but what should happen when a fault is injected, right? So that's called steady state hypothesis validation, right? The steady state is something that's very, very important to understand, and it can change from time to time, right? So for example, when there is 10% degrade in network, what should happen, right? So 10% degrade in network, in the normal conditions, nothing will happen. Things will move on. You're good right now. But there are about 100 million transactions happening on a big Boolean day or something like that. 10% network slowdown can happen, can result in a significant business loss, right? So you lost a lot of transactions happening. So the steady state hypothesis conditions need to be clearly defined, most likely in terms of percentage of losses or percentage of transaction drops or amount of latency that you should expect, or a number of transactions, minimum number of transactions that should pass, etc., etc. So chaos engineering mandates you to think in terms of what's a written form of my business steady state is, right? So you have that very clean, clearly written idea of what those steady state conditions are, and then you start thinking about breaking things, right? Injection of faults. And when you inject a fault, you compare it with your already assumed steady state. If it's all good, then you identified a resilient scenario. So you can be sure that if such a fault happens, most likely the outage will not happen. If it happens, if it's not same as the steady state, at least you found a weakness. Now that you found a weakness, you can go and act upon it in a proactive way, right? So that's really chaos engineering. People think about it as, oh, that's it, right? So, but chaos engineering is really a culture, right? So people usually do not budget in their DevOps, strategies. People say, I have engineers to build pipelines, I have engineers to manage pipelines, I have engineers to monitor the deployed services, etc. But it's started to happen now. Chaos engineering is being budgeted as part of the DevOps culture, right? So it is a mindset also. There's been some, kind of a theory that usually people are scared of introducing chaos because they're already in chaos, right? So outages are happening. How do you reduce the outages? Probably you're causing more outages by breaking things proactively, right? So it's a mindset thing that people need to understand, and it happens over a period of time, right? So there needs to be a sponsorship of the management that, okay, we have to get better, so let's actually look at the reality, let's start breaking things, right? So I will sponsor the investment to do chaos engineering. So that is a cultural shift that's needed, right? And it happens in DevOps, and it's a step-by-step thing, right? You never go from being less resilient to more resilient just by doing X things, right? It's a step-by-step process. And the other thing is to understand it's a practice, right? So practice means, we talked about results. What are the results that I should expect? What are the investment I should make? Who are the people that I should hire? And, is there a overall strategy for it? Timeline, what are my goals in the next 2-3 quarters, etc. So a practice has these goals, and then you go from there, right? And it also goes through a maturity cycle, right? Chaos engineering, I'm practicing at a beginner level or a medium level or at an expert level, right? It goes through the maturity cycle. And chaos engineering never stops. You can never say that I'm done with chaos engineering, because the moment you say you're done with chaos testing, there are possibility of new changes being introduced, and there are new outages that can happen, right? So your DevOps cannot stop. Similarly, your chaos engineering cannot stop. That's why it needs to be thought of a new culture, new investment, and DevOps teams need to budget for chaos engineering if you're really serious about taking resilience, on a higher scale path, right? So some of the parameters that you need to think about when doing chaos engineering is blast radius, right? You always try to start with small faults that do not affect too many things, and slowly you get comfortable, for this amount of fault radius, I'm okay, so now I can increase, right? So one parameter is start slow faults, slow affect blast radius, and then keep increasing it. The other one is whenever you find a resilient test case, you automate it, right? So you're done with it, so that there is no new breakage that is being introduced or being leaked into your prod. And so this month you have 100 test cases that are automated. Next quarter you have 100 more, right? So the amount of test cases that you are automating will also keep increasing, and the blast radius also keep increasing, right? So through this, what you're really doing is a chaos coverage continuously increases, overall resilience scores also increase, right? And this is what we just discussed. You take one scenario, you do it well, you identify the steady state hypothesis, you test it, and you automate it, and then move on, right? Move on from infrastructure layer all the way till the application layer, right? So this summary of it is chaos engineering. You really start at the bottom of the pyramid, you go all the way till the top, and it takes time, right? It needs planning, budgeting, and effort, and you go through a maturity cycle, right? So at Harness, we advocate our customers saying chaos goes through 4 different maturity levels, from test or start to automate to scale to expert, and at the fastest rate, you're basically taking about 2 years from start to being an expert, right? So start is really nothing but you started playing with chaos as an idea, and then you have 1 or 2 people playing with it. Being an expert, at expert maturity level, there are faults being automated. You don't know when something is getting pulled, but they're always getting pulled. You are never seeing any outage or to a large extent, right? So in an expert chaos implemented system, you are seeing faults being introduced all the time, but outages are, very minimal, right? So that's the maturity model. So you have various options. You can start with Litmus, or Harness Chaos Engineering is powered by Litmus. It's an enterprise supported product from Harness. So you can start with any of these tools, or you have other choices as well. So this particular product comes with a lot of ready-made, ready-to-use experiments which you can use. You don't getting started with chaos engineering is very, very easy. You got about 75 types of faults. So at a start level, you can do basic chaos engineering within a week, right? Or within a few weeks, right? You got most of the things that are readily done for you, right? So just to summarize, what's the real return on the investment if you are investing chaos engineering as a resilient technology? You will have, the first thing that you get is how fast you can reproduce a failure, and the next one is how fast you can recover. Your recovery times are going to be drastically reduced, and overall your faults are going to be reduced, and it means that the distance between the failures will increase, right? So these are some of the examples of how a particular product, Harness Chaos Engineering, works. With that, I think we are done with the time. Let's take some questions.
Questions?
Hi, good afternoon.
Hi.
So if we can go back to the slide where we show the pyramid for chaos testing. So we are saying that we are starting with the chaos engineering starts from the cloud, data center, physical and virtual infrastructure. So what exactly do we do, assuming that all of our these products which we are deploying, these are already test based. I mean, they are baselined actually.
Yeah.
So then what exactly do we want to
So to repeat the question, thank you. It's a good question. To repeat it, you're saying we have to start chaos engineering at the bottom of the pyramid, where it's all about cloud infrastructure, where we think cloud infrastructure is already resilient, they're all baseline. So what is it that you can do by breaking something, right? So what does, let's take AWS, right? So what they give is EC2 VM, right? Or you can get a container, right, as an infrastructure. Or you can also get a database service, RDS, et cetera, right? Or you get a VPC, right? This is the infrastructure they provide, and they're also not going to say that they are 100%, if you read those contracts, they are resilient to a certain extent, right? So as an application deployer on top of this infrastructure, you go and practice chaos engineering by actually killing that VM or killing that container, or making that network slow. Instead of waiting for that network to become slow at some point of time, you have the capability to test it right away by actually losing that network forcefully, or by making it slow by X amount of percentage slowness, right? Similarly, you can do EC2 kill, you can do ECS VM kill, or a container delete, right, or container kill, or you can introduce the CPU hog, right? So, so there are various types of faults, right?
Thank you.
Any other question? I think we're done with the Q&A. Thank you very much, sir, for the presentation. Thank you very much.
All right.
Now, everybody, next masterclass is about fintech regulations, and we'll be starting in 2-3 minutes. All right, so here we start our next masterclass, which is on fintech regulations. And now it's time for me to invite on stage the speakers of this presentation. Everybody, let's welcome on stage. Firstly, the partner, EY India, Hasina Chil, and tax partner, EY, Keyur Shah. Everybody, I want you all to please welcome them with a round of applause. That goes without saying. Thank you. Yeah, a little extra energy in the room always helps, you know. Okay,
Super.
over to you, presenters.
Thank you. Thank you. Good afternoon, everyone. So the topic, obviously for today is fintech regulations. And frankly, if you ask me, with all the recent activity in terms of the number of guidelines that are issued or circulars, notifications by the RBI for NBFCs, for payment system operators, I think a 30-minute slot or a 40-minute slot to discuss fintech regulations is going to be a little difficult. So we're just hoping that we're able to do enough justice to this. The idea was to give you at least a fair overview of what are some of the key regulations that impact fintechs, and obviously impact fintechs indirectly from a regulatory perspective because they are not regulated entities per se, but give you an overview of how fintechs would get impacted and try and take as many questions as we can. So with that, Keyur, over to you.
Thanks, Azina. Just a little bit of introduction. Both of us are part of the financial services tax practice at EY. So that's us. So, I mean, if we just go to the first slide. This one works. We've just tried to plot what we saw was happening within the fintech landscape in the recent past. So even if you look at the number of fintechs we've had here is more than 7,300. We are third after US and China. Interestingly, if you look at the number of digital payments which are happening, we've surpassed the whole world. We are much, much larger than even the US in terms of digital payments. So to that extent, we've made huge strides as an economy. If you look at the kind of funding which has happened on the fintech side, and if you look at payments which are being, fintech payment providers, more than $4.79 billion have gone into that space. InsurTech, which is another large space which is coming up from a fintech perspective, we've seen more than $820 million go there. And then obviously there's fewer players there, so on the newer banking side, around $180 million has gone there. And therefore, as we see the regulators also wanting to have far more play in this area. Obviously, as Hasina mentioned, there is no way they can regulate, or as of now, they don't regulate the fintech players because that would be beyond the remit of what RBI can currently do unless there is a change in the way they regulate stuff. And therefore, most of the regulations as we see today are being made applicable to the regulated entities, which could be therefore to that extent your NBFCs, banks, insurance companies, insurance intermediaries, so on and so forth. So that's how we are seeing the regulators trying to regulate in some form or shape this industry. If you look at the key guidelines which have come out in the last few months, one obviously, and where we'll end up spending a few minutes, is the digital lending guidelines, which the RBI released fairly recently. There is a lot of action, discussions we've seen around these guidelines. Before that, RBI released one circular around crediting wallets, where they've said that PPI players cannot directly credit the wallet of the borrower. You have to go through so that one thing which was changed. There were master directions which were issued on debit and credit cards. Again, RBI has so far only allowed 2 NBFCs to issue credit cards. Hopefully they will allow a few more. That was the idea behind the regulations. We have not seen any approvals come through so far, but these regulations are again out and we need to see how that pans out. Earlier or late last year, the PA, Payment Aggregator, Payment Gateway Guidelines came out. Right. Again, that is something which a lot of applications were made. The few approvals have come through. We'll see again, how that landscape evolves. There is stuff around the IFSCA, which is the gift city. So I don't know whether people would be familiar with this whole concept of gift city, but the government of India has set up a separate zone within Gujarat, and it is regulated by the IFSCA authority, which essentially gives you the ability to have a dollar-dollar trading economy or trading system. And that is the IFSCA authority. We'll try and cover that also a little bit in detail in one of the slides. Going to the first most important discussion point which we've been having as EY for the last few weeks is around the digital lending guidelines. Can I just take this? Yeah. So obviously there was a working group which RBI had set up, after which a press release was released, and then finally the guidelines came through. There were many aspects which impact the fintech ecosystem if you are in the lending business, which get covered by the digital lending guidelines. We've tried to highlight a few of them. Obviously, there is a lot of discussion which is happening around this, a lot of submissions which are being made by various stakeholders on these regulations, and hopefully we'll see some clarity. The biggest issue obviously, and which is the last point here, and we'll just try and cover it up front because that we've seen the most questions around, is on this whole FLDG piece. Obviously right now what the RBI regulations say is that the securitization guidelines as prescribed by the RBI would apply to all forms of FLDG arrangements, especially with the context of synthetic securitization, which makes it a little complex in terms of how FLDGs would work. Obviously the question which is asked at times is that therefore is RBI saying that is FLDG prohibited? At least our thinking as we speak today is that FLDG is not something which is prohibited. If they wanted to prohibit it, they would have said so. So therefore to that extent it doesn't seem to be prohibited, but it comes with significant amount of constraints. The other, and I'm not necessarily following the sequence here, issue which is there is with the context of sharing data. Again here the RBI is saying that all the data which is collected by the regulated entity would reside with the regulated entity. It can share certain data with the LSP, which is the service provider, but again the custody of all data has to be with the regulated entity. Also the kind of data which can be collected is restricted under the guidelines. It says that when you are granting the loan, there may be certain things like you need to access, like the camera of the person of the borrower, or the microphone of the borrower. Again, only a few things can be accessed. Everything else which you need to access or you need more data around, you please take the approval of the borrower. So that's what we are being told. Again, this stems from all the controversy which we were seeing around misuse and abuse of data collected when loans were granted. So it seems to be stemming from there. So they have significantly curtailed the access of data to the LSPs, and therefore they want the regulated entity, which could be your NBFC or the bank, to be held accountable for anything which happens around data. Also on loan servicing and repayment, what we are told now is that all loan servicing, in the sense all disbursement and recovery of loan amounts, have to happen in the borrower's account. Obviously, if you have a payment aggregator in between, then the payment aggregator can disburse a loan. But having said that, as far as recovery of a loan is concerned, again, there is lack of clarity whether a payment aggregator can get involved or not. There are certain exceptions, like for example, if you want to make a direct payment to the vendor's account, again, that seems to be something which at least we believe should be allowed. Because when you make a payment directly to the vendor account as a lender, you're not directly making a payment to the borrower's account, you're making a payment to the vendor's account. So it's different. But we think that some of these things should be allowed within the essence and the framework of the guidelines.
Some of these points were issues with the press release. Hopefully, after that, when with representations that were filed,
Right.
at least this particular point got clarified in the guidelines.
The other part on buy now, pay later, again, they've said that all buy now, pay later kind of transactions would need to be reported to the credit bureau. So that again makes it, the idea again seems to be that you are able to track what is being lent. Data is being reported to the credit bureau. So there is some method in this madness. So that is again what RBI seem to be wanting to do. I think we've covered all collection. Yeah, I think we've covered this. Hasina, you want to cover the next slide?
Do you want to take questions or take that at the end?
Should we do questions at the end, or should we do
I mean,
questions?
Happy to just make
questions
interactive
now
if you
also, whatever.
think so.
Technically, we're doing it in the end, but if anybody has...
If anybody has questions on the digital lending guidelines, we are happy to.
Okay, super. Okay. I'm ready. So moving to the next, the next set of regulations that impact fintechs. And again, this did cause a little bit of stir because there were fintechs that needed to revisit their models, their operating models, the business that they do, separation of activities in various group companies, etc. Is the master directions on credit cards and debit cards. Now, two aspects there. One, and that didn't come out by way of a regulation, but did come out by way of a letter by the RBI to a lot of non-bank PPIs that credit lines into PPIs are not permitted. And sorry if I'm going with the assumption that concepts of PPI is something that's known to the audience. But if at any point of time you want me to stop and explain some of this, please feel free to do so. So again, when they send this letter out to non-banks on credit not allowed or credit lines not allowed into PPI, and you would be aware that for certain entities, their operating model largely had to change because the model depended on the fact that there was credit line that was passed on into a PPI or a wallet. And to that extent, RBI's whole thinking around this was for a PPI. A PPI is more like a payment instrument and should be used as such. A PPI, especially in the form of a card, in a card form or a card factor, should not be the one that is initiating a loan transaction, and which is where they came out with this particular letter. Now, equally so, what we're hearing is that, while this is only in the form of a letter and it's issued to all non-bank PPIs for now, what we do hear is that there have been conversations with, some of the banks that did provide this facility to discontinue this product. And I think we all must have seen this in a lot of newspaper articles, heard that from a lot of industry folks, as to some of the banks get impacted as well. So that was one major change, especially from a PPI perspective that happened. Moving to credit cards and debit cards, the first point being on NBFC's ability to issue credit cards, because as of now, the law provides that banks issue credit cards, and that's almost without really getting, you need some specific approval, but largely banks are allowed to do credit cards. When it comes to NBFCs wanting to issue credit cards, necessarily has to be with a specific RBI approval. And to that extent, what Keyur mentioned earlier in the presentation is that there are two NBFCs, SBI cards and Bob cards, that have the ability or have an approval to grant or issue these credit cards, but the approval hasn't been granted to any other NBFC. And this has now been a while. And the regulation of NBFCs needing approvals was always there in the master directions. So to that extent, in the revised master directions, there isn't really a change. NBFCs still need an approval. The eligibility criteria for NBFCs still to get an approval is 100 crores. That remains constant. But what the RBI has done in these guidelines, which are applicable to banks and NBFCs, is brought out a lot of other aspects which were otherwise applicable to banks. So they've spoken about, how, say, for instance, the operational flow should work, how the collection of data should work, how closure of cards should work, what kind of charges do you charge, etc. So they've brought out a lot of these aspects now in the regulations. So we are hoping, we are aware again that there are some NBFCs that have already filed an application. We are hoping to see, some approvals come through, but, obviously that depends on the entire scrutiny and due diligence by the RBI. So one is that on the critical aspect. The other critical aspect that was brought about in these regulations was the role of a unregulated entity, especially when it comes to co-branding of credit cards. So co-branding of credit cards, if it's between an NBFC and a bank, then that again needs RBI approval. And in the regulations, it's very specifically mentioned what should be the role of the NBFC and what should be the role of the bank. But when it's an unregulated entity with a bank that's, co-branding and issuing the cards, that does not need an RBI approval. But what RBI has reiterated in these guidelines, and this time to be strictly followed as well, is the role of the unregulated entity. So they've said that the role of the unregulated entity has to be limited to marketing and distribution of these cards, and to that extent minus that initial point of contact that the unregulated entity has with the customer. Post that, there should be no services that are to be provided, and there's no involvement of those unregulated entities in these transactions, credit card transactions, should not be permitted. So, it should kind of be divorced. The unregulated entity does the marketing, does the distribution, but post that is not involved in any manner. And to that extent also restricted the data sharing and data storage. So today, if I take a co-branded card, the co-branded partner, which is the unregulated entity, may not really get all the information on my usage of the card. Now, obviously, to some extent, that's essential because there may be cashbacks, there may be refunds, there may be, other offers. So RBI said that is kind of fine, but otherwise, transaction-related data between the co-branded partner and the bank is to be restricted. They've spoken about storage also not being permitted, so that's again an important criteria. Some kind of screening between the two parties. So today, if I have a particular app where I'm required to, I would ideally want that when I log on to that app that I can see all the transactions that I have done. Some bit of that may potentially be permitted, but otherwise no sharing of transactions or storage of information. So what this has resulted in, if you largely see, is for people to relook at their operating models and see if there's a better way to do it. Do it in a manner that, what is the ideal way to do the business? Do you use a non-card factor? Do you have point of sale credits that are available by way of tie-ups with merchant aggregators or even some of the fintech partners? Because again, any kind of credit into the credit cards or until an NBFC has a credit card license, that is now made fairly restrictive by these guidelines.
Next slide.
Yeah. What we've covered on this slide is largely again for fintech entities, and like we've been discussing, fintechs per se are unregulated. They're kind of indirectly regulated because they work with regulated entities. So they are required to comply with any of the outsourcing guidelines because the NBFC or the PSOs would need to comply with it. They do comply with code of conducts of banks and NBFCs, but not directly regulated. But at the same time, a lot of fintechs and a lot of conversations that we have with clients is fintechs wanting to move into the regulatory space as well. So say for instance, a fintech wanting to get an NBFC license to enable them to do the lending as well, or fintechs wanting to get into the payment system operator license, which could either be say payment aggregators, which could be PPIs, which could be WLAs, the white label ATM and the likes. So what we've tried and covered here is two aspects, one from the FDI policy and the other is the current approach of the RBI, especially from an NBFC perspective. So what RBI basically did is, or rather maybe I'll take the FDI point first. FDI, foreign direct investment into a regulated business is 100% permitted under the automatic route. So an investment, foreign investment into an NBFC or a PSO, that is fine, that does not need a government approval, unless the aspect that we've mentioned is that if the investment is coming from a country which shares land border with India, China, for instance, and again, we've heard enough buzz on that. So any investment that comes from China into an entity, whether regulated, unregulated, otherwise, needs government approval before you actually can make the investment. Fortunately, and while it did take a while, but we are now seeing approvals come through. So that's one. Two, that if you are making the investment in a financial services entity, but which is unregulated. So just maybe as an example, let's take a situation where you are an NBF, where you do carry out some kind of loans, but you don't meet the 50-50 test, for instance. And to that extent, any investment that's coming in. So say for instance, if your loans is more like a treasury function, not really a business activity, and you have some investments that are coming in this entity, because you are also carrying out some kind of unregulated business in that particular entity, but you otherwise don't need a regulated license, so you are a non-NBFC, then the guidelines do provide that you have to go to the government to get an approval before the investment is made. And so to that extent, the guidelines provide for both. Regulated entities, 100% is allowed. Financial services activity in an unregulated entity needs government approval, or if it's investments that are coming from countries that share land border with India. The second aspect that we've tried to cover here is where you talk about any payment system operator or NBFC, so any regulated approval that you need. What RBI has provided by way of notification is that any investment of more than 20% that's coming in from a country which is a FATF non-compliant jurisdiction. So currently if you look at some of the non-compliant lists, it will be the likes of Philippines, Cayman Islands, Mauritius was in the grey list, but now it's out of the grey list, or even Dubai, so UAE as well. Yeah. So if there is investment that's coming into a regulated entity, which is an NBFC or a payment system operator, directly or indirectly of more than 20%, then that's not permitted. Unless you're an existing regulated entity and these are your existing investors, then more investment is fine. But otherwise, if you are not an existing investor, not an existing regulated entity, more than 20% is not permitted. So that's an important criteria, because again, with a lot of NBFCs especially, or even PSOs, what we've seen is that we have some of these large private equity funds that make investments, and some of them do have their pooling vehicles in Cayman. So to that extent, it's important to see that where we are looking at an NBFC or a PSO license, who our investors are not only the immediate investor, but right up to the ultimate beneficiary. So that's one point. The other point, and that's more like an unsaid rule of the RBI, but we've seen them apply that pretty consistently across applications, is that where you have foreign direct investment that's coming in, RBI now wants to, and earlier as well, but they do wish to do a diligence on every large shareholder in the company. So for every large investor, and again, there's no prescribed limit of large, so we may think, okay, 50% is large, RBI may think probably even a 20% more could be a substantial investor. So for every large investor that comes in, especially if it's foreign, RBI would want the foreign investor to either be a regulated entity or be a listed company. And if it isn't, then RBI's ability to do diligence on that investor is restricted, because it's a foreign entity, right? You don't have, as RBI, they do not have too much data around that entity to be able, data that they can gather around that entity to do diligence. And so in absence of being able to do diligence, we've seen a lot of applications that have got, I wouldn't want to use the words rejected, but returned in RBI parlance. So again, that was the other aspect that we wanted to cover here, that especially for fintechs that are looking at broad basing into either an NBFC role or a payment system operator loan, these are aspects that we need to take care of, or we need to evaluate from a structuring perspective before we kind of even bunk in the application.
Sorry, I'm very conscious of time. So we had 2 slides left. On the whole IFSC piece, again, As I said, it is a area where if you want to expand out of India, because of the fact that there are a lot of fintechs which want to have a global footprint now, you could possibly set up something in this IFSCA zone. You enjoy a 10-year tax holiday. They have a separate regime for fintech entities, including a regulatory sandbox approach there. The interesting part there in the regulatory sandbox is that they will allow you to touch clients as well. 10-year tax holiday and zero GST. So makes it fairly interesting from a expansion perspective. And a lot of fintechs are looking at doing something there, more on the trade settlement side, on the software development side, again, if you are looking at overseas markets. So that is one thing. Going to the last slide, again, this is more in terms of just way forward. I think a couple of points which we both wanted to cover. One is obviously if you are a fintech operating in this space, we need to relook at or maybe relook at your operating model, because one thing is very clear that the RBI is wanting to regulate how lending happens, what kind of data is shared, who is sharing that data, who has control over that data. The points which are also clearly coming out in the digital lending guidelines is all data has to be stored in India. It cannot be stored outside India.
Yeah.
So, that is something which is again very important.
And a lot of this is, obviously emanating from complaints that RBI has received, which if you go by the data, RBI has actually said that in the last couple of years, the number of complaints that they've received has substantially increased. They have other ways in terms of, the ombudsman scheme and all to receive these complaints. So both the digital lending guidelines to a fair extent and especially the master directions on credit cards that came out, RBI's point was that customer, just from an overall governance perspective, customer protection, data protection, so the protection of the data for those customers, or otherwise how do you deal with customers, some things that otherwise were happening automatically but now need consent. That's actually been the focus of the RBI. So that results into, from a way forward perspective, of us needing to relook at the arrangements that we have, the agreements that we have, some of the security aspects that we look at, especially from a data perspective.
Yeah, I think we are completely out of time. Any questions? We are happy to.
We're fairly clear. So we kind of needed to rush through, which is why I said that 40 minutes, 30 minutes, 40 minutes is.
Yeah, hi. This is Arun from RainPay.
Hi.
On the guidelines that came, there is a lot of talk in the industry about FLDG, and I thought, I don't know, maybe you have discussed this earlier, I came in a little late, but if you could throw a little light on that.
Yeah, so we thought we'll take the elephant in the room first, so I covered that as we started. But anyway, Arun, I think...
My mistake.
No. So we'll just try and, in a nutshell, it is what it is. There is significant lack of clarity right now in terms of what the RBI seems to be wanting to do on the FLDG guidelines. As I said, a lot of representation is being currently made on what is the intent behind the FLDG guidelines, the way they are being spelled out currently. Having said that, of course, some basic things seem to be clear, that if you are doing a FLDG on a pooled basis with the specific reference to synthetic securitization, pooled FLDG may be an issue. Having said that, there are other open questions on terms of what kind of framework do you operate within two regulated entities or one regulated, one non-regulated entity. So we are having discussions with various stakeholders, but the hope ideally is that the RBI will give some form of clear guidance around it. As we speak today, again, the basic question arises, is RBI saying we should not do it? At least to that extent, our view is that it's not that you should not do it, because otherwise they would have, they would have said it, right? That is the easiest thing to do. No. So at least they are not saying no. But we have this whole overlay of securitization guidelines with this digital lending guidelines. So everybody is trying to decipher what the elephant is. And each person has his view. So hopefully the RBI will tell us that it is the elephant and tell us what to do with it. But right now it's a little grey. Yeah, sure. Yeah, we are. I can hear you.
So look, the guidelines say that by November 31st you have to comply. 30th
Correct.
November you have to comply.
Correct.
We hardly have any time.
Yes.
Right? If
In
RBI
fact,
does not come out with any clear guidelines, then we are all
no. In fact, RBI, the guidelines say for new loans it is applicable today.
It's for existing
Yeah,
loans that
for
you have
existing
to
loans.
the
So
30th
it is
November.
already,
Yeah.
so theoretically it is already applicable. But hope is that they are looking at it more holistically, right? So that by November 30th, you should apply it. So again, we are hearing some discussions that RBI may be doing some closed door meetings, etc. Don't know fully the details, but hopefully we will get more clarity on this one as time progresses.
Because and I'm sorry I'm continuing on that, but FLDG, the whole intent is that there is no systemic risk. But, and you know, as I understand, some of the FLDGs in the industry were not really backed by cash. They were just guarantees which were given.
Correct.
But if you have an FLDG structure which is actually backed by cash, do you think RBI will be open to something like that? I know there are discussions going on, but...
So the worry which RBI has, and Hasina please add, is that, you know, how do you control that? I mean, they are not going to be able to say that, okay, as long as it is a cash-backed FLDG, you are okay, because they are not able to regulate the non-regulated entity, right? And how that non-regulated entity is leveraging, where is it getting its cash from? RBI is completely blind to that whole aspect. And because RBI is completely blind to that whole aspect, there is nervousness around it, which is why I think it is becoming very, very fuzzy here.
And if you see the, the working group report also, and they came out with these concepts of rent a license model and the like, and that actually had in the illustration in one of the annexures, more details around how that transactions run and the whole service delinquency, etc. So RBI's point is, like Keyur rightly mentioned, the nervousness around this. But again, even if you have a cash collateral, they may still conceptually not be okay with this rental license model.
Correct.
Because in their minds, it's only a regulated entity should be allowed to do the lending function and not more. And historically also, if you see, the FLDG model had, has been continuing since years. But obviously, it wasn't a situation where there was cash collateral that was maintained or 100% FLDG. But banks used to, tie up in partnerships with other entities and do FLDG.
I think
it's just with the amount this has, frankly, from a volume perspective, picked up in the last 2 years, the amount of complaints that RBI has seen, certain unfortunate events on the whole recovery models and aggressive recovery mechanisms being adhered to by certain fintech players. That's caused this entire, if I may call it, uproar to say that this is something that we should not permit. But RBI has not come out and said it in so many words, but if you look at aspects of the securitization guidelines, and again, difficult to say what really applies and what doesn't, because they've unfortunately left it to our judgment on what applies from the securitization guidelines or not. But there are aspects. Pooling, I think, is pretty clear that synthetic securitization should not be permitted. Then it also talks about maintaining an additional capital charge equal to the actual exposure, which is almost 100%. So it's not only your 15% CRAR that you need to maintain, but almost 100% needs to be maintained.
So basically it goes out of your tier 1 capital.
So it goes out of your tier 1
which then makes it even more, I mean, then why would you do it?
Yeah. So they brought out, some of these aspects just by making that linkage to securitization. So kind of making it difficult and to some extent maybe a little unviable business-wise, but not saying it in black and white, unfortunately.
So yesterday in the same forum, Shaktikanta Das mentioned that about the FLDG,
Yeah.
that he is going to come out
With
discussing. They're going to come out
clarifications.
with the clarification.
Yes.
They've got this feedback
Yes.
from all of us.
Yes.
And they're working on it. They are
That's
yet
correct.
not clear. He was very clear about it. There is not clear.
Yeah.
And he
It's
said,
actually surprising for the RBI governor to say,
No, he was not mincing words, because he
Yeah.
was very clear that
Yeah.
I am not clear because there are so many vulnerabilities around it.
Yeah.
And there is so many possibilities around it.
Exactly.
So which way we'll go, we don't know
Yeah.
right now.
Yeah.
But we'll come back to you by 30th.
Yeah.
But which is why, if you see the genesis of this whole thing, first they said that we will have a separate, if you look at the press release, they said we will give detailed guidelines later. But then suddenly, God knows
In
what
the
happened, when the guidelines came
yeah.
out, it came out in this form. So again, I don't know what the whole hurry was on this, but I mean, we are where we are.
The reality is that some of the NBFCs were taking FLDG from fintech partners where the balance sheet was not considered, they were into losses, and there was no cashback guarantees as
True.
such.
Yeah.
So that was an
But-
issue, I
Because
guess.
it
But that
creates
is-
a risk
yeah,
systemically.
yeah. That is the story with our regulator on all regulators, right? One small rotten apple will then decide the fate of everybody in the basket. So, yeah.
But I think enough and more representations have been
Hasina,
made. In fact,
she-
we are filing a few more. No, I was just saying that we are also with all the representations that are being made, expecting
Hoping that
RBI to come out with
I
clarifications.
think we are all in interesting times.
True, true.
I think what needs to be seen as the clarifications kind of clearly mention it in black and white or lead to further open-ended questions, but let's see. Cool. Thank you.
Any more questions? Done? All right. Thank you, Hasina. Thank you, Keyur, for this insightful presentation. Can we have a round of applause for our speakers, please? All right, everybody. The next presentation is another important one, and it is about UPI Lite. So I want you all to be here because in a few minutes we'll start our next presentation. All right? Please. Buddy, welcome back. In case you're thinking, who am I? So I'm Vyoma Parihar, the MC for the day 2 of our fest. So now it's time for us to start the much awaited masterclass. And as I said earlier, this masterclass is on UPI Lite. If you remember yesterday, Governor Sir has launched this product, and I'm very happy to share with all of you that this product is already live on Bheem UPI app. And I'm sure you'll be very happy to hear this. And now rest of the story our speakers will share. So it's time for me to introduce our speakers on stage. So everybody let us welcome. Firstly, the lead product manager, UPI National Payments Corporation of India, Jash Desai. And along with him, the lead UPI product development, National Payments Corporation of India, Devesh Upadhyay. Let's welcome both of them with a round of applause, please. Thank you. Over to you guys.
Thank you. Okay. Yes, I've been given the task of having the post-lunch session, and they're always very interesting and try to improvise. But I hope you've been having a great festival so far. And yes, UPI Lite has been launched yesterday by the Honorable Government. It's taken us 18 months to get to where we are, and I'm going to give you a part of the journey as to why we did it, what we have done, and what it can do. But because, things are not always simple, we'll start with the pop quiz. Okay? I think this one should be easy. What percentage of transactions are below 200 on UPI? Okay? And we do publish this data on our website, so it won't be something very fairly out of the new. But we tried to get this on Mentimeter, but because of the internet issues, I don't think that would have worked. So, how many for 25%? Can you raise your hands? Okay. How many for 35%? No one. Then I think, how many for 54%? Yes.
A lot of people were there in the yesterday's
You're absolutely right. 54% of transactions last month, that's around 3.2 billion transactions, are below 200 rupees. And this gives us, some extreme sense that people have made UPI a part of their day-to-day life. Okay, the next one is not going to be very easy, okay? Which is the most used functionality on the UPI platform? Is it to send money? Is it applying for an IPO? Is it to create your UPI number? Or is it balance inquiry? Okay. Let's start one by one. How many for send money? Okay, 3, 4, 5, 6, 7. Okay. How many for applying for an IPO? Yes, of course, naturally, there are limited IPOs in a year. How many for creating your UPI number? All right. And how many for balance inquiry? Yes. So the right answer is balance inquiry. Contrary to your logic that UPI is actually a payment platform. But again, last month we did 6 billion transactions, financial transactions on the platform, and 7.2 billion balance inquiry hits on the platform itself. That means people have figured out a more convenient way to get their, check their balance rather than go on to the app or wait for an SMS after every transaction. They'd go on Google Pay or Phone Pay or a Bheem app. And I've seen this trend, before even going to an ATM, people do the balance inquiry on the app and then do this transaction. These two are somewhat related to why, some things we have come up on UPI Lite. So when we look at small value payments, right, it's a great segment, but there are some challenges and some data around it. 54%, all of you got it right. And it's because UPI, the acceptance is so cheap. You just need a printout of a QR on your shop that the other people who are now coming to get this, it's very easy to make payments and remove your app rather than cash. And we've all seen through COVID, through Demon and all these other instances, how the gradual shift has happened. And now it's become a thing that if you don't have a QR, the chances of your shop running are going to be very low. So again, supporting low value use cases. But, along with the solution, UPI has brought a challenge. The bank's infrastructure which is catered to process, real-time debits, but up to a certain threshold, they've seen a surge like they've never seen before. So when we speak to banks, they have to capacitize, increase their capacity every 12 to 18 months. And it's a huge activity. Time, takes time. By the time they're done with actually doing one cycle, they have to start preparing for the next wave of growth. So scaling for banks is definitely become the next challenge. And of course, the core component over here is the bank's core banking system, which needs to be constantly amped up. Another thing which UPI has induced as a problem by itself is that users who use UPI a lot, they've been frequent complaints that, oh, my passbook is getting filled up, You remember the last time you've applied for a loan or something and you had to take a printout, like 20, 30 pages of your passbook. And all these small value debits are there, of course, 54% of these transactions. And the second challenge or the second problem statement was around the availability of the bank. So around between some peak hours, you'd frequently see this error on Google Pay, bank servers are busy, because the intensity is so high. They don't want to let you initiate that transaction because it might fail. So people then ultimately have to move back to cash, and that's not the vision which we set for UPI. So the teams at NPCI, along with the banks and the large fintechs, our problem statement came down to this, how might we make small value transactions faster and even more economical, but at the same time, you improve the user experience for the user, okay, and taking in these challenges which we've highlighted in the previous slide. That's where we conceptualized the UPI Lite infrastructure. So on the left is a typical UPI architecture, which is a four-party model, wherein there is a PSP which acquires a consumer and links their account, and on the other side there is another consumer who's onboarded and he's linking their own account. So a real transaction would go from the payer, get the details from the payee, go to the remitter bank to debit the customer, and then move to the beneficiary bank to process the credit. So over here, the core banking on both sides are getting utilized all the time. With UPI Lite, what we have introduced is an auth engine. It's like a mini core banking solution. So we are taking away the banking from the banks, and we've kept this solution at our end, which keeps a ledger of balance. Now, and the second is store value. So common library is a component in every UPI app which helps you to secure the UPI PIN. So whenever you're entering your PIN on a Google Pay or a Phone Pay, that is being securely transmitted by this common library, which is owned and patented by NPCI. Up to now, its job was only encryption, and we've enhanced its capability now to even store funds virtually. So a typical flow on UPI Lite would include you as the consumer to go on an app, commit some funds to UPI Lite. These funds, while they are debited from your bank account, they are stored by the bank in some other pool account. And we virtually mirror the funds in our auth engine, and it comes to your device. The funds are actually residing in a virtual form on your device, and hence this is a on-device wallet solution. So if you're aware, RBI in February has, in their monetary policy, has approved of an on-device wallet, which will give this kind of capability to all UPI apps to store some value, and when you're making a transaction, you take this value and go with it, and you avoid this hop to the remitter leg. So because of because of this architecture, the user now can get a functionality to see the balance on their home page. So if you have an Android app and you're using an account from, say, SBI, HDFC, PNB, Union Bank, Indian Bank, Kotak Bank, Canara Bank, and Utkarsh Small Finance Bank, you can actually use UPI Lite today itself. So the first thing you always see on the app is when you enable, you will see the balance on the home screen. And this balance, it fetches from the device itself. So there is absolutely no need for you to be going and doing a balance inquiry every time. And hence, it solves the problem for the API usage on the balance inquiry as well. So now we'll go through a typical user journey of UPI Lite and how people can go about making this payment over here. So it covers the entire onboarding journey and the transaction journey.
Ready to make transactions using the newly launched UPI Lite? Here's how to enable it. Use your passcode or fingerprint to log into your UPI app. Click on UPI Lite Enable Now banner on the home screen. Click on Enable Now after accepting terms and conditions on the disclaimer page. Enter your preferred amount, select your bank account, and click on Enable UPI Lite. Enter your UPI PIN to proceed. Success! Your money is added and UPI Lite is now enabled. Now you can start using UPI Lite to make payments. Simply click on Send on your UPI app home screen to get started. Scan the recipient's UPI QR or enter their UPI number or UPI ID. Verify the recipient's details. Enter the amount and click on Confirm. Note, users can make transactions of up to 200 rupees at a time. Success! Your money is sent successfully to the recipient. On the transaction history page, users can identify between UPI Lite and regular UPI transactions by checking the UPI Lite icon. Start using UPI Lite now.
So while this video gives you a simple and onboarding flow, we've tried this in other forums. So by the time this video was completed, people actually onboarded UPI Lite. And that's the thing about the design ethos. You make it fast and you make it very simple for the user to use UPI Lite. We had this demo yesterday. I don't know how many of you were part of it. But one thing which we did, and we tried to take in the user perspective, is don't allow the user to select whether I want to make a Lite transaction. Your journey is very simple, and we call this as smart switching. When you scan a QR or enter a UPI ID, typically when you enter the amount, if it can be serviced by Lite, it will automatically take the funds from Lite. So no need for you to switch it. But if the amount is more than 200 rupees, it goes from the normal route which debits the fund from your bank account. So very seamless to the user. These transactions are not seen in your passbook as well. You can view it on the app, and thereby the name Lite, which makes the user journey light as well. And at the same time, it takes away the entire infrastructure load on the banks and making the experience light for them. And with that, I'll hand it over to my colleague Devesh. He's going to take us through the further part of it, more in terms of technical developments and what is the impact we see on UPI Lite. Over to you, Devesh.
Yeah. So now I hope that you must have understand that what UPI Lite is. So now we are going to understand that who are the people who will be getting really impacted by the solution. So we at the NPCI, we create the solution for three major stakeholders. First off is the users, the second is the merchant, and third is the banks. So let us understand that how this solution is going to be helpful for the end users. So let us take an example that any one of us is standing on a kirana shop and we purchase a good of rupees 50. Now we want to make a payment, but we see that a lot of people are around us and I need to enter my UPI pin over there. So you can make a payment without entering the payment. You just, as just showed the user journey, you just enter the amount, click the amount to be paid, and the amount will be debited without entering the UPI pin. One of the biggest benefit which you can get from without entering the UPI pin, you are making the payment. The second is that many Lite reduces the transaction hops. So if your user bank is not available, for example, if SBI or HDFC is the remitter bank in which you have your own bank account and it is not available at that time, no need to worry that your bank is not available and you cannot make a payment over there. The money is stored on your device in your wallet and you can make a seamless payment when the amount is less than 200. The second is for the improved success rate. So UPI-led solution will reduce the TD of the banks with almost 50%. We did a study and we saw that the big banks like SBI, HDFC and many others have that TD up to 5%. But with this solution, it is expected that the TD technical declines for the banks will get reduced to 0.1%, which will increase the success rate tremendously by almost 85% for all of the banks. The third major stakeholder for NPCI from which we create the solution or bank itself. So for the banks, we see that since we are dreaming for 1 billion UPI transactions a day, banks will have to increase their infrastructure. Many big banks have already started doing this, but small banks, we wanted to solve their problems, and that is why with the UPI-led solutions, the core banking systems will not get hit for all those transactions which will have the low value payment, like value less than 200. So definitely it will help those banks to reduce their infrastructure maintenance cost.
Yeah, and I think I agree to that point, right? Whenever you're making a store payment in a Kirana store, people are very curious and they'll keep on peeping, what's your PIN, what's your PIN? But that's something which is like a indirect user convenience. Even we had not thought of this, but when people come and told us, oh, so that means this will stop people peeping. And that's how, this has become one of the key consumer messaging we're trying to showcase over here.
So I think just it is increasing the security also, risk security.
Absolutely.
Because you are not entering the UPI PIN for all these small transactions, right?
Absolutely. So like, no need to enter your PIN for small value. Don't show it to anyone. Yeah. But at the same time, I do want to highlight that this is also protected by your app passcode. So nobody can do a light transaction without entering into the app, without entering the passcode. So it's not that anybody can pick up your phone and just start, scanning around everywhere. We've brought in this layer of security as well.
Yeah. So now we will cover the operational elements for the UPI Lite. So as we talked that a maximum payment of rupees 200 will be done. So might be in the coming time we will think for the more amount of the use cases, but for the timing a user will be able to make the payment when the value is less than 200. A maximum top up will be of maximum top up. We don't have any limit. User can do a top up of up to one starting from 1 rupees to 2000, and at a time the maximum balance which can be the UPI wallet will be rupees 2000. And multiple UPI wallets can be created within apps. So for example, if a user have multiple apps like PhonePe, Google Pay and Bheem, and he has a bank account in let's say SBI, so user will be able to create Lite account in each of the apps, but at a time one wallet in one banking app.
Yeah, so I mean, if you've gone through, the approval which RBI has given, to start off with, anything below 200 would be counted in the low value segment, and this usage can be up to 2,000 rupees. I think the third point is very important to know from a consumer experience. Today, you can take one bank account and seamlessly link it across different apps, and it gives you the same balance, the same usage. But with UPI Lite, one balance is unique on an app because it is on-device wallet. So the funds are virtually on your device and it will stay on your device but for a specific app. So it's not fungible across different apps. And that's where, the balance will always be on the home screen to make the user aware that this belongs on this specific app only and cannot be, cross-pollinated.
So now we will figure it out that what all the changes banks, apps will have to do to enable the UPI Lite solutions. So we at NPCI, we always aim that the banks and the other apps, PSP should have the minimum development for all the features which we develop. So for example, if we talk about the APIs which we require, so we just have modified the request list keys. So there we have enabled one subtype get Lite, and there is no change in the API, only a new type is introduced for creation of the UPI Lite account. Now in the request pay API from which we make the transactions, we have created 4 purpose code. So apps, the PSPs will have to pass these purpose code 41, 42, 43, 44, 41 for the enablement, 42 for the top up, 43 for the disable of UPI Lite, and 44 for the transactions. So only by understanding these purpose codes, banks can do the reconciliation, and it will save a lot of time and effort for the banks for the reconciliation purpose of the UPI Lite transactions. And then for the request check transactions, we have introduced a subtype like sync. So for example, we might see that you are not getting the updated balance, and in that case you just trigger this request check in the apps and you will get the updated balance that what is lying in the UPI Lite account.
Exactly. So as I told you, right, NPCI is becoming a mini core banking solution. So we simplified the architecture by 3 APIs. The first API is to create a bank account or you can say a light account with NPCI. So it creates an account number, sends it to your bank. The payment APIs do what a typical request to an account can be. That is, one is I want to start my account, that is 41. 2 is I want to add more funds, that's 42. 3 is okay, I want to shut it down. And the 4th one is for financial transactions. The last one is to sync. So basically between the common library, the funds inside the common library and the auth engine which is maintained at NPCI, if there is any kind of network connection or lag, you can simply sync up on both cases. So we've kept the development and the architecture very simple. Everything resides on the existing APIs, the existing stack. So we've seen banks, I'll be honest with you, 4 banks in this launch had started working 10 days prior to the launch and they're successfully up and running. So this shows the simplicity we've tried to build in for every bank to come in and seamlessly participate, because we have 330 banks. And getting them on to this functionality, we want to make it simpler for them.
So scope for the work that what the banks will have to do. So for the bank will have to open a escrow account where they can manage the funds. So for example, if I do a top up or if I create an account, the bank, my remitter or the issuer bank will have to park that amount in the escrow amount, and that's it. So 4 test cases, a very simple development. Only the issuer bank to open an escrow account, and there they can manage the funds which a user enters in their Lite account. For the apps, so we have updated the CL to the version of 1.8. So the apps will have to integrate version CL 1.8 from where they can show the live balance. So if I did a top up of 2,000, spent a money of 200, so the left 1,800 will be captured in the CL anytime, and this can be done by using the CL version of 1.8. And then for the PSPs, so there are some around 20 to 30 test cases which PSPs will have to undergo, and then they can be very easily onboarded on the UPI Lite solutions.
Yeah, and one important thing to note, right? This solution has no change for merchants and beneficiaries. So while there is some impact, some change management on the bank side, someone on the app, the initiating app side, the merchant's bank and the beneficiary both continue to operate as same. So, as a merchant owner, you'll start seeing improved success rates immediately from the time UPI Lite is made live for a specific bank.
So as we talked that what UPI Lite is having for each of us. So for the user, it is a faster payment, balance on the home screen, and then definitely a security of not entering the UPI PIN in the cases when you are making a transaction of value less than 200. For the merchant, it is going to have improved success rates. So what will happen that you go to a merchant, you start making a small value payment, sometimes remitter bank is not available, or sometimes some TD is high, you are in a very peak time, let's say 7 to 8 p.m. and that's time the transaction doesn't work. But if the value is stored in the CL amount, the transaction will be very much successful, and definitely that will improve the success rates for the merchant transactions. And for the bank, it will help the banks in scaling of the transactions. So the aim which NPCI is having of 1 billion transactions a day, that will Lite solution will definitely help in getting that vision of 1 billion transactions a day. I think we need to play this.
Ever since the National Payment Corporation of India launched UPI for public use in the year 2016, its popularity and usage has been skyrocketing. From 93,000 transactions in August 2016, UPI generated 800 million transactions by March 2019 with a total value of 1,330 billion rupees. The surge continues as today, India's UPI is the best performing real-time ecosystem in the world with nearly 6 billion transactions a month, valued over rupees 10 lakh crore and touching 260 million users. The real success of UPI lies in achieving its mandate of building secure, seamless, and interoperable system in India, which is also scalable. In line with its pledge to give its consumers an admirable user experience and to usher the next wave of innovation and growth in digital transactions, NPCI has launched UPI Lite, which will work as an on-device wallet for faster and simpler transactions. This solution leverages NPCI's patented Common Library (CL) and allows storing of virtual funds on the CL to enable the on-device functionality. The key advantage of UPI Lite is that it can work in an offline environment also, that is, without internet. The next wave of UPI transactions will come from offline payments, which will happen in real time without internet. At times, while making UPI transactions in crowded places as a healthy practice, we try to conceal our PIN. Especially for such situations, UPI Lite will come with an advantage of tap and pay. No PIN required for small value transactions. UPI Lite will power new use cases which can virtually mirror any balance on the device. This can be extended to credit cards, forex cards, or any underlying account which has value and can be mirrored onto UPI Lite. Overwhelming number of UPI transactions are of small ticket size. Though it is a statement of its everyday utility, regular users face the challenge of overcrowded passbook with UPI transactions. With UPI Lite, consumers can get rid of this problem. The transactions made using UPI Lite will not reflect in the bank passbook, whereas they can be seen at one place in the app that consumers are using. Apart from this, consumer will be able to view UPI Lite balance on homepage. UPI Lite is a solution which will help users to transact without dependency on the bank's infrastructure. This will result in lesser hops and faster transactions for the user. In our endeavor to make India a cashless economy, we pledge to continue our efforts. This time with UPI Lite, NPCI is proud to provide our consumers enhanced user experience and much needed utility features.
So, thanks for that video. But while the video does not do justice, I'll just take 2-4 minutes extra. Of course, tap and pay with the device having balance inside it, and no need for entering a PIN. Tap and pay makes this the next natural progression for going through. What I mean by single leg merchant payment is you could go to a store and they have a device where you tap funds. You saw the 4-party model over there. You don't need to go through all the legs. You just go to NPCI, do the debit, and the payee PSP confirms back saying that, okay, this transaction is done. So you don't utilize the remitter's core banking or the beneficiary's core banking. We're also envisaging that, say today, if you are in India and you have funds in INR, the moment it detects that you've moved to some other country, say Dubai, this currency will change into dirhams automatically, and you can start using this just by tapping around and going anywhere. Authorization services is the next layer where, let's say there is a remote locker somewhere and you want to operate that. So the basis the authentication which is present in the common library, you can unlock that the locker, pay for the locker rental services, and then close that locker again. Same could be for travel services as well. And the fifth one, which I think is for the larger ecosystem to build on, is how do we say that there is a farmer who has harnessed solar energy and he wants to supply that energy back to the grid. How does he get incentivized where there is no area or there is no network? So the moment he puts the energy or the supply back into the grid, the infrastructure or the person sitting over there can tap him and give him the funds back onto his common library. So it promotes kind of behavior for all your renewable energy and recycled use cases as well. So with that, I'll just take an end to my masterclass. Thank you everyone, and I think we'll take time for maybe 1 or 2 odd questions.
Yes, thank you, Josh and Devesh. And yes, I'm sure people would want to ask some questions. Yes, can we have the mic, please?
I have a quick question. You said that the transactions won't be visible on merchants' accounts when a UPI Lite transaction is done.
So I'm talking about the future use cases. Are you referring to that or a normal?
So when a UPI Lite transaction is done from a consumer to a merchant, it will show in merchant's account.
Yeah, it will show. So in this phase, the debit does not reach to the bank, but the credit part happens as it is, so it will reflect to the merchant in real time. So when you go to make a UPI Lite payment, you scan the QR, the funds do get debited from the UPI Lite, and the merchant gets an instant confirmation as well for that.
Okay. But the one you're saying that it will have no entry of smaller transaction in their passbook.
So that's for the consumer. I am making the debit transaction. It won't come to them. To the merchant, it will. It will appear as is, a detailed statement that you got these 10 transactions, which could include light transactions as well.
But the problem is on the other side. Merchants don't want smaller transaction entries.
Okay, merchants also don't want. Sure. I'll take that as, our next use case as well. But thank you.
Is it okay now? Yeah, better now. So rupees 200 is too less, right? And is there any auto load functionality, and that if I end up using 200 rupees,
Yeah, autopay is definitely a part of the construct where say that your funds are, so 200 is the per transaction limit. In the Lite account, Lite balance, you can have up to 2000 for spends. So when it crosses below a certain threshold, autopay will be triggered for these transactions as well to make sure you're always on Lite. Or shall I say the light is always on?
So earlier you mentioned the balance is stored on the device. When somebody is sending me money, like can P2P, can I receive money?
Yes, it's for both P2P, P2M, both cases.
If I receive money from somebody, how does my balance get updated on the mobile?
So, okay, the Lite solution is only for you as a remitter to when you're giving out funds. To the beneficiary, they would receive funds as is. It goes to the core banking, you get a credit, you'll get an SMS as a beneficiary. But to the remitter, this part of ease is coming to the remitter only.
No, so just basically he's asking that how the sender is getting the live balance. So you did a transaction of 50 rupees, so how it came.
Yeah.
So all things are.
So that is on the device itself, right? When you make a transaction, you see that, okay, you had 2000 balance. If you send 50 rupees, it's going to be 1950. That's how you see the updated balance.
Yeah, but if somebody sends me 50 rupees.
That will come to your bank account. So there is no credit coming into Lite. There's only credit to your bank account. Yeah, okay. I got your point. Thanks.
Paytm had a similar feature, I guess. They were also allowing us to put money into the wallet.
Yes. I think I'll take this one as quickly. So Paytm, one, you need to KYC the user. Okay. That has its own efforts and challenges. Secondly, depending on the KYC, that person can do a transaction up to X amount or Y amount. So that's the core difference over here. For a bank customer, you're already KYC'd. So there is no challenge and you can quickly come on to Lite with the same level of diligence. Yeah,
Can
next.
we top up this with the RuPay credit card that we are integrating with?
Yes, I was expecting that question, but that is coming in the future pipeline because with a credit card you can't pay to a person, but with this you can. So we are thinking how do we make two different balance counters for this as well.
Yeah, you mentioned that when I load money to UPI Lite, so it will be application specific. For example, I open the Google Pay and
yes, it will be
2000.
specific.
Yeah, when I want to pay to some merchant using the phone pay, that balance is not visible to phone pay?
No, you would have to onboard with your bank account on phone pay and then you're able to view the balance.
In that case, the wallet in my device is created multiple times?
Yes, there are different containers of wallets created, but it is app specific.
Okay, I have 4 apps in my mobile, I can create
4 wallets.
4 wallets and 8,000 rupees.
Yes.
Okay. And adding to the question what he asked, that is, whenever the transfer money goes from UPI Lite account to a merchant account, the merchant CBS is still involved because the credit goes to his account.
Correct.
Right. Okay. Thank you.
Okay, please, ma'am.
One question. So we often see in UPI transactions that after 10 transactions per day, there is it caps off. So UPI Lite, because it's a small value transaction, is there a cap such as 10 or is it?
Yes. So there is no cap to just, because we want users to make, this is a ubiquitous solution for low value payment. So you can tap, 1 rupee 2,000 times for all I care, and you'll still be able to go through. That's the seamless experience we want to give on UPI Lite. Yes, sir.
Follow question. When we do this, 4 apps, 4 wallets, all my account is there, let's say with HDFC. The HDFC is going to block 8,000 rupees?
Yes. Yes. Yes, sir.
Yes, thanks for the presentation, very helpful. Just one question, in the future use cases, I was not able to see the vision that we are also going to decouple the remitter side of beneficiary side of it. Because the problem is at both ends, right? Like, I'm from Amazon Pay. So basically the issue we face is an offline, right? So the customer's bank account is still valid, right? You have HDFC, SBI, where the CBS is not, but on the merchant side, there are Bank of Mysore, where the infrastructure is pretty low, right? Like the success rate on the merchant side is also equally important, right? For end-to-end transactions.
Yeah. So to answer your question quickly, for the merchant side, we've already solved for this in the existing UPI infrastructure, that if you've processed a debit successfully, the merchant's account is anyways going to get the status, right? Even if there's a timeout or something of that sort, we know his account would eventually be credited. So we've instructed all banks to treat this as a successful transaction, even if the debit is done with. So I think that does solve for like 90% or 99% of the merchant outages, which is there. So, and that's helped out. You may want to explore that.
Merchant doesn't allow me to go away without payment being done. So I end up paying cash as well as.
So there are, okay, this is going away a bit from light, but I'll take that question offline with you separately.
Yeah, so I would like to interrupt in here. I request Josh and Devesh, we have to end it here because we have next session coming up. And everybody, Josh and Devesh is right here, so you can ask any question in person. They're just here only, I guess.
Yeah.
Okay. Thank you, everybody. Thank you, Josh and Devesh, for this very important presentation. And I remember what you said, the light is always on. That was indeed a word. And of course, UPI Lite is the next big thing. So once again, a round of applause for our speakers. All right, everybody. We'll, in few minutes, we'll start with our next masterclass. And let me tell you, our next masterclass is an important one, as the future of tolling is going to be changing now, right? So it's an interesting one. Be here. In just few minutes, we'll begin it. So, ladies and gentlemen, it's time for us to start our next product masterclass. So, just imagine you're driving and you're going to Pune, for example, and you're just going and you need not to stop for any kind of toll plaza. How would you feel about that? You can smoothly drive. How do you feel about that? Good, right? Of course, great. So, as I said earlier, the future of tolling is going to change. And now, to tell you more about it, how it's going to change and what's going to happen, we have our next speaker who will be taking the product masterclass on National Electronic Toll Collection Global Navigation Satellite System, the future of tolling. And now, everybody, I request you all to welcome on stage with a big round of applause the lead NETC Product Development National Payments Corporation of India, Kesari Nandan Kumar. Everybody, please welcome him. He's right here.
Thank you for the introduction. So I hope everybody might have come here using their vehicles today. And despite all the traffic and all the road that you travel, there's something that you need every time. That is a one technology that navigates you everywhere. The GPS, as you might popularly know it. Well, GPS is not so easy and not actually what we call it. This actually stands for Global Navigation Satellite System, is what we truly know it for. So the actual story is quite similar. We have popularized various technologies with some other names. If we want a photocopy of anything, we just say Xerox it. If we want to search anything, we say Google it. The same is known for GNSS as well. What we call it is GPS, but actual technology is GNSS. So here we see how it can describe a bigger world and explore the world of tolling. So just to begin with, how it is, well, across the world, today, different technologies are used for tolling. In India, as you might see, and popularly known as FASTag is being used, but various different countries have used different technologies here, as you might see. RFID, the popularly technology on FASTag, you have GNSS, then you have DSRC as well. And across the world, as you see, specifically in Europe, is wherein GNSS is majorly focused on. Now, GNSS started in 2005, specifically from Germany. The commercial vehicles were mandated to use GNSS devices into their system, and this is how the entire tolling happened free flow. And since the entire European Union specifically has free flow trade across its border, this model became interoperable. And that's today we stand here is wherein pretty much the entire Europe is using the global navigation satellite system. So today, as we have come a long way specifically in tolling, let's see what is happening in India. So the entire system started in 2016 with the launch of NETC, wherein the FASTag program actually launched. December 2019 was wherein it was mandated across all the lanes, and gradually it took some time to reach out there, wherein every toll plaza, if you had a FASTag, you could just zoom past by. But gradually it came in January 21, where FASTags were mandatory on all the vehicles wherever you want to travel. Today, we are processing more than 150 crore plus toll collection single day, and we proudly stand at 5.7 crore plus NETC FASTags across the ecosystem. But then, you might say, what's next? Well, that's the bigger question here. What next? How about we dream about a future? Or better, let's envision it. This is how the entire future might look like. And this is the news headline which might feel here, wherein you can pay your entire tolls using GNSS devices just inside your car. This will give you a free flow experience wherein you won't have to stop anywhere, and you will pay specifically of the distance that you have traveled. So what is the advantages specifically for you? Well, for the users, as I previously mentioned, you will have free flow tolling experience. No stopping anywhere. Nobody's going to stop you and say, okay, this is not working or that system is not working. Too much hassle across the toll plaza system. Not anymore. And secondly, you'll only pay specific to the distance you are traveling. How cool is that? Well, today, even if you are using half of the highway, you still have to pay the complete toll fare. Not anymore. The half the toll fare, the half the amount. And that is where this entire system comes in. But is the ecosystem also at advantage? Yes, it is. Specifically, you will have across the equipments in the devices will be standardized. Also, you would have increased usage of telematics devices telling you your vehicle performance on various different sensors. How much is the fuel left? How is your device performing? And also, wherein you can travel and use various different use cases for it. Tolling is just the beginning of it. So now imagine I am a complete new customer and okay, I want to use this technology, but if I do not have a car, what do I do so? Or specifically, if I do not have a car which does not have any device, and therefore, this solution is what we are bringing on 3 different form factors. The first on your left is an onboard unit. It's a small device, little bigger than your mobile phone, which can be fitted and in a plug and play mode in your vehicle, and this will directly be integrated with the server. And this entire thing can then be automated. You don't have to do anything else. Secondly, you might ask, if my car already has an infotainment system, do I still use it? Yes, you can use it. And that is where you do not need to spend anything extra in getting it integrated. Thirdly, let's suppose there's a new college student who has just bought a car, but what if they also want to use this feature? Do they still want to integrate yet again thousands of rupees to have this feature? Well, not so. You can simply use your mobile device. Everybody has that across the world and use it. But we are popularly heard. With great responsibilities come also great challenges. And this is where there are some few which we have to adapt to. So looking at the form factors in a little bit deeper manner, specifically, the main advantage of an onboard unit is it is specifically being designed for tolling purposes. Currently in Europe, as we have it, all form factors, specifically the commercial vehicles are using it. And that too, with a huge good accuracy, roughly about in the vicinity of 3 meters. Yes. Currently, if you go on your mobile phone and just send a location to anybody right away, you might see the location accuracy might not go beyond 10 meters. But this system requires an accuracy of something in the vicinity of 3 meters. And that is where this system becomes highly accurate. Cost is one of the biggest obstacles, because if I'm driving an Alto, probably I might not spend 1,000 to 7,000 rupees specifically for a tolling device. And this is where an onboard unit is specifically a big obstacle in customer readiness. Coming to our next form factor, that is an infotainment. The biggest advantage, it is standardized and readily available in your cars. The only obstacle it has is currently not all different OEMs have their accuracy tested through which it can directly be launched. And that is why we need a standardization so that different brands of car does not give you a different toll amount. And finally, we come to our most favorite form factor, and that is the mobile phone. Now, the biggest advantage, everybody has it today. Be it any form of payment, you need to have a mobile, and that is where we really want to leverage that form factor too. Because that is where, once the mobile form factor is also leveraged into, you will see the full power of GNSS-based tolling. The obstacles here are also there. Why? Because the accuracy of a mobile phone does not give you precise location every time. Sometimes it may, sometimes it might not. And what if a customer actually raises a question, my mobile phone wasn't functioning and therefore I couldn't pay a toll? That should not be the case. And therefore, similar standards would be implemented across for the mobile phones as well, so that be it app permissions, device specifications, as well as battery health should not come in your way in your free flow tolling experience. So
with the vision to give the country a better toll infrastructure, NPCI keeps on innovating to provide better and easier facilities for the citizens, which allows citizens to cross tolls without stopping and with accurate toll charges. And one such initiative is the Global Navigation Satellite System, that is GNSS. Let us know how it works. The customer buys an onboard unit, that is OBU, from the registered onboard unit vendor and get the configured onboard unit installed in the vehicle. The customer will be onboarded using the UPI apps by completing the onboarding procedure and linking their device, OBU or smartphone to a bank account, wallet, card. The customers using infotainment will be onboarded through their car app on smartphone. The device processes signal through GNSS chipset and communicates through eSIM. Imagine when a citizen travels on any toll highway. The GNSS server tells NPCI about the location data of the vehicle, such as the distance covered by that vehicle on the toll road. The distance vehicle must have covered, citizens will have to pay the same amount. NPCI server calculates the fare and interacts with the GNSS server, which tells acquiring bank to initiate the transaction. Acquiring bank initiates the process of collecting toll fare and passes on to NPCI switch. Then NPCI sends the transaction details to the issuer bank and receives the fare amount. And the transaction is completed by sending the collected fare to the toll plaza, from where the transaction originated, thus ensuring that customers will no longer need to wait at tolls. And it will also reduce the cost of toll infrastructure and manpower for the country. NPCI, making toll payment easier.
Well, now that you have seen the trailer of the solution, let's see and let me simplify that for you as well. Starting with who all would be the stakeholders first. So for this, the stakeholders, majorly there would be 4 ones. And just to start with, the first would be GNSS device providers. That would be 3 form factors here. Now, the main roles of them specifically would be the installation of the GNSS devices, maintaining of the GNSS server, and also initiating the transaction from the customer. Next comes the acquirer entity here, which in current ecosystem are being operated by banks, and this would be authorizing the transaction specifically. From there comes the role of NPCI, where we would be calculating the fare, processing the transaction, and also handling any sort of a dispute that might arise in the ecosystem. Finally, we also have the issuer entity, which yet again is managed by banks here, and they would be integrating with the consumer device and also helping you maintain the customer wallet at the back end, so that whatever financial instrument that you have can be maintained, and any sort of a dispute that arises is where the issuer bank would be the face of the customer. So now you might think, okay, fine, I will zoom past by the toll plazas, but how will this system actually work? Who is going to detect me? And this is where the mechanism of a geofence actually comes into the picture. Now, as on the screen, you might see when a vehicle actually enters a geofence, it automatically gets detected by the GNSS server. A GNSS server is the server connected with the device at the back end. Today, if at all you are using any sort of a GNSS device, it has to be connected with a GNSS server, with you or without you being even known of it. And this is where this entire ecosystem would be operating specifically with the help of geofencing the entire highway toll stretch. Be it any type of toll plazas around, be it any sort of highways where toll is required, it will be geofenced, and this is how the system would depend upon. So, fine, we have reached towards the geofence, but then how will the fare be calculated? That's the mechanism here. Imagine a complete stretch of road. You have your normal toll plazas as in the current today. Now what would happen here specifically is the entire highway would be geofenced and the plazas would be marked. There are also some scenarios wherein today you might have some entry or exits in between the toll plazas which are currently unmanned, where there are no FASTag readers today. Since you would be having pay-as-you-use model, the system would work in something of a different way. Now here, entirely all the points would be marked, be it any sort of an entry or any sort of an exit. So let's suppose me as a user, I'm traveling from E2 to E3. What would happen here? Well, I would be passing, in today's scenario, one toll plaza, but actually I'm passing through a different distance from E2 to E3. Every highway network would have a pricing matrix, and based on that is wherein per kilometer fare would be stored, and every per kilometer travel that you do on that highway is where the fare would be calculated. And this is how the fare would be arrived by. But fine, this all is done. But what would be different types of GNSS devices that would come into the picture? Where majorly in the market, currently we have 2 sort of devices. One, you'd call it as a fat client and one as a thin client, because not every system that is present or every device that is present in your vehicle would be an advanced enough. You'd have an option to buy different sort of devices. Even consider the example of a mobile. Today you have top-notch iPhones and you also have entry segment smartphones in the market. Similarly, you have top-notch GNSS devices and even the entry ones. They operate on quite a similar model as in fat client and thin client. In fat client, every calculation that is being done would be done on your device only, so that your entire location from the GNSS server, the information would not have to be sent to. Wherein coming to a thin client, it only be using the device information to communicate to the GNSS server. What would happen next? Well, here is what would happen next. Everything apart from happen or off the vehicle in the GNSS server, where the entire communication and transmission to the NPCI server would be taking place, and this is where the geofence detection would be happening. Next, moving on to standards and security, because for any transaction that happens today, the most important factor is trust. If you do not have trust, the transaction in digital medium does not hold any significance. And therefore, specifically for this, AIS 140 standards is what largely we are working on, because AIS 140 standards, which stands for Automotive Industry Standards 140, has already been mandated by the government in 2019, and every commercial vehicle today abides by this law. So this is where this entire law, which has already been mandated, would majorly be used across all the devices, across all the types of vehicles as well. Now in this, there are some forms of security which would be mandated as well. And that would specifically be your data security as well as data integration. Now, encryption of this data would be highly efficient, because any transaction that is coming from your GNSS server passing through your acquirer bank, issuer bank, and NPCI network has to be encrypted, so that your data would be unique and it can be differentiated, so that there are no sort of a duplicate transactions, clone transaction, or any other thing, even if your system gets hacked. So therefore, specifically, this would be in compliance with the Indian law of data sharing and everything. We would also be following the standards specified by RBI, wherein UKPT, which stands for Unique Key Per Terminal, and derived Unique Key Per Terminal would specifically be used, so that your transaction can clearly be identified and there would not be any sort of a malfunction practice specifically for it. Now you might be functioning, okay, fine, this is all good. How will this entire system go across and move forward? So specifically for this, the first important part would be the enforcement mechanisms. What if I am a user, I want to avoid the toll fares, I do not install in any device, and since there's no toll barrier to stop me, I'll just zoom past by. There would be nobody to stop me, right? It's quite easy. Yes, it is easy. And therefore, there would be some specific mechanisms which would come into the picture to stop them. And that would be wherein we would be using two additional technologies to complement this GNSS. And that would be ANPR, which stands for Automatic Number Plate Recognition, and DSRC, that stands for Direct Short Range Communication. This would be directly integrated inside the modules of the GNSS device. And ANPR, you would also have a gantry sort of a system at the toll plaza, wherein directly the number plates can be recognized on it. The more for it, specifically, we would be having a special panel discussion tomorrow, which you can be a part of and see how the entire NPR mechanism would be working on. Finally, coming to our main product, that is the launch of it. Well, the steps here, quite simple, but in a more deliberate way. Now for this, all the three form factors would be standardized. Why? Because I do not want that my infotainment in the car gives me a 98 rupees toll, my OBU gives me a 99 rupees, whereas my mobile gives me 100 rupees for the same distance. That should not be there. And therefore, we are having standardization across all the form factors. Next, specifically for this, we would be having the two important pillars of this, free flow tolling and pay-as-you-use model implemented. Finally, we would also be having issuing channels set up specifically by the BAMs. We would also have the UPI apps like Bheem, wherein the entire integration process would happen. And also your OEMs for your infotainment in the car would be helping through, so that the entire integration can be done smoothly. Once all of this is done, this would actually go live, wherein it would be launched in parallel to the FASTag, because FASTag is already an established system and it would be continuing. Gradually, The journey that the entire FASTag is saying is quite the journey how the entire GNSS tolling would also see, wherein plaza-wise you would have lanes that would be open up for GNSS-based tolling, and gradually it would spread across all the toll plazas across the country. So this is specifically how we would have the future of tolling. So thank you for this. I know you might be wondering across what are the different sort of devices, who are the servers, or anything else that you might have. Feel free to ask.
Questions? Yes. Mike, please. I'm sure you all are very happy after knowing all about this presentation.
I think my name is Prasad Rautra. I'm from Airtel Payments Bank. First of all, I would like to congratulate NPCI for the wonderful job done in FASTag. As FASTag really catches up, I think we're coming with another new technology, which is very good. And of course, ANPR. My two questions. One is that there will be possibly a coexistence of all two or three is what I can sense, right? And therefore, how do you really make it sure that it is actually one technology at a point getting used? Because for consumers, you might have a car with a FASTag as well as a GPS already installed is one part of it. Second is there will be still some edge cases where maybe the wallet is there is no money, but still goes through. How do you actually take care? Having said that, I know these are less than 1%, 2%. It's obviously behavior is changing. FASTag has been an example, right? And third is, what are the timelines that you have in this particular category to, come in? I know some testings are happening, and we have been a part of a few discussions with you, but we'll be very happy to know when and how it is actually happening. So these are my 2 or 3 questions, if you can kindly let us know.
So, coming to your questions. Firstly, when any lane has been enabled for GNSS-based tolling, there would not be any boom barrier in it. And similarly, there would not be any tag reader. So even if your vehicle has a FASTag and also a GNSS device embedded, there would be no tag reader and no boom barrier to stop you. So that if you're part of the program in the GNSS tolling in the initial days itself, you can avail it quite freely and smoothly. As the two important parameters that we say, free flow and pay as you use, you can use the total advantages of it. Secondly, yes, the journey would be quite similar to FASTag, as you said rightly. Now coming to the payment parts, yes, it would be as shown in the video here, in the prepaid mechanism as well. There would be various different sort of other mechanisms as well, which are currently being in pipeline and which we are working on, wherein if your wallet gets exhausted or in some other manner, there would be various upcoming mechanisms like an autopay itself, which you are currently getting into, which can also be leveraged and used in GNSS as well specifically, which can be used. Coming to timelines, well, this is a little work in progress currently and should be going quite soon.
You don't require toll plaza?
No, sir. So in GNSS system specifically, it would not be. Since the entire GNSS would be going stage-wise. It would not be that one day the entire thing went, just like the FASTag. Not entire country, all the lanes were enabled for FASTag. We had one lane specifically for FASTag, and gradually all the lanes started coming into the FASTag system. Similarly, it would be so. So when the entire system comes into GNSS, that toll plaza would not be required so. But as an enforcement mechanism, I would be requiring the ANPR gantries specifically at the toll plaza so that I can capture the vehicles who are trying to bypass the system in some sort of the manner.
How the money gets deducted in this process, because in FASTag you have the wallet. What is the procedure?
So here as well, a customer can have a wallet. Customer can also connect it through their UPI app specifically to get the payments done, as well as the existing wallet you can have specifically linked with the GNSS device with the issuer banks.
All right. Okay, we have one more question. Okay, so we are running short of time. We can take just one more question, please.
Yeah.
You spoke about enforcement. So there was one scenario wherein, since we are talking about the moment this goes live, as a consumer, I will be just traveling without any obstacles.
Yeah.
So and the money is supposed to get deducted from my wallet or my bank account. So what if, since there is nobody to stop me and there's nothing in my wallet or a bank account, so how will that scenarios be? Because at the end of the day, the issuer carries a liability, right, of paying to the acquiring bank. So how have we factored that thing, or how
Yes.
will that be managed?
So let's say you do not have any sort of a digital payment instrument right now. You do not have a FASTag, you do not have a GNSS device, right? So in that scenario, the ANPR would automatically capture your number plate. That is getting recorded, and since that is now being recorded specifically, this is where the enforcement mechanism specifically is what the Indian law system would come into the picture. So a new enforcement mechanism would actually be coming into the picture wherein such cases can actually be covered as well.
Okay, and the second part was, will it require a complete overhaul of the existing FASTag ecosystem that is being developed by the banks, existing issuers, or will it in a way complement? So, for example, as an issuer, if I'm a ABC bank, at the end of the day, FASTag is a PPI. Most of the banks are issuing it as a PPI. So, will it require me to completely overhaul it and move it to my existing CASA network, or so basically, you said FASTag will be one, wallet will be one channel, Beam could be another. So, at the end of the day, as a consumer, I would have an option to directly link my CASA to it also, right? If it's UPI, I can use my existing GPay handle or any handle that I use.
Yes, absolutely.
So, how is that? How is that migration, or will there be a gradual migration, or are we saying that probably the FASTag form factor might change, but the backend might remain the same and complement the upcoming GNSS system?
Yeah, Vikas. So as you rightly said, the actual change or overall would only come in the form of form factor at the front end. At the back end, the existing instruments can be used. If the customer actually wants a new sort of an instrument, they can also get it integrated with the bank as per their convenience. So they do not have to use any other overall in the system.
Okay, thank you.
Yeah.
I think if you can ask quickly, we can take one more question.
Sure.
Like, even if my car is not going through a toll plaza, you will need to know what my vehicle is, because you want to know when I'm crossing the geo fence for you to start the meter, so to speak, right? So you are actually tracking my vehicle even if I never go to a toll plaza for next 2 years.
Okay. So, sir, I will answer this question in two parts. Firstly, your data would come to NPCI server or the banking system only when you enter an highway. If you're not on a highway, your data would not enter the system. Secondly, sir, you still use mobile, right? Your location services might be on. Google is still monitoring you. So it's not that the entire system would be monitoring you while you're sitting in your car or maybe at your home. That would not be the case.
There are lawsuits on Google right now going on.
So how your entire GNSS server would work specifically is whenever your vehicle is actually running in and what is your agreement specifically with your GNSS server. That's it. So that would actually take care of the privacy system.
So if I may just add, it is all about the geo fences that we are trying to create, right? Once you have the geo fence, it kind of gives you the significance of when the consumer needs to be tracked and for what purpose. So if in case the geo fence is created around, let's say a national highway, the communication to the consumer is that you are entering into the national highway and you're going to be charged pay-per-use, and therefore you're going to be sort of getting tracked for the moment you're going to be on the NH.
No, but I think that's the point, right? A minute before me entering the highway, you need to know that I'm about to enter the highway to notify me that I'm entering the highway.
No, that's the beauty of this whole solution, right? I mean, you need not know throughout the journey. Like I mentioned, we are having a static geofence. When we have the static geofence, it is the periphery that we have created of the plaza or the road that you want to charge for, right? As and when the vehicle enters, and these so-called geofences are also sitting in the
devices.
Okay, the OBU devices. So as and when the device figures that it is coming or within that geography of that periphery, it will start tracking and it will start communicating with the consumer.
So this, just to add it up, the tracking would only happen on your highways. That's it.
I think we're done with the Q&A, and thank you, Mr. Kumar, for this very important presentation. I can see a lot of happy faces as we can so foresee a happier driving experience. Thank you once again. All right, everybody. Now, in few minutes, we'll be starting our next masterclass, which is on leveraging social media for financial advice. So in just few minutes, we'll begin that. Once again, a warm welcome to each one of you. And now it's time for us to start the next masterclass, and it's on leveraging social media for financial advice. And now for this one, it's time for me to invite on stage a speaker, the professor from IIT Hyderabad, Professor Ponurangam Kumaraguru. Everybody, please welcome Mr. Kumaraguru on stage.
That's probably the shortest introduction that I've ever had. All right. Just in case, I'm not from IIT Hyderabad, unfortunately. I'm with an institute which has an extra I to it, which is called IIIT Hyderabad. Okay, so yeah, so I think she did a good job in pronouncing my name. How many of you can pronounce my name properly? Me. Okay, so can somebody else try? No, I think it looks like you already have a Tamilian accent. So you are probably a Tamilian, right? So therefore, somebody else. Yeah. So how many of you have PhD? Do you want us to walk out? Why? Do you want us to walk out? No, it's okay. How many of you have PhD? Pursuing PhD. Nobody has a PhD, okay. How many of you are professors? Okay. How many of you have Twitter account? How many of you have LinkedIn account? Facebook, Insta, Snapchat, Tinder? Tinder? Oh, 18 years old, yeah. So I actually did this post this morning when I got out of the Mumbai airport. I didn't know how GFF 2022 is figuring out the hashtag and showing the post somewhere. That's also a nice idea, right? You show all the posts that is coming with GSS 2021 on a screen saying, oh, look, what people are talking about. So has anybody heard me before speak? That's always nice. The reason why I asked the first two questions is that you have a PhD and a professor. It's always nice to be among people who don't have a PhD. Right? I think I came in here at around 11. I've been going around attending different sessions just to see people whether there are anybody wearing kurta in the room. Everybody is very formally dressed, so I was like, okay, good. This is a nice place to give a talk, which is very different, right? Anybody who owns an NFT? Okay. How many of you know what an NFT is? Very nice. So that's also good. So in the last session when I was sitting there, I saw some people, is this the time that I'm supposed to stop? Ye to 40 chahiye na mere liye. I thought it's a 40-minute session, right? It's a 40-minute session? Yes, sir. This says only 22 now. So, yeah, okay. So our last session, I saw a lot of people taking pictures of the slides and everything. Don't do all that. By the end of the session, we will do a selfie or a picture or something. I'll post it on LinkedIn. My slides will go on SlideShare. You can take it from SlideShare directly, okay? And if not, you can go to this website and take it yourself also. I will post all of it online. So just put your brain here for some time. So for people, some of you said that you knew NFT. What NFT is? Quickly, What is an NFT? What does it mean? Yeah, I was not looking for just the abbreviation. What does it mean?
Unique manifestation of something.
Unique manifestation of something. Just imagine, this is the first tweet that Jack posted when he set up Twitter. Do you know how much he sold that for? $2.9 million, okay? And I went and took a screenshot from Twitter saying that's the tweet that he posted. So something that you can go get a screenshot yourself, it's also worthy $2.9 million, right? So that's non-fungible tokens or something, as he said. I say that I own it, but there is a possibility that you can also go get it also, right, somewhere else. But you're the owner because for example, this one, Elon Musk was trying to sell this NFT, which is a small video, right? And he was trying to sell the video. You could get this video on YouTube and also even store it in your phone or whatever, right? NFT is just showing that you're the owner. I heard some crypto words and all in few sessions. It will connect to all of that. Yeah, some words here, which is to show that From 2021, the market is really big. Okay? And I talked about this example, but here's another example. If you know about this small paintings that somebody did, NFT artwork was sold for $69 million. Okay, next slide will have some examples also. So anybody has seen these kind of sort of say images? Yeah? Yeah. So these have become extremely popular that you can buy and sell on internet, right? Which is what is NFT business all about. Right? I'll jump back again. So when I asked you about how many of you are on Facebook, Twitter, Tinder, all that, is to just to show you a sample that, is there anybody in the room who's not on LinkedIn? Yeah, so that's the professional setting, right? All of you on LinkedIn for some reason. I don't know what that reason is, but whatever that is, either one, you're interested in what others are doing, poking into their life, or two, you're interested in showing off what you're doing. Right? These are the fundamental reasons why social networks are actually very popular. How many of you have already posted on LinkedIn or any platform that you're attending GFF 2022? Yeah, you should do that. No? So all of us contribute to this whole social media data that is getting created and all that. What our interest was, what am I trying to talk here, right? Our interest was to try and see that whether we can connect this whole NFT. There are two parts of the talk. One is the NFT, the other one is the looking at just the social media for ESG itself. When I looked at the conference theme, it said sustainability, all that, so I thought I'll talk about how social media connects to fintech plus the sustainability. So our interest was to connect to this social media growth, all of that. Anybody knows what these 4 V's are? Yeah, velocity, veracity, volume, all that, right? So essentially saying that, look, large amount of data is getting generated on all of these platforms. Fintech, all of you know the data that is getting generated. But my question has been for at least about a year or year and a half, thanks to NPCI for introducing me to some of this also, is that are you using social media to study fintech problems? Are you using social media for pushing content about fintech area, collecting information from social media to make choices about fintech decisions that you're making, all that? That's been my primary interest. Social media can be used for forecasting, fraud detection, meaning I think government is heavily using for demystifying also, right? Can be used for demystifying also. Today, if you saw some trending post in India where they were saying that some pictures that were uploaded on social media, it's actually fact-checked and it's actually real or fake. You can demystify, meaning when I started working on this, I actually went and collected a lot of data from Twitter to see who are the people who are talking about stock market, क्या-क्या ज्ञान दे रहे हैं. बहुत लोग ज्ञान दे रहे हैं social media में, right? And we don't know whether it is right or wrong. I think you are the people who knows whether it is right or wrong. For me, it all looks like a zeros and a ones. I can actually show that who are the people who are more influencers, who are trying to change the opinion of the people, all that. But I think it's people like you who should actually look at how to use this platform to demystify some of these ideas also. I definitely think that delivering services is a big thing. Again, fintech can think about in terms of this. I will talk later specifically about ESG. So given that only some of you knew NFT, I don't know whether you know about platforms where you can sell NFT. There are social media platforms where you can go sell these pictures, videos, all that. There are many platforms. One of the most popular platforms is called OpenSea. This is a platform where you say that, look, I have this cat image, I have an image of my dog and I want to sell it, picture of my dog, and you post it there and there are people who are bidding for it. All the process is set up, bidding, who gets to buy it, all that. So, but this platform is extremely popular. The $10 billion that I said, probably majority of the fraction of that sales is happening actually on this platform called OpenSea. Just to give you one example, CryptoPunks, this is a very popular OpenSea account. Again, it's a verified account where they post a lot of these content and try selling it there. How many of you said you're on Twitter? What do you do on Twitter? Give me one or two examples that you use Twitter for. Customer support, okay, very nice. Real-time updates, okay? Barish ho rahi hai, pani yahan band ho gayi hai, traffic wahan hai, right? All that you do, right? So one thing that we thought we'll do Twitter was to figure out whether we can actually predict the cost of an NFT if I want to sell something, right? Can I actually, I'm using NFT only as an example here, but you can think of, I'm sure you're creative enough to think of other ways to look at how it is useful for you. But we thought that can we use this Twitter to decide, Elon Musk wants to sell NFT on Twitter. Can we predict the value of what he will be able to sell that NFT using Twitter? Is that okay? Is the problem statement clear? Yes? Use social media to figure out a value, which is why when I was talking to Praveena and all, I think it looks like they got excited about this part. Can you use social media to figure a value of something that you can sell or buy? Right? How do we, I'll walk you through how we did it. So first we took the Twitter platform. Given that some of you said you post, right, traffic updates, live updates, customer service, all that, we also collected tweets from Twitter, but which has one information which says that on Twitter they are talking about their OpenSea. I take a picture of my dog, post it on OpenSea, come to Twitter and say that I want to sell this picture of my dog. Is anybody interested in buying? That's the tweet that we are interested in. Okay, we took that tweet, we took thousands and thousands of tweets like that, and now we went to OpenSea. Given that, oh, here is an example which will show you. That's the post. That's a tweet which says sales end in 28 days, official album release in days, and a link to OpenSea. We took this tweet. We know that OpenSea means that they're selling some NFT. We went and collected all the posts that has OpenSea link like this. Now I know, can somebody give me your name? One of your name? Deep. I know Deep. Let's get somebody else's name. Jasmine. Okay, good, right? Jasmine has a Twitter account where she's posting about this OpenSea. Jasmine also has an OpenSea account. So now I have connection between a Twitter account or OpenSea account, and in the process what I have done is I've collected all her followings of Twitter. Okay? And all her followings on OpenSea. All the transactions that she's made on OpenSea, all that she sold on OpenSea. All this data I collected. Why? Because all of this is publicly available in these platforms, so we actually can collect all of this information, right? So that's what I'm showing you here. Collect data, tweets, query the OpenSea platform, OpenSea features, so we can actually take the tweet and the OpenSea and look at features by which it is actually, features that are available in the tweet and OpenSea. What could be a feature? One feature could be, as she said, I'll put real-time updates. I can look for a feature saying that is the tweet has a location in it. She's saying that traffic in hashtag Chembur, and then she's saying something. Now I have a location called Chembur there. Can I figure that out? And can I figure out the time of the post? Can I figure out the gender of the person who's posting? All that is called features, which we can use to make some decisions, okay? If it's okay, can I get a bottle of water? Right, okay. So now tweets, OpenSea, data collected, all that. Now I'll show you some patterns in this data which will actually be super interesting to decide on how we can actually find the cost of the NFT that somebody wants to sell on tweet, on OpenSea from Twitter data itself. You understood what a feature is? How many of you have taken anything closely related to any introduction to machine learning class? Feature engineering, features, all that, right? So simple enough. What is a feature? Let's take, if I take a picture in this classroom now and ask you, find the number of heads, number of male and number of female in the picture, the features that you will use is a few things, right? Features is how many of us have kitna baal hai, kitna baal nahi hai, right? Some facial features. All that you will use for making a choice whether it's a male or a female. That's all I'm doing on OpenSea. Okay? Okay. The first graph, total tweets and NFT. So x-axis is the data time of the post, right? And y-axis is the fraction of the total items. I'll go through slowly for you to understand. There are two lines. One is the NFTs, one is the tweets, okay? So the graph is creation date versus fraction of total items that are posted. Essentially, this graph is saying that when I actually create an NFT on OpenSea, I actually go tweet about it. Go look at Elon Musk. What he will do is he will create an OpenSea item collection, and then he'll go to Twitter and then say that I want to sell this. Why is this useful? This is actually useful to know how much of people, or next graph also will help you to understand whether Twitter is helping somebody to sell items. When you said that you will use Twitter for something, I don't know how many of you have seen where all people are using Twitter to sell items. Insta is a great place for selling things now. Does anybody sell things on Insta now? Right? Or how many of you have bought things on Insta? Birthday parties and all of that, now Insta is the place to buy, right? So similarly, can you use the platform to buy and sell NFT? That's the point here. So this one, x-axis is the number of followers. I'm just showing you different features to say that how effectively you can use this platform to make some decisions. X-axis is number of followers, which is, let's take I'm on this side, 10 followers. Let's take Amitabh Bachchan is on 10 to the power of 5 here, or Elon Musk maybe 10 to the power of 7, right? Number of followers that somebody has is on the x-axis. Y-axis is what is the price that I sell. Essentially, this graph is showing that if you have more and more followers, the chances of you selling the product for higher is higher. Okay? And that's why the earlier graph also makes sense, right? Which is when I add it on OpenSea, I immediately go to Twitter and say that I want to sell it, because thereby I can actually get more followers followed on Twitter. Okay. So this one is, so how many of you have in your Twitter profile, how many of you say that you're from Mumbai? How many of you say that the place of your work? In the profile, no? Profile. For example, if you go to my profile, it will say hashtag IIIT Hyderabad, hashtag Profgiri, hashtag alumni of so-and-so and all that. Anybody remembers what you have added something, location? Or so the goal here is that to find out if you create an OpenSea, if you create an NFT and if you want to sell it, are you adding NFT to your profile? The chance of you adding NFT to a profile increases the probability of you selling the NFT for a higher price. Essentially, again, the goal is that, earlier somebody said customer service, right? You can think of this as, again, if somebody is adding the information of the products that they're selling in their own profile, there are high chances that they're going to sell that product for a higher cost. Is that okay? Yes? You're okay? How many of you understood until here? You're okay with whatever I've said? Arey, you have to raise your hand. This is a student-professor class. ऐसे नहीं कि मैं मैनेजर हूँ, मैं वाइस प्रेसिडेंट हूँ, मैं नहीं हाथ ऊपर करूँगा. ऐसा नहीं चलेगा. हाँ. So if I add in my profile hashtag NFT, there's a high chance that I'm going to actually sell NFT on my Twitter account, talk about my NFT on. I'm also, the probability of my NFT being sold a higher price is higher. Yeah, that's a conclusion. No, this is, if you look at this also, right? User creation dates and the fraction of accounts created, if you see, the NFT affiliated accounts are the ones which are creating more OpenSeas on the platform, selling more on the OpenSea platform. If I add NFT, and we have seen this, all verified accounts also do it. They go do a OpenSea collection addition, they come to Twitter, add the tweet about it, add NFT to their Twitter handle. The probability of them selling, for the higher cost is higher. Okay? So essentially the point is that social media, at least my conversation with a little bit about connections with NPCI, all that, I haven't heard people talk about using social media for some of these things, which is price prediction. Stock market also. Stock market is another big sort of say area where people are trying to use social media to say that, can I actually predict the value of the stock of ICICI tomorrow by using the tweets that are posted, right? That's also a great question, but there are other things that you can do with the social media data is what my claim here is, okay? A growth of NFT, meaning so how many of you are on Reddit? What do you use Reddit for? Yeah, subreddits, no? Okay, in subreddit, what do you do? What subreddit are you part of? I see some smiles. They don't want to say what subreddit they are part of, right? When I asked about Tinder also, the other question that I would have generally asked is, how many of you don't want to answer the question that you have a Tinder account, right? So that's the, So again, so one pump and dump scam was, how many of you know what that kind of scam is? Right, it's basically saying that, look, people on Reddit, people keep talking about some stock very frequently, and then they say that this is all great stock, they'll all show that they're all buying, nobody's buying. Eventually, you will also follow the herd behavior and go buy it, and then they will all crash, right? That's and people have used social media to study all this, right? At least I haven't seen a lot of these kind of things in the fintech world. People talking about how to use social media for making these choices. But Reddit is another great platform to actually study some of these things. When I said, no, there are बहुत लोग ज्ञान दे रहे हैं stock market के value, investment के बारे में. I'm sure there is a lot of subreddits on Reddit talking about where to invest and not to invest. I'm sure there are fake ones also there. Right? So that's a paper in case any of you are interested in this. Go play around, look around for buying or selling NFTs. We'll come back to this. I think those are my social media handles. Okay, now to the second part of, any questions still here? How much time do we have? Any questions still here? No? Everything is clear? By the way, just in case, when we finish, we have a quiz. So she just went to print the question paper and come. If you don't get 80 or more, I'll not let you to go out of the room. You have to stay here, listen to another talk of mine, and then only you can go. Okay? So is that fair? Okay, so now you should answer my question. Yeah, any questions? Any clarifications for the first part?
The part in the graph that was not, what is clear to me, somebody adds a tag to the Twitter profile and post about it.
Yeah.
OpenSea in Twitter, okay, the probability of selling is high.
Yeah.
But you also made a statement that the probability of selling it for a higher value is more. But where did you get that value?
Oh, yeah. So that is actually in the paper. So, I mean, as a talk, we can only show you some parts, right? That part is in the paper where we show that the value of the selling is higher because you're actually talking about it on social. Yeah. Any other clarifications? How many of you understood NFT now? You did not know NFT before. How many of you understood what an NFT is at least? हाथ ऊपर करना पड़ेगा, मुंडी लाके चलेगा नहीं. Okay, let's continue. Some questions. Another question that I was, particularly I looked at the title and then I said we should talk about this part at least. Again, connecting to social. What is ESG? What is ESG? Wow, I thought that all of you would know. I was going to make a statement saying that, all of you would know, I'm just a novice here. I just started with ESG recently. But no, ESG is not a common thing. Okay. So I took the Wikipedia definition here just to be on the safe side. If nothing else, at least in this lecture, you would have understood what ESG and NFT is, right? ESG is environmental, social, and corporate governance. It's a framework designed to be integrated into an organization, very, very abstract, but organization strategy to create enterprise value by expanding the organization objectives. But the idea is that sustainability-related risks and opportunities can be identified. Okay, so the keyword is these three: environmental, social, and corporate governance. Okay. And I don't know whether the conference people are thinking about sustainability from this angle. I thought that I'm looking at actually social media from a sustainability of fintech. So I thought it'll be interesting to talk about, right? So is that clear? Environmental, social, and corporate governance, generally a framework so that companies do a good job about whatever you're supposed to be doing. You're talking about environmental betterment, you're talking about societal impact, you're talking about governance inside your company. That's what ESG is, okay? I'm actually really surprised that not many of you know about ESG. Okay, so the way we saw ESG, I just took this definition of ESG from here, and we said that we'll translate it from a social media point of view. What does it mean to look for ESG on social? Okay? We talked about Twitter, Facebook, LinkedIn. So now I think you'll be able to understand what the relationship is. What is environmental relationship, right? Tweets that concern with corporate entity and mentions any form of positive or negative impact on the environment. I'll show you some examples later, actual tweets which are talking about environment. But for example, somebody is talking about, meaning let's take Master or Visa card is talking about how much of carbon emission analysis that they did from the people's transactions. They figured out that how much of carbon emission is going on. Or Tesla talking about something, right? That's what the environment definition is in an ESG, okay? Social definition, tweets concerning with employees of the corporation. That is diversity, there is a gender ratio in our offices, X versus Y, right? Or we had this employee of the month, and then this person is getting this employee of the month award. Goodness about the employees talked about on social, about your own organization. The last one is governance, which is tweets concerning with regulatory governance, audit, agency, shareholders. So let's take that you want to do your general body meeting and you take a picture of the general body meeting and post about it. Or you fire your CEO, or you do something like that, right? That's what the last part of governance is. Is that okay? Okay with the definition? Okay-ish? Raise your hand if you have understood what ESG is. People who are not raising their hand, please get out of the room. Okay, so why ESG on social, right? So ESG on social is such a important thing because it looks like, at least when we started looking at these ESG reports, every company is somewhat mandated also in some parts of the world, I guess, to write ESG reports and say what they are doing in ESG every year. So when we started looking at these reports, it comes in some sort of say yearly fashion or once in 2 years, all of that. And there we were asking the question that, look, if I have to understand Tesla's ESG stand, if it takes me next year to know that, why don't I just analyze whatever Tesla is talking about on the social, or others who are talking about social, about Tesla on social, and figure out what their ESG is. And please understand this ESG will be connected to, I don't know what the status in India is, all that, but ESG will be at some point in time connected to your organization performance, regulation, all that is also being discussed at some point in time, right? So therefore, use social, study ICICI's ESG portfolio from using tweets, figure out what they're speaking, and push out reports about ESGs plus ICICI. Right? I definitely see a space there for sort of say organizations to try out taking social media posts to talk about ESG itself. Here are 3 examples. I will let you figure out which is E, which is S, and which is G, or figure out meaning tell me. The first tweet on the left top, 13 months ago I test drove Tesla for fun. I wasn't even in the market, blah, blah, blah. Then it says that I appreciate it more daily, especially with the current gas prices. Left bottom, these are all real tweets, right? And it may take a while, but sooner or later, even the last person will understand that the most financially sound car company is, in this crisis is Tesla. The last one is, if you would like to attend Tesla's 2022 shareholder meeting in person, please sign up. Which is E, which is S, and which is G? Quickly. Huh? First one is E. Okay, this one is E. I don't know which is the first one, but yeah, okay. This one is G. Okay. This is S. That is G. Okay. This is A. Something, right? Okay, this is S. The right answer is this is E, this is S, and this is G. Okay? So now that you have figured out how to do it, right, in few seconds, I can get a computer to do this now. Is that fair? Yes, right? So today you can, whatever human beings can do, there's a high probability that we can build a small system to do the same thing. I don't know what the accuracy would be, but at least an attempt could be made to say that, look, we can actually figure out what an E and what a S and what is a G is from the tweets itself. Please understand, I'm using Twitter as an example, but Twitter is not the only platform. I'm using Twitter just because the data is available, everything. Whatever I'm saying, you can use it for any other social media platform. Okay? And I myself actually can do it on all platforms also. What was our goal? Our goal today is that, I don't know whether we are very successful here, but our goal today is that given this tweet, I should be able to give so let's take this, the program that is running. I should be able to say that this is E. I don't know how you decided that that's E. Potentially the definitions that we saw, which is environment, here it's environment talking about, oh, honestly, my car, honestly say that it's the most fun car, blah, blah, blah. It's talking about Tesla, new model, owning a car. Probably that's why you said that it's E. Those are features we can derive. Let's not get into that. You can go do yourself understanding of machine learning and everything. But for now, simplistically, I can use some simple keywords to decide that whether it is E or S or a G. Is that okay? I'll create I'll go through everybody who understands ESG, create a set of keywords, keep looking for each of those keywords. The more the number of keywords that appear, I will put it in each of the bucket and decide whether it's E or S or a G. Okay. And for those of you who are more technically savvy and technically interested in doing this, there are already systems that exist to do this. We only have to put the pipeline together to figure out whether, how to get this ESG part done. So there is something called FinBert. I did not know all this before I started. I only learned it on the way in the last, at least about a year or so. FinBert, ESG BERT, keybert. BERT is basically a machine learning model that you can use. Give me a text that as an input. BERT can tell you whether that text is written in Hindi. BERT can tell you whether it's a fake news. BERT can tell you whether, what are the keywords that are there. BERT can tell you whether it's actually about finance company or it's about a social network company. Right? So essentially, if you just take this BERT, any input that is given, BERT, output could be all that I said. There are already existing, just a GitHub code from all these places, which you can actually try and use it to say that input given text, output given whether it is a financial related text or not. So that's the example of a keywords that we're using now. So we have already built a system which actually takes these tweets and then says that what is ESG. Here's a set of keywords that we use today, a big list. And this list also, we are not creating this list. There are actually big bodies which are creating these kind of keywords. And they are the ones who are actually doing the ESG regulation, policies, definition, all that. We just took it from somewhere. All right? Is that okay? Keywords, tweets, it could be LinkedIn post, it could be anything. Now we have the capability of saying that give me a social media post of people like you. I can actually say that what either your company or the organization that you're talking about, how connected, how relevant they are to ESG part. Okay? And today the system that we have built, this one also we can add, right? We can also, one of the features could also be that not necessarily look at only the text. The feature can also be that, Jasmine, she was just yawning and she must have been, what, right? Jasmine posted a tweet and that tweet got 24 likes, right? And let's take somebody else from this side that did a post and that got 240 likes. Now there is I'm sure that you can already make a relationship of tweets with 24 likes and tweets with 240 likes, right? And now you can actually say that which of them should have higher weightage in deciding what goes into the ESG component, right? Somebody who said something which has more people are liking it, there's a high probability that that's more relevant, that's more important, right? That's what we are also doing. Minimum number of likes of a tweet to say that, look, people talk about all of these topics, and if nobody likes and nobody retweets, that's not of importance to anybody, right? So that's the idea. Okay. What we end up doing now is, given the input, we can actually say that classifies tweet. So FinBert ESG classifies tweets as ESG. ESG BERT classifies tweets into, so there is, ESG is only at the eye level. Every ESG, so to say, environment can also go at a subcategory, right? Every category, it's okay, they'll figure out a seed, don't worry. All of you are turning around and figuring out, what's happening, right? It's okay, unko dekh lenge, right? So there is a tweet, and then I classify that tweet at E or S or a G. E can actually have a subcategory also, right? We saw what's the definition of E. I'm sure you can relate a lot more words to that E more than just the definition keywords that we showed. Is that okay? Example? So for example, even this itself, no? If you go to the definition of environment here, tweets that concern corporate entity and mentions about positive or negative, that's all the definition is. That's all the official definition is. But I can actually translate that into so many keywords, no? Right? So that's what a subcategory could be. So now by defining, so what does this BERT do? This BERT does only that. ESG BERT is saying that I will take a tweet, I don't care whether it is ESG tweet or not, I'll put it into the subcategories of whatever I know that of ESG is, right? The last one I already said, which is to just figure out keywords. So currently we have already built a system which is at a efficiency of 84%. We are also trying to deploy this out. to see that can I actually get a ESG report of Tesla? Can I get a ESG report of Google? Just by using the tweets that people are either talking about Google or Google itself is talking about tweets that they are posting and making an inference from there. Right? Why it is important? I'm able to get real-time, close to real-time analysis of ESG. I also don't, meaning when a company reports whatever you're doing, there's always a bias, right? Yes? Yes, no? Yeah, there is always an either intended or sometimes unintended bias. Meaning companies not wanting to say something bad, but the way that they express itself is actually biased in some sense. That's the bias. I think the power of social media is that bias generally goes away. You can argue that there are other biases that comes in because now the public is speaking and you don't know whether they're expert or not. They're just ranting about something and you're using the data to make some inferences which could be completely baseless. But there are methods to actually avoid it, right? Okay. So my takeaway for at least for the last 13, 14 years is that how many of you have been part of earlier social media accounts? How many of you had Orkut account? Wow, you're all really old generation people, really old people, right? Okay, so how many of you had account on MySpace? There used to be a platform called, there are people in MySpace also, right? So I think the idea of social media is not going away for the two things that I said. And particularly in Facebook, if you remember, there was a feature called Poke. And the image of it also was like this. नाक डालना होता ना दूसरों को जिंदगी में. Facebook, the intent of a social media is that, right? You're always probing into what others are doing, or you're doing the second one, which is called vanity. What I'll do now is when the session ends in another 3 minutes, I'll take a selfie with all of you, go do a post on LinkedIn saying I gave a masterclass in Fintech, blah, blah, blah. I'll brag about it, everything. Why am I doing it? Because I want my friends to look at it, saying that, oh, look, or not friends, or at least somebody to look at it, saying, oh, nice, the professor is having fun. Right? That's the whole idea of social, right? How many of you are on Insta? How many of you checked your Insta from morning until now at least once? Okay. How many of you checked any social media platform from morning at least once? No, WhatsApp, no. WhatsApp is not a social network. Okay, how many of you did not check any social network? If not WhatsApp, how do you live your life? What do you do? There's no network here. Sorry, I also was trying to check my LinkedIn thing that I did in the morning, but I also do not have network here, yeah? So social media is not going to go away because it's a fundamental reason of human behavior. This was always there, by the way. Always there, knowing what others are doing in their life. बगल वाले घर पे कौन सा गाड़ी लिया था, कौन सा साड़ी खरीदा था, कहाँ से साड़ी खरीदे थे, कितना महंगा था, ये सब has been our part of our life. It's just that these platforms have just made it so faster to get. Today you can just do a call with somebody. For example, I do lectures sitting in my office, Facebook Live, to like 1,000 students with just click of a button, and 1,000 people get my content, right? Which is not the case in the past. That's all. Right? So one request for people, I made this request before also, but here is another attempt for making a request, which is how many of you have interacted with an academic person before, not your own professors, in your professional life, how many of you have interacted with an academic person? In what context? Can I know? Pitch a solution, okay. Anything else? Mentoring, advisory, okay, very nice. It looks like very nice, right? Please do it because I think this proportion itself is very small, right? I always think that academic interactions with, thanks to Praveena for this. I think it was Praveena's idea to actually get me here. It's fantastic to see actually these kind of events from an academic. I told her that this is massive. 5,000 people or 3,000 people showing up here and doing these all formally dressed, right? Have professors on committees. I pick on that professionally dressed because this is my best I can get. This is, huh? Yeah, I saw him. Yeah. So, and he was a very young guy also. He was a very young guy. All right? So have professors on your committees, boards, if possible. We're not that expensive, right? So you should definitely consider. I like this quote. I recently finished reading this book called Alchemist. How many of you read this book? How many of you know about this book? How many of you read it? Oh, super nice. So I read this book recently, and then there was this one line which said that learn to recognize omens and follow them. I know what you're taking it away from that. I will let you do creativity to decide what an omen is for you. But I think that there's fantastic ways to connect at least social for financial industry. That's extremely clear to me. But I don't know whether that is being pursued that way. Today, when I walked around in that pavilion of this floor or the earlier one floor below, I did not see any. I mean, I saw a lot of these payment-based app solutions, but that's there. But I think there are other avenues also that I would really request you to look at it. But I'll go back to this slide. This slide is the reason why I came to give this talk, to get some LinkedIn requests, to get some followers, right? That's my social media handles. If you're interested in any ways to connect with me, feel free to connect. I will take the selfie that I promised, and then I'll stop. It's 40 minutes, so I'm done. Thank you. Can we do a selfie? Yeah? Okay, so let's try. Okay, so that's good that everybody's here. I'll send it to Praveena saying that that's my class. Okay, any questions quickly?
Yes, any questions? Please go ahead. It's your opportunity now.
Opportunity for what? I don't know, but
Opportunity, you're here, sir. They can ask
Yeah,
any questions they like.
Yeah, feel free to. Huh?
Yeah, you can find him on Twitter, Instagram, Facebook. He's everywhere.
Just search for PONNURANGAM. PONGUR. It's a verified account. How can Twitter not show that? I will report that. So otherwise, search just for my name. This one. Search for this name. I'm the only Facebook user with that name. There's no other Facebook user with the name called Ponnurangam Kumaraguru. It's impossible. Just search for, no, if you search even for PK, it will come actually. Yeah, see, somebody got it. Naam dhoond lijiye na.
Okay, you can search that later on, but please ask questions if you have any. Yeah, anybody?
Praveena, I took your name once or twice in between, so you can look at the reading, recording where all I took you. No? Yeah.
Get the mic.
1 to 2 gram keywords is that, yeah. So if you go to here, right? Let's go to keywords. So what does a 1 gram keyword means? Let's do it here, yeah. Right? So 1 gram keyword means I'm using only, let's take integrity. Business integrity together makes it 2 gram. It's essentially 1 word versus 2 word, right? You can build a system which is n gram, which is called, this is n gram. But it just also gets into a lot of noise in the data, because if you add, let's take business integrity, transparency, hazardous substances, there's also a lot more junk that can come on the data. So today we are restricting ourselves with 2 gram, that's all. So that's a 3 gram.
Okay.
That's a 3 gram.
So what is 1 gram?
Yeah. So this one is 1 gram.
Okay. Great, thanks.
Yeah. Any other questions? Yeah. On social media in general, or what context? ESG only this. ESG, I think ESG itself is such a small space. No, currently, any external? Yeah, we're talking to some companies also. Because I think these are interesting directions to use social to collect data and make some inferences, which at least we have not seen it, so we thought we'll actually attempt it. Yeah, you had a question, sir. Yeah. Let's do a quick. How much more time do I have? Accordingly, I'll paste something.
Take 2-3 questions.
Yeah. Okay. So quick sort of say machine learning or information retrieval, right? So one approach is that I create a dictionary. ABCD words. All of these words are in the dictionary. When I get a tweet, I use this dictionary to make a choice of what the words are. That's a not a best approach, right? Because keywords does not get you always the necessary things. You may be talking about ESG, but not using any of the keywords that are relevant. That's possible. And a word called, let's say, preparedness can give you something which is not ESG also. So if you think about it, the technical terms for this are called as precision and recall. If you're interested, go look up what these words are. I mean, the way to look up it is how good if you do a Google search, the results that the Google is giving, recall will be better, recall will be higher if they're able to get all the documents that are relevant, right? Precision will be higher if in the top 10, exactly what you want they are giving you. That's the difference between a recall and a precision. Precision is what you want is what is shown to you, right? So given the problem that I said in terms of dictionary, that's there. So actual approaches that people would use is that I'll take a tweet, I'll do something called as POS tagging, okay? Which is to say that so let's take a tweet which has what is noun, what is verb, what is adjective, blah, blah, blah. Now I know the linguistic properties of the tweets, then I will make a choice of which one to use and which not to use in conjunction with the dictionary. So today's NLP, so I think we talked about earlier also, right? When today a lot of projects in India are attempting this. You speak in Hindi to somebody who does not know Hindi. Your Hindi is getting, or let's take Malayalam. You speak in Malayalam. Malayalam is getting translated into English. English is then translated into Tamil, and Tamil is spoken to them. If two people who, I know Malayalam and the other person knows Tamil, this is done. This is not done by keyword, right? It is impossible to create this text that I'm speaking just using keyword. What those solutions do is this kind of minimalist POS tagging. Of course, there are more machine learning involved in it, but that's how it is done. It takes the semantic meaning of it and then tries attempting it, not just the sort of syntactic meaning, which is mostly the dictionary words. Context. Yeah. Okay. Anything else?
We have more time. We can take some more questions. Please go ahead.
Yeah.
Mic too. So like
yeah.
Okay. So no, there are companies that already do sentiment analysis.
Yeah.
Both from the company side to see what the public is talking about us, and also from investment, just to see, okay, if you are investing in this stock, what's the latest buzzword like?
Yeah.
So, and also, I mean, there are companies that do research on politically sensitive people if there is an important decision to be made, credit decisions.
Yeah.
Other than that, what do you think is the possible usage of this social media analysis? Because I thought, okay, it is being put to its proper use, and again for pump and dump, those are all social engineering stuff.
Yeah.
Social media is the best vehicle for it.
Yeah.
Do you see any other avenue?
No,
I mean,
so
are you approaching this from another angle?
You are only looking at only the sort of say pull, right? You're saying that look, tweet exists. You want to do some analysis of sentiment and figure it out.
No, okay. I mean, I'm not talking about people who want to shape public sentiment by posting tweets or using influence. And I'm taking that out.
Okay.
That's a different thing, not related to how companies use APIs to query from this social media stuff.
Okay. So the question is there anything more can be
anything
done
more? Yeah.
other than sentiment? Is that the question?
Yes.
Oh, come on. I think the push part is the word that I think is more important, which is shaping the opinion. Today, if you see, right, there is the idea of press conference has gone away, no? Government and organizations don't say that, oh, let's do a press conference, get press people, let's say that this happens. The CEO or the CTO or somebody, secretary posts, and done, no? News media people, Anand Mahindra is a great example from Mumbai, no? He does a tweet and Times of India tomorrow writes about it. Where is this coming from? That's just coming from simply the Twitter, right? So I think the sentiment is only one angle to the whole content that is available on social, but you could use it for ESG also. At least I never knew that cost of a stock market can be predicted by using tweets, right?
Right.
And then, oh, by the way, elections can be predicted using tweets, right? Yes. So which means your next government can be one is influenced through Twitter, the other is I can also get to know who has the greater chance by looking at tweets also. Right? Okay, cool.
Excuse me. Yeah. So you said you mentioned faculties can come on board of companies.
Yeah.
Do they need to be certified to become a board of directors or independent directors?
So, sorry. I'm actually pursuing. If you can stop recording, that'll be better. But that's okay too, right? Recording band kar lijiye. Yeah. So So I don't think so that's a problem. So currently I'm actually pursuing some companies to be on the board. I don't know what certification level you're talking about. They have told me that there is this content that I have to digest and I have to take an exam, which is an online exam for some 20 minutes, 30 minutes, MCQ questions I have to pass. That I will do, no? What's the problem? यार इतना तो कर लूँगा कंपनी में board member आने के लिए उतना टेस्ट तो कर ही लूँगा, right? So yeah. So you're basically selling your company here. I thought that you were curious to know how I can become a board member. Very nice strategy, by the way. Good question also. Yeah.
Yeah, please.
So like there is this news regarding Elon Musk saying that most of the Twitter accounts, many of them are fake, like they are bot accounts.
Yeah,
so
yeah.
like, do you use this ML to identify which of them are specifically or possibly they could be bots, like which are pushing a particular agenda or a sentiment? Like because it is they are driving the consumer sentiments, most of the bots and all. So you need to filter them out or you will get a biased output.
Absolutely, absolutely. There is that statement of large proportion of them are bots is true. We have methods to figure out that whether it's a bot or not. No, you have to collect data. There's no way that if this is Twitter, I take all this data from Twitter. I'm very, very certain that entire content is not going to be very useful for all choices. I have to actually remove some parts, let's take, which is bots or fraud or whatever you want to call it. So just simple techniques you can, people have tried many techniques. The short answer is yes, machine learning can be used to figure out whether a given account is a bot, whether a given tweet, whether it is posted by a bot, whether a tweet which is a tweet that is posted, whether it is fake or real. All of that has been attempted. But the biggest problem in all that is, in social problem is, something that will come up new. Bangalore में floods हुआ, किसी का घर में let's take सांप आ गई, उसको tweet किसी ने करा, वो सांप आई नहीं आए कैसे verify कैसे करूँ? Machine learning तो नहीं कर सकता है. Machine learning cannot do that, right? So that's where the limitations of all these technologies become. But there have been already existing technologies, platforms which are built, extremely useful platforms through API. You can send a request to the system saying that this is a tweet ID. It will return whether it is fake or real. Yep. Okay. Okay. If nothing else, thanks again. Hopefully you got something, and look forward to connecting with you on some social platforms at some point. Thank you.
Everybody, let's give a round of applause to Professor Ponurangam Kumar Guru, Triple IT Hyderabad. All right. Thank you very much. It was indeed great listening to you. Thank you so much. And everybody, still, if you have some questions, sir will be here only, I think, till 6 p.m., as he said.
Yeah.
So please ask any questions you want to. Thank you so once again.
Thanks.
Okay, so in few minutes, we'll be starting our next masterclass, which is about the deep tech. So please be here. our speaker is very much here. So I really don't know much about this presentation, but all I can say is in this presentation, Sir will be talking about how to reach to the unicorn level. What are the ways? Through deep tech, of course. So yes, we'll be starting it in few minutes.
One second, one second.
This masterclass will tell you how to reach to the unicorn level by using deep tech. And to take this presentation, it's time for me to invite on stage the Enterprise Architect, National Payments Corporation of India, Mr. Arul Kumar. Everybody welcome him on stage, please. And as always, we'll be taking up the Q&As after the session. Thank you. Over to you, sir.
Okay, thank you. Today, I hope NPCI is a unique organization in India. So I think the title, what I'm talking about is standout. Standout is a unique uniqueness of people coming out and standing out. The next word is the disruptive. Is I think disruptive innovation is something like if you look at companies, they start with the basic things and they move on to the upper level and move on, and finally they reach to the destination by taking out. For some of the examples are, for example, you take Cisco as a company. Initially, there was a company called Digital Computers, which used to make bigger boxes and in the network, and Cisco used to make very smaller boxes, smaller stuff. And finally, Cisco used to capture the entire market of digital computers, and finally, there is no company called Digital Computers today. So that's what called disruptive innovation. That you start with small and capture the smaller market, and then move up and capture the upper market. We as a company today. Started in 2016. At the time, if you look at the payments, it's like it's very minimal. Monthly, you get 100, 200, and then you get 1,000, and then. So means that we started with bottommost in the market, in affordable prices, like very low price, like per transaction, cost of the per transaction basis is very less. So which means that slowly you capture the market, and then using one of the things is we used open source technologies and then we captured slowly and we get to this stage. I'll be talking about how we achieved this scaling and performance with the different principles and models that what we have. So what makes us unique? Being a company as NPCI, what makes us unique? It doesn't come just like that into the market. We have some of the principles, and we usually check those principles against each of the features or products that what we do today. And I took one of the four key items in the projects, like for example, principles, standards, and platform and ecosystem. These are the key elements that for NPCI to sustain in the market. So the principle is like, as I'm talking about the deep technology, I'm talking about the principles that are applicable to the technology areas. So two important principles that today we have. One of the principles that what we have is design, that means intellectual contracts. Means before you start the project, what are the intellectual contracts that you will pull for the project? Which means that while you design or architecture the project, there are different contracts that we need to do at the architectural level. That's what one of the contracts that we do. The second is the implementation contract, where once the project started, you will have a different contracts. That's what it's all about. I'll talk about a little more details in the upcoming slide. And the standard wise, I think first we started with a payment domain model, retail specific domain model, which you look at the specification today. The specification has different functional blocks, which is very unique to us. Those functional blocks are, we have those functional blocks, and that is the foundational blocks for a retail payment sector, and each of the retail payment sector, then we build a different service. Today we have 100 plus services are available on top of those all models. The basic is the payment model, information model that are available to us. And with that, we are able to add more and more services today, and we have added many, many services today. Even future also we will be able to add services. Another thing is we started building platforms so that the services can be easily built. And the platform is because when business comes and asks us, can you build the service in 3 days? Can you build the service in 1 day? So the services, what we need to make it, the services more configurable. So, and and interoperable so that the services can be doing it. So, I think that the data and all comes in picture. So the other important aspect is whenever we do a platform, if we are not doing a kind of a service back to them on the other side, for example, in the bank side, enabling banks, for example, giving common SDK, giving some sort of a stuff, that is very important. Otherwise, a bank will not understand how do we scale the system and all. So we'll be talking on these lines a bit more in details on the coming slide. So what are the principles that we have today? That we want to build every software in NPCI as open source. Means all the software we build in the recent platforms, everything built on open source. There is no commercial software involved, and we completely removed all the commercial items from our side. So which means why we need to go for open source? Open source provides high flexibility because we need today high flexibility. Otherwise, we will not be able to achieve the scale what we have today. Because some of the commercial software, if you want to have a scaling and the cost is high, and scaling also it's difficult. Even though they are commercial, but still they cannot achieve the scale what we would like to, and we have experimented those all steps. So very important is we want to be open source because it provides flexibility, and also the cost wise is very less for us to do that. And the second important point is we want a specification or a model which is very unique across all the products. And we are slowly moving to a direction that one time that we will have one specification for NPCI. So that, when somebody comes to NPCI, here is the specification that we would like to. One of the examples today we are pushing IMPS and AEPS product back to the specification is the reason that we build a platform that on top of that those products going to be deployed. And the other important point is more highly technical stuff that event driven means whenever there is an incident happens, immediately we want to have that to be propagated to the next guys so that we can take some advantage of doing that. The third important is we want to be no affinity with any of the layers what we build today. For example, there is a layered bank, even technology layer or business layer. Between the layers, we don't want to have any kind of affinity. Means with that data only this will work. So we don't want to build any affinity between the data sites, and we want to have the data distributed across multiple machines in different sectors. That's why we want to do it. And anyway, we are working on the data loss. We will have data loss, but we want to limit the data loss to the closest manner what we would like to. And every data that what we pass between two different systems is very important because we want to have that highly secure and integrated. Because whenever your data pass from one terminal to other terminal, it's very important to be sure that people will not change the amount. For example, if a payee has payer has mentioned as 50 rupees, and I change the data from one terminal to another terminal, then the 50 becomes 100. It's a problem. That is what we call it as data integrity. So we want to be sure that every time when you pass the data from one terminal to other terminal, be sure your data is highly secure and integrated so that you will be able to do that. And one of the things is more of a resiliency building. Every software layers or hardware layers, we want to test for resiliency. When make the hardware fail or make the software fail purposefully to see what is the reaction. Do we have data loss? Is that working as expected? Is the software is atomic? Something, those are all similar. And I think the event-driven and real-time is very close to each other. And the third, the final two important aspects are, we want to be layered. We want to be layered on every layer. Each layer for example, if there is a front-end layer which takes the data from bank, or there is a back-end layer which takes the data back from database. Also, we want to be sure that those layers are very separatable, because for example, we were in Postgres previously. Now we are in Cassandra because the change is very easy for us. moving from one data source to another data source, or moving from one database to other database. It's very easy because we have done the design and development on those layers. And we want to be sure that every use cases or test cases fully automated. I think we are on the way to make it 100% on each of the layers. I think this one of the use case, where are we today and how we are moving towards in open source, that's what it's all about. We have principle that we talked on the previous slide, and there are 3 different contracts which also talked about it. We talked about architectural contracts, which is like zero data loss, active, and we want to be sure that the site works even the scalable, elastic, for example, one instance to other. Those all are steps. And the second is the quality checks, for example, code quality, design quality, and the other one is the security stuff. And we need to be sure that every application we build on security and other stuff. And the middle box what we are talking about is today how we are earlier means yesterday, how we are today, and what we do for tomorrow is the one that we are talking about it. First one is we started using open source frameworks. And slowly we are able to customize the open source frameworks, means we are able to do some changes to the frameworks, and we are able to use the frameworks inside our premises. And third is we create frameworks, and how do we distribute to the ecosystem, make sure that the ecosystem uses those frameworks to distribute it. And how do we do the projects? I think we have only three options while doing the project. One is use the framework to customize it, only customization, do make some changes on the parameters and everything. And then second is you do some customization and you do some new frameworks and tools. That's what we call products and features. So when we build the platforms, what we wanted to be sure is we wanted to build the platform with the features, like UPS one feature, second is the IMPS another feature, and IMPS another feature, so that the platform can capable of adding more and more features based on the business requirement. That will be more, that is what the direction will go. We are planning to be on the build state, where we will be delivering frameworks to the ecosystem, to help them out to build new frameworks or whatever frameworks that we use to scale ourselves, that we will be distributing, that we have frameworks and tools, we are using it.
Question?
Yep, sure.
No, any kind of a system design you are able to share, and also talk about factors that led to certain technology choice?
The choice, for example, the choice we led initially, we were using Postgres initially, and we have the choices with Postgres. A single instance of Postgres will support a certain amount of TPS only, or the concurrency for Postgres will be up to 200 plus concurrency. Means you are able to take 200 concurrent connection Postgres, because Postgres has some limitations. Postgres creates the connection. If you look at more deeply into that, it will create a process inside your Linux kernel. So you will not be able to create more than 200. Your OS become unstable. So the choice is till up to some extent of TPS that you are able to use Postgres. For example, you want to have a system which supports only 500 concurrency, then obviously 500 TPS transaction. Obviously, it will be able to support it, because this process, it will return in milliseconds. So you will be able to have the pipe of 1000 TPS is the max that you can do. For example, what we did is we used Postgres for different Postgres instances and threaded the data across it.
So you use Cassandra for distributed writes?
Distributed writes, yes, obviously. And we don't write very distributed, and we also use in-memory processing. We don't write while we do the transaction, it is completely in memory. Means we don't even write to any physical disk. We will have a backup in our middleware. Kafka will use to write it in middleware, and we will push the transaction back to Kafka for a safer side in case anything goes on. So that's the trade-offs are everywhere. While we select the framework, we want to be sure that the frameworks has backup and everything. So this is what we want. We have built the standards. So why we have built the standards, right? For example, if you look at our specification, I'm sure most of you guys read the specification. If you look at our specification, there are a lot of functional blocks will be available. Payee block, payer, and you will have a roles block, and your transaction. So Those are the fundamental small elements we build, and that are more relevant to the, more relevant to the larger service building. And each of the service what we build is we have a space to be sure that the API is highly integrated, means integrity of the data. And then we have provided a mobile SDK, and we are checking every transaction through fraud. These all are what the communication what I want to make, that everything is been in rule based, means this is what the specification, this is what you should do, that been drafted clearly. That is what we were mentioning here. For example, every data is sensitive. We have a rules that saying that every sensitive data has to be encrypted, every sensitive data has to be abstracted out of the people. That been clearly dominated. And I think the model of asynchronous communication is what makes us more successful, right? Between system A to B is synchronous, because that's what anyway communication happens. But B to A again, it's not a synchronous communication. It's a synchronous communication. So I think I given some high level view about how we do the transaction. We start with the PSP app like Beam, or maybe any app like Axis or ICICI, and they have their own PSP which actually sends the messages back to UPI, and then UPI process the data, and then again it sends to the bank, remitter again, and it sends to the beneficiary, and then comes back. So this is the online cycle of it, and then once that completion, and once the transaction been completed, the back office started processing. Means while I think I want to update that back office is not it's not a batch mode back office. It's a near real time back office that we aggregate the data on real time. And we have the settlement ready at every point of time. Like we can do that settlement on every 15 minutes, and then we can deliver that back to RBI and banks. One of the challenge what we have, banks today require typical lot of files and everything. So that's the challenge today, and I think we will continue to work with banks to reduce the amount of reports that we generate on the fly. So thereby our settlement becomes more easier on that. So that's a part of PSP task. What PSP does when you send the transaction from app to your PSP, PSP has to hold the connection. It's not our responsibility to hold the connection. So what the point is, once PSP sends the request, we give an acknowledgement saying that we have received a request, and then we are done. That's it. Then we will start another process to go back to the depends on the API service. For example, if it is a pay, we go to the payee guy to verify account number IFC and get the IFC. And the third is, once they also acknowledgement. I send the request, they give an acknowledgement. They take time. They take a few Is that all a message oriented? Yes, sir. Yes. Yes, everything is message oriented. Okay. So I think some of these we push the data to monitoring on the asynchronous manner to be sure that we get the real-time update on the transaction. Second is also we have pushed to analytical to get our fraud model updated on the fly. So we have a batch process continuously runs to take the data for profile updates for the people, so that the profile update happens to the when next transaction comes in, the profile data updated, so that when the profile data pass to the model, we get a better scoring. And we also have a rule-based engine for fraud and monitoring. So this is a very high-level view of how you can see that the analytical data push to FRM, profile update, monitoring. I think we use for ELK stack to monitor it up. And I think we also have an important fact that today I think I'm not sure all the PSP apps has a real-time dispute management, but today Beam has, when the transaction go to deemed status, you can go back to Beam app and after 15 minutes real time you can create a dispute. Like you can say that my fund is not received, can you check the real status? So some cases it can automatically resolve your dispute, and some cases it has to manual approval is there, but there are liability issues are there in terms of returning the fund back to the customer. But This is something like very interesting because customer fund, they can check the status right away after the transaction comes, in case the transaction goes to the deemed status.
And can you just explain very briefly about the fraud detection capabilities on UPI? Because I thought it was only for RTGS and
No, we have a system, we build a in-house system. We constantly update, we create profile for customers and merchants, payee payers, and we keep them every day updated. And that profile been fed to the models and fed to the rule engine every time when a transaction. For example, a transaction comes to our system, again we get an asynchronous message back to the forum saying that for this transaction, the profile is, who is the profile, and take the profile, fed to the model, get the score, and return back to the banks. That score will be used to determine to decline or proceed further. So that we have the capability, and all the products are using more or less with the same. For example, FRM is integral part of every product. It's not that only one product is there.
only for high value payment products.
Even for every product, because this is sometimes your lows, people also can do the fraud, right? For example, every 100 rupees somebody guy was trying to push to that volumetric attempt, they can do. Sometimes they can sometimes spoof. They can, there are a lot of ways that one can do the fraud. So all these are.
You pick up the profile and you just provide the supporting info to the bank to decide.
Yeah, some cases, and some cases we reject ourselves, right? So this all are there are rules which are agreed by all the banks. We reject very straight away. Some of the cases, banks and assets a little different, and there are the rules we customized per banks. In our process, some banks will use the default rules. It depends on what we configured to the system. We can decline or we can push. We ask the final how we interact with the banks. Some banks also have their own forum systems, right? So, and we also take the feed from banks in terms of frauds and other things. So we take the feed from banks to understand how this, so that our models and everything, we mark this is a fraud fed to the system. The model can improve. So that's what. So, this is something like what we do today and how we want to envisage in the next couple of years from now. For example, we have created, four platforms, and some of the platforms in evolving stage, and we will able to complete in the next few years. So one of the things is the UPI platform that we call right now is a centralized processing platform, which means that every transaction comes to us, and we do the process, and we keep everything with us, and then we share the result back to all of us. And the other platform is Beam. Like we want to have a mobile platform where whatever mobile application that we do today, we want to keep it with that platform. And the other is the decentralized, processing platform, which means data with everyone, and we keep the data everywhere so that the data inconsistency is not there. There is no reconciliation of data is not required. The third one is we are building an open AI platform, which we wanted to be sure that a community-driven open AI platform, which could be the model being built by community, and the model can be given to us, and we can run our model on our side to see that which model is better, and we give we say the user. This kind of a open community-driven AI platform. The problem is we give the data back to them, so we expose the data. And they can define the data set what they wanted to do, and they take the data and they can train that, and they can give the model back to us. And because sometimes the model requires a lot of physical resources to run. So once they say this model is good, we will keep them. If the model scores better, we want to keep the model to run our production. So this is something of a scoring we will do. Model 1 from X guy is better, and model 2 from X guy is not good, we will keep the kind of ranking out of that. So these are the four, and we were planning now, and tomorrow we will improve. That's what the horizontal bars are, right? How we want to construct ourselves. We want to have a commodity hardware. Anyway, that is same across all the platforms. It doesn't matter which platform uses. So we have the same hardware for every platform. So fundamentally that is same. And anyway, the option for future, what we are looking for is, we want to look for Kubernetes with the bare metal servers, which means that will give you a better performance than running a virtualization, or a bare metal with application, which also has a little challenging because that has a limitation of how to scale it up, right? That is also challenging for us. No, for EPA we use bare metal. Performance we normally use bare metal. So I think the choice for us is NoSQL and SQL is there. I think SQL RDBMS based database, we are reducing our footprint. I think we don't want to have because that is a problem of the multi-site or active challenges are there, which means that those challenges very tough. You cannot replicate the data. Some database support, some database doesn't support. So NoSQL, and we opted for Cassandra. That is what the good database that can distribute to multi-site. And I think middleware we have limited stuff, and I think we have looked at Kafka and Pulsar to be sure that is what middleware for all the applications. So that we want to be sure. The reason we are putting this horizontal bar is we want to be sure those those frameworks and the adapters what we build on the frameworks also remains useful for all the platforms. We don't want to be sure that take this small step, do for one project. The reusability becomes very challenging for us. So and the difference starts from the frameworks level, because for example we wanted to use only 3 languages. So for right now Java, Go, and we want to use Python for machine learning, and Go for some of our stuff. So we will go towards these 3 languages. Whatever frameworks and adapter we want to build, or the components that we want to build, we want to be sure that it's reusable across all the platforms. And in terms of technology, now in terms of business it is a little different, but in terms of technology we want to be sure we build some frameworks on top of Go, or we want to build on some sort of Python or whatever may be, we want to stick to that. And wherever we do today, a service exposure, we want to have one service for every, means one service definition will be there to assess any service in any of our platform, so that we will have a uniform specification across all our products in the market. That is what this is a kind of a model that we will be doing on our side to get this done. So our focus is to get that high reusability across these layers. Layers are very separate, so that one layer cannot impact the other layer. Those all things are very important. So for example, every layer we will have a kind of a specification, right? For example, middleware uses RDBMS, then there is a specification. Framework uses middleware, there is a specification. The Java, the application layer uses other layer, that's also specification. So that suppose Kafka doesn't work tomorrow, we will go to Pulsar. Our application logic should not impact anyway, so that the UPI will run as good as it is today. That is what our logic part of it. So I think this is to just represent how we wanted to be, or how we are today.
Any framework you want to talk about, or you picking up what I'm interested in your learning, because they would say a lot about your high volume transaction handling technology.
Right. So I think what we build, we normally take the frameworks and we shred the data across, because open source has limitations in order to shredding the data. Because why we need to shred the data? We need more concurrency. Like for example, one physical server has a limitation. There's this much CPU, this much process that you can create. So if you want to create that much scale, you need to parallelize. How much parallelism you can create, that much is good. So parallelization requires distributing data, and you need to have the copy of the data for replicating the data. So that whatever framework used today, that is what we do today. For example, use take Redis, distribute, make copies of it synchronously or asynchronously based on the configuration we drive. So I think that philosophy applicable to all this software. This diagram is just to reflect wherever we want to have an instance, we want to scale it horizontally, so that with stateless horizontally, no affinity, because one service down, there should not be data return to some disk on the local disk, which is problematic for us. So everywhere we want to go horizontally without, studying data anyway, the data will be available on other node. It automatically started processing it, it goes on. And these horizontal scalability will help us to, even it goes to billions also, or even it goes to millions also, or trillions also, it will be useful. Today, the kind of knowledge what we have to build the system is we want to be, the base is set up now, principle wise or in terms of how we need to build the system, that is there with us. So, it doesn't matter like, like what we committed on the, like billions. Already we are in billions. We are able to create our system today is about billions of transactions. Sometimes we get hit up 10,000 TPS per second. So which means that 12,000 TPS is billion per day. So we are capable of delivering that much today is available. So trillions is doesn't matter, for us. Maybe we need to be sure this affinity of data and stateless is the key for us to scale further, and I'm sure that we will be able to scale even a trillion transaction comes to our system also. With that, I'm closing session. Any questions anybody has, I will happy to answer it. Hi.
In your slide, you mentioned you're using bare metal.
Right.
So, like we're going to have a much bigger server farm.
No, we will be, for example, you have, you imagine that you have 5 racks, right? You have 5 racks and you have servers. Each server does not run one instance of application, right? So we will assemble in such a manner that we effectively use the hardware. So it does not like, one big server, we lose one.
No, that I'm aware. I'm just trying to understand. So what is the landscape looking like from a server farm perspective? Sorry. So what is the landscape looking like at this point in time? Let's say you are having 1 million transactions in an hour, or maybe a little more.
We have today in an we at least 6,000, 7,000, and 7:30 to 8:30 we will have around 6,000 to 9,000. Sometimes we have seen this. Okay. So this is what the transaction per second, and typically I think at least till 10, 11 o'clock we have seen around 4,000 somewhere, right? I know maybe earlier we used to see very low, but nowadays even now 11 also we have a lot of transaction flows are happening. That's what the landscape. If you look at standard deviation curves, I don't see any zero transaction, because throughout the night we used to see at least minimum 500 to 1,000 transaction was flowing to the system, and only in morning it's like morning 12 we will have some peak, and evening 7:30 we'll have full peak on that.
I mean, I'm just trying to understand the benefits of going with the bare metal deployment versus on-prem. Sorry.
It's on-prem. We have a data center.
Versus
virtualization. We want to do virtualization, but the virtualization has a typical problem of introducing latency. We have a couple of our products runs on virtualization. For a higher, for example, if you virtualize a particular physical server into 10 different virtual machines, and what will happen is you will create a typical virtual switch on top of that, and you will have a real NIC card will be there. So these latencies are introducing considerable latency to the system. So otherwise we have to go one-to-one level, right? One-to-one level. Sometimes do you want bare metal or do you want VMware? It's a trade-off, right? For example, bare metal performance very good. Right? We get nanosecond response in our system, right? For a typical write happens in nanoseconds from Redis to our system. So that performance is the key for us today. That's what UP we are able to give. I think less than 98% of the time we complete the transaction in less than a second. So only few seconds because of the the ecosystem, banks and other things, we get a little bit of. Otherwise, we ourselves never take anything in seconds. We take all the processing in milliseconds only. All the thing, 5 times if you send a request to us, we give acknowledgement in a few milliseconds, 3 or 4 milliseconds. So we never give. We always monitor. We have SLAs today, like how many milliseconds that each leg message-wise processing has to be done. So that been even measured today. So that is the performance. This is a trade-off, right?
So I'll come to the next question, sorry. So in your slide, I saw the FRM was for the analytics part. So the feed to the fraud detection was after the, so can it not be a real-time feed?
A real-time feed. Actually, I'm in the picture that I mentioned, but it's a real-time, like for near real-time feed. I cannot see real-time feed means it's a synchronous communication, so I cannot say that. Synchronous is blocking call, right?
Correct.
So
I'm not going to block.
So asynchronous call. Definitely it is a near real-time. It's not like, it's not that we are posting it. Sometimes we do a profile update in a different manner and post back to the foreign system. I just represented.
More of a callback, right?
More of a callback, yeah, right. More of a callback.
Thank you.
Welcome.
So you mentioned your transaction time is in milliseconds,
Right.
but still the PSP has to wait and wait for the status or
Right,
waits
wait
on
for
a-
the status.
So does it waits on a webhook or you have?
No, PSP, we won't only Beam PSP. What we do is in Beam PSP, we hold the call. We hold the call until a response back. Means, for example, when customer, like from app that you are sending a request to the PSP, what it does, like, it will, if you look at there's a round that will come, right? It means that I just hold the call. So while holding the call, the PSP parallelly create another process, sends the request back to UPI. So when UPI acknowledge it, immediately in millisecond you get an acknowledgement back to PSP. Remaining all UPI will take care. There's a message system that we will send requests to retail guys, like a payee guy to get the details, and we send the remitter success and send the beneficiary success. And then finally we give once remitter and beneficiary that those guys are sent confirmation, then the other message goes back to the PSP saying that your transaction complete. By the time that guy will stop the thread and move forward with the transaction to customer. This all happens in less than a second. I think, maybe there are many messages like 12, 13, 15 messages. Sometimes 18 calls will be happen between the system.
So in your technologies stack, you mainly all work open source mainly, right? So do you use any API gateway? Do you have any?
We have an internal API gateway.
What is the name?
We build on top of Spring Framework. We build a API gateway on top of Spring Framework, customized for our needs, and then we move forward.
So it's not exposed to other people?
It's not means, you mean to say as a
If I want to use that gateway, can I use it?
No, you can't. We are, I think that's what one thing I told, we were planning to see that could be open sourced or given to community back. We are working on like we are working on to see how we can put this, useful stuff what we build for scale this up. We have a plan, and we will be seeing that, maybe in future you will be seeing whatever best that we have created frameworks and tools could be available in the open source community to make them build better, or you use as is. It will be there, not immediately, but it will be there.
And you mentioned you're going away from RDBMS database,
Right.
Mainly because of, I guess, its performance.
Yes.
So you switched to NoSQL database, right? Do you not have the same challenge in NoSQL databases?
Sorry, come on. NoSQL database? Yeah, there are challenges in NoSQL. It doesn't mean that, see, RDBMS, if you look at atomicity and integrity of the data, it always take care, right? That it gives you a consistent result for you. If you go for a NoSQL database, you have challenges there, right? So what we do is today we use caching mechanism, right? We don't update data because all the transaction processing is to be caching in the front end layer in a more shredded manner. So you get atomicity, your data consistency will be there. And the data, so what we do for the NoSQL, once the transaction completed, update that data back to the NoSQL in asynchronous manner, just to keep the source of data, like source of truth data. So that means it goes asynchronous. So the need, and from that database, we use for the check transaction, the backend processing, which is not so real time, right? So whatever needs of near real time, or the back office steps, or processing, batch processing, those all will be done from there.
So do you have multiple instances of this database? Or
Yes, obviously.
And
Certainly.
how do you sync up data between all those?
For NoSQL, for example, Cassandra, it has an internal gossip protocol which syncs the data, and we give, it depends on your own needs, right? For example, how many sync writes you want to do it on Cassandra or any database. Same for NoSQL. You want to write for 2, or you want to write for 3. How many times you want to write sync, or how many times you want to write async? It's a configuration. So we use basically we use 2 sync and 1 async writes. So means while I write the database, I want to be sure 2 servers it writes in a synchronous manner. Once ever it writes in asynchronous manner.
All right, so we're done with the Q&A because we have to start our next presentation, which is of course the last one and an interesting one. So for now, thank you very much, Arul sir. Everybody can we have a round of applause for our speaker, please. Thank you very much, sir, for the presentation. And everybody, in few minutes, we'll be starting our last presentation. As I said, it's a very interesting one. I'm really looking forward for it. And it's about 1, 2, 3, pay. I'll tell you more about it, so be here. And if you want to call your friends and the colleagues, please call them also. Don't miss this one.
Hello.
Good evening, everyone. You have no idea since how long I was waiting to say good evening to everybody. It's finally an evening. So yes, as I said earlier, it's time for us to start our last masterclass, which is the product masterclass. And I'm sure you'll be happy if I tell you that soon you'll be seeing voice-based payments. I want to see some reactions. At least smile, if not anything. And what if I tell you that that can be facilitated on feature phones also, right? That is definitely a revolution. And if you want to experience it firsthand, we have the blue color booths on the 3rd floor. You can go right up there after this presentation, of course, and experience it. You will be amazed and, of course, happy. Now, on that note, it's time for us to start the product masterclass on 123 Pay, Future of Conversation Payment is here. So now let me invite our speakers for this presentation. Everybody welcome on stage Himit Parekh, Senior Lead Product Performance, UPI, National Payments Corporation of India. Along with him, Dinakaran Ravi, in charge UPI Design and Development, NPCI. Here we have them. Can we have a little louder round of applause? Thank you very, very much. Over to you, speakers.
Thank you. Hello. Working.
Good evening, all.
Yeah, hi. Good evening, everyone. So, as we are doing something different now. So, we talk everyone, we use voice in our day-to-day life. But now, let's bring this voice to make payment to someone. So, that's where we are working on this as an ecosystem with various banks, partners, and creating this where we want to bring the other half of Indian where they are yet to come on digital payments. So let's divide this discussion into two parts. So first, we would like to give you some basic background that what is voice payment, how it is working, and then we'll do a live demo over here and see how it does transaction in real time on voice. Okay, so just few basic points that what's the status of India right now and payments on that point. So we say that it's a digital payments and UPI payments are growing month on month. But then there is another part over here where we still see that there are various regions in India which are yet to get full connectivity on the internet side. There are still villages which do not have any internet connectivity, and also very few are there. So this is one of the reasons for enabling this voice payments for everyone. Next. On the other part, we see that with the growth of UPI, it is more on the smartphone. So all the smartphone users can download the apps from the Play Store, App Store. They have the UI, UX, which is easy on the smartphone. But what about the users who are still using the feature phones? So on the feature phone, there are very few options available for payments, and whatever are there, it's still not very user experience friendly. You need to do a lot of things like USSD steps, which is not that much easier for making payments for anyone who is using a feature phone. And then with this, there were various events which led to making 123 Pay live. One was the RBI regulatory sandbox, which supported in bringing out all the solutions for 123 Pay, which is voice payments. And then there was the grant challenge which was conducted by NPCI, CIA, and Bill Gates Foundation. So there also the main objective was to find a solution which is very easy, user-friendly for the customers who do not have smartphone or who are having smartphone but they do not find it easy to navigate in the UPI apps. So these two events led, and then we had a development at the NPCI which we created a server-side common library to enable specially this. So just to give a context, what is library is that in today's time, if you use any of the UPI app, after making the complete payment journey, at the end you put a UPI pin. That UPI pin is a page which is common library. So over here, similar needs to be developed for voice payment. So I would just ask Dinakaran to explain how this works over here.
Yes. So basically, this solution was conceived to serve the underserved and unserved segment, right? So this feature phone solution was built on top of the existing UPI platform. So if you want to do a real-time payment transaction, right, you need to enter some data, right, which gets authorized, right, and that happens via a secured component called common library. And on smartphone, right, so we can install this common library as part of your app, right, and then get it installed, and then you can initiate the transactions. But on feature phones, right, you don't have that luxury, right? So then we came up with a solution of this server-side hosted common library, where we developed an independent component and we gave it to the PSPs, right, to be hosted on their respective environments. So that when a user actually initiates the transaction, the required credentials are captured, right, in an encrypted manner and sent across to this component, and the credentials are again re-encrypted as per the existing UPI specification and format, right? And once the flow is something like when the user on the feature phones, the IVR channel gets activated, the user opts for a registration or a transfer, and he'll be asked for entry of the PIN, right? So once the PIN gets entered, it gets transmitted via the service provider to the remitter PSP hosted SSCL. From there, the data gets encrypted and sent back to the PSP, and PSP forwards it to the central switch for data authorization purposes. So that's how it works, right? And as part of phase 2, we are planning to take this solution as a centrally hosted solution, right? There are certain hassles currently there with the current implementation model, wherein this component needs to be deployed independently on each of the PSP servers, and that incurs some overheads in terms of integration hassles and maintenance overheads, right? To sort that out, we have come up with a centralized solution, and we are working on that, and in due course of time it will be released to the market. And I'll hand it over to him.
Can you go to previous slide? Yeah. So if you can also add on the mapper side, how it will help.
Right. So there is another important factor that I would like to touch upon. So entering a UPI ID, right, which is predominantly an hexadecimal value on a feature phone, is pretty difficult for the segment that we are targeting, right? So we have come up with a solution, right, wherein we can map a numeric ID, right, which is in length, maximum length of 9 digits, to a VPA, and further the onboarding and transaction can take place using that numeric ID instead of a VPA.
Correct. So that mapper will help. So today also mapper is there, and it helps enabling making payment, any UPI payment to anyone just using a mobile number or 8 to 9 digit number. So I think most of the ecosystem is live on mapper. You can send anyone by just entering the mobile number, and that can be transferred. So base is that UPI ID, which we are using for transferring to anyone. This layer comes about it and makes the payment easy for anyone. So this helps in making payment on the feature phone, where you do not need to enter a UPI ID, which is alphanumeric, but just a numeric digits. So moving to next. So with this all enablers, the 123 Pay was launched by RBI Governor in March, and we went live on the 4 approaches. So one is basically a voice payment. You just call on predefined payment numbers. These payment numbers are given by the bank, and then over that the solutions are created where user gets onboarded, then the user needs to link their bank account, set PIN, and then make a payment. So various payment functionalities are available on voice. So this is one of the approaches. Then we had next one, which was missed call pay. So missed call pay is where you give a missed call on a particular number and immediately a callback comes. So right now in today's time, we have a QR code, correct? If you go to any of the merchant, you scan the QR, it immediately identifies that this QR belongs to this merchant, it brings out the detail. So in a way, similar way for identifying merchant on the voice, a number is given, a user gives the number, sorry, my bad. A merchant is given a number, and when a user goes to that merchant, a user gives a missed call on the number of the merchant, immediately a user gets a callback. And in that callback, it will say that, would you like to make payment to this particular merchant? Enter the amount followed by the UPI PIN. So this is another approach. Then we have a predefined, pre-installed app in the feature phone. Basically, it's a UPI app, but on the feature phone. So I would just like to show you how it is. Maybe it won't be visible, but just to... So this is a feature phone. Then there is one of the app which is there. So it's in the SDK form where a user needs to register, link account, set PIN, and then make transaction to anyone either by putting a mobile number or UPI ID. So this is another solution where predefined, pre-installed apps would be there in the feature phone. And then one is the sound base. So like identifying merchants with a missed call, then there is also another way to identify merchant, which is basis the sound. A unique sound with a few frequencies are given to these merchants when onboarded. And when a user goes to this merchant's store, when they are using either voice or a feature phone, they will call on a particular number, tap on this device, and it emits a sound. That sound gets captured on the call. It identifies that this sound belongs to this particular merchant. Then it asks you to enter the amount followed by UPI PIN. So these are the approaches which has been live. They are doing good now. We have now more than 1.3 lakh users doing transactions on this. And various use cases are there. So we'll take you through these use cases. Moving to next slide. So this, as we know that English is the major thing when using the apps on the smartphone. But when it comes to voice, you would like to interact in your own regional language. It becomes easier, right? When you converse with anyone, if there is some familiarity in the language you speak. So bringing that concept to over here, now we have more than 10 languages live on this voice payment. So you can interact in your own regional language. So this language is covered the southern side, it's Bengal, Assamese, Gujarati, Marathi, Hindi, English. So these languages are there, and we are targeting to have these solutions enabled on all 20 plus languages, which are official languages of India. So this is helping us to onboard more users, more on the rural side where they are not much conversing in English or Hindi, but this helps them. Now moving on to the use cases. So we started with very basic use cases of transferring to someone with a mobile number. And then we started adding a few use cases like you can book a LPG payment. Then we brought in the FASTag. So now anyone who is traveling and they don't want to see the phone and drive, so they can just call on this number, enter the car number or a mobile number, and then the FASTag details get fetched, and then the amount you want to load with, you can make that payment. And then you can do electricity payment. So this is a new category which has been made live. More than 70 plus electricity billers of India, which are live on BBPS, now you can make payment to them. So it can be starting with MSCB, Tata Power, Adani, all these electricity billers are there. Then we have pipe gas bills. So basically, we are enabling all the utility bill payments which are a day-to-day transaction for any of the user. And with this, on the voice, it becomes easier that you call, you identify the service or the utility where you want to make payment, and then by validating, that can be done. Now, two more use cases which we are working is that it's already in testing and CUG is that getting this EMI recollection on call. So we have been discussing with various MFIs, and we find one problem or challenge we can say is that collecting this EMI on the regional side, it becomes difficult. So here what will happen, this MFIs will have their own number. So in that number, either the customer can call and make a payment, or as a reminder, a SMS which goes as an outstanding that by this due date, you need to pay this outstanding. So instead of that, a call can also go. In that call, the payment can be done. And then one use case which is interesting, we see that cash on delivery is one of the use case. So there are various channels and various legs which comes when an item gets delivered from an e-commerce business. So at that end, when the agent comes to the home to deliver the goods, at that time a SMS comes, the user needs to give a OTP. So if that OTP gets converted to a call, then directly the payment can go to the business, and that leg can be reduced of handling the cash. So this all use cases are there, and then new use cases which we are working on that will be coming out soon. So this is the story till now, and now I think it's a time we'll do some live demo. If someone wants to volunteer for this, or if you want, I will do a live demo and transfer anyone over here.
Anyone? Yeah.
Yeah. Sure. So you can call on these numbers. We don't have to transfer back to you, right? No worries. This number first. 080-4516-3666. It's phone agnostic. You can switch off the internet and you can call.
Wow.
Yeah. Yeah. 1 minute, we'll do.
Or check your account balance in this call in a simple manner. Press 1 to transfer money. Press 2. We have initiated 6-digit OTP to your mobile number. Kindly enter the OTP to proceed. For send money using mobile number, press 1. Please enter the 10-digit mobile number of the person you want.
So if you want to transfer anyone over here, we can see a live validation. No worries. Okay. 77-109-000-81.
Enter the amount you want to transfer. We have initiated 6-digit OTP to your mobile number. Kindly enter the OTP. You are transferring 10 rupees to R.H. Hitendra.
So it confirmed me as a beneficiary and amount. So now it will ask to enter UPI PIN.
Bank. Account ending with 5684.
Yeah, you need to enter UPI PIN. Money is debited? Yeah, I received. HDFC. Sure.
Thank you, Yogesh, for participating. Thank you.
Sure. Thanks. So over here, what happened is that Yogesh had registered, so it didn't ask. So the flow goes like this. When you call on this, it will ask you for what are the features and functionalities available for these payments. And then it checks whether the user has been registered. If not, it does one-time registration where you need to link your bank account by speaking the name of the bank. And then it asks you to check, set the UPI PIN. If you are very new to UPI ecosystem, if you are already linked somewhere, then no worries. Once you list your account, and then you can use the services over here. So right now, the model which is live is that it's a hybrid. You call you do some conversation, what you want to do, like electricity bill, you pay, speak the name of the board, like Maharashtra State Electricity, and then it calls you back. And then you enter the amount followed by entering the PIN. So it's hybrid that you speak the voice and also input on the keypad. But we are going to a model where it would be complete conversational, and at the end only you need to enter the PIN using the keypad. That is because you cannot speak your PIN in public, correct? So that's why that's the thing which we are going through right now. So yeah, this is still now. Any questions? Any queries?
Yes, please.
You said you have to speak. So when we have to speak, India has mainly 15 languages and there are multiple dialects. Right?
Correct.
So do you face the dialect challenges here?
Yeah, so with the starting, definitely, because the way they speak in their language, dialects, it may be similar to the main track, but still they are not able to identify. But now we are working with partners which they are putting this models where they train themselves on these models and it improves itself. So it gets on improving on this machine learning type. Yeah.
Yeah. So UPI Lite was launched recently, right?
Correct.
When are you planning to integrate that? Because I think the ticket size is going to be low for a feature phone kind of user, right? So any plans on that integration now?
So it's interesting. So what I would say is this is voice is not only feature phone, correct? It's a voice. And we have limit which is equivalent to your UPI, and for right now it's 5,000 per transaction, but per day you can go to your UPI limit. So Lite is just now launched. So let it grow, let it mature on the smartphone, and let's see, and then bring it to over here, because it's the device and voice. It requires some type of maturing on the smartphone.
Thanks.
Yeah.
Usually on other UPI apps, we tend to pay some frequently used billers or frequently used
Correct.
phone numbers.
Favorites.
So
Yeah.
how do we enable that on?
So right now it's not there. We are working on it to bring favorites and also your auto pay. So once you make any payment to utility, then the trackering will also happen on this voice itself.
The category which we are talking about, I think more than favorite, if we'll enable this recurring payments for the monthly, those merchants, I think that will help. Because in feature phones, setting up those favorites will be little difficult. Also from the, definitely. So I think 2-3 things.
Yes.
Which one more question I have, Hamid. So while you were saying this, can we also scan from the feature phone?
So I had kept that for the last trick. Okay. So no worries. So I wanted to present this. It's a special thing for the people who are present over here. So new thing which our partners are working is that till now the feature you can scan your QR from your smartphone, but now there is a thing where we are working on this where you can scan a QR from a smartphone. So if any one of you have a QR, UPI QR, you can bring it over here. Let's see if it scans or not. Any of your UPI QR? Yeah, so feature phones with a basic camera. So even basic. Yeah. But till now, even that was not happening. Anyone with a QR? Or I open my QR? Yeah. Can you bring Rahul? So this is Rahul's UPI QR. This is a basic smart feature phone with a camera. I will scan this. So it took time, but it got the UPI ID which is associated with this QR. So it says Rahul Solanki 06@OKFC Bank. So this is a WIP, but it's a special thing for the people present over here. It's not yet gone out to the world.
Woo!
Yeah. Mike.
How have you addressed fraud, the use case for fraud in this case? Because these smartphones are equipped with a lot of security measures, whereas feature phones are typically not, and the user segment on the feature phone side is also not that savvy.
Correct.
So how do you address fraud? Because this seems, if I get control of the phone, it may be possible. But so I'm sure you addressed it, which is
sure.
And also the call back, it didn't open this Pandora's box when the merchant callbacks can be duped, like somebody, fakes it or whatever. I don't know.
Got it. I got your point. So 2 things. So over here, definitely it's a new thing, and it's on the voice, and even low-end devices are working. But this works on the railroads of UPI. So all the basic rules and checks are in place, which are of ERFRM, and on that we have put additional checks of limiting the transaction limit to right now per transaction. Per day it goes, but per limit is limiting, and we are working that. We are observing things whether any such irregular transactions are happening or not. So that's one thing, and on the other part I missed. Other was no. Merchant side on the missed call page. So on the missed call side, it's you give missed call for each different merchant, but callback will be from a central number. So it will be only one number, and that would awareness around that would be created, that you will receive callback only from this number, then only you enter. And we are trying to get a number which would be a payments number. We are working on it. Let's see. It's very early, but that if we can create a number series which is only for payment, that will help us out. So right now it would be a central number only. It not be multiple numbers from where a callback would be coming.
Just to add to Himit's point, right? You said if the device gets stolen, okay, there is the second factor of authorization we have, which is the user PIN. So without the PIN, the transaction couldn't be getting authorized.
No, I'm just saying from the segment who uses feature phones, like my mother, she gets a call, she's more likely to disclose these things over a feature phone than a smartphone, because smartphone, it's generally difficult for senior citizens, etc., with these security features like thumb impressions and stuff. So maybe it's something to ponder on. I'm sure you built in your safeguards, but like...
So all the rules of UPI which are there on smartphone are applicable. All are two-factor authentication transactions.
Yeah, got it. Thanks.
All right, any more questions? I really liked this last session, was really interactive one. And everybody was participating. Thank you for that. Yeah, so I don't think there's any more question coming up. Thank you, Himit. Thank you, Mr. Dinakaran. This was definitely a power-packed presentation, and we enjoyed it thoroughly. And the news is, now you can scan through any QR code.
Yet to come out.
Yet to come out, but we all know it now. You can scan through any QR code with your feature phone, but with a camera. Yeah, that's important. Okay, thank you both of you once again. And with this, we are done with the day 2 of Global Fintech Fest in this room. I hope you enjoyed all session, and there must be a lot of takeaways. So thank you once again with this. This is your MC Vyoma Parihar signing off. See you tomorrow. And tomorrow in this room, we start our first session at 9 a.m. So you all got to be on time. Thank you. Have a great evening.